So let's begin the next topic, audit sampling, which is our last topic. Technically, in our entire audit syllabus, this is last topic because though it is part of audit evidence chapter 530 and 520, these two standards we will discuss at last. So by this time, you must have already finished items of financial statements, 265 standard, 450 also. Generally, if these three standards are finished, this standard, especially in this, there are one or two topics are there in the standard which are linked with there. So predominant standard you can understand, not an issue. Even if you are starting to watch this chapter before, you can still understand. But what my recommendation is last. At last you need to watch. Fine. So audit sampling, we have seen already in our very first chapter, nature, objective and scope of audit, that audit suffers from inherent limitation, right? Like we auditors have limitations. What limit? I mean, why there is an inherent limitation? One of the limitation is practical limitation. In that, the straight point is sampling. The example which we discussed is sampling. Auditor cannot test 100% of the population. He only verifies few items, few transactions. He cannot verify 100% of books of accounts. He cannot verify all the transactions. Only few transactions he will verify, and he gives opinion on the overall books of accounts and financial statements. Of course, mainly financial statements. So the level of assurance which auditor can give cannot be absolute. It can only be reasonable, because we are verifying sample, and based on sample we are giving opinion on entire transactions. So whether all transactions in P&L, all transactions and balances in balance sheet, did auditor verify? No. But he verified a sample of items. He verified a few samples out of them. So based on sample, we are giving opinion on population. That is why the assurance level is only reasonable. We cannot give absolute. It's impossible also. Why? One of the reason for why we cannot give why we cannot give absolute assurance is inherent limitation. Inherent limitation is the reason why we are unable to give absolute assurance. One of the inherent limitation is nature of audit procedure. Inside that limitation is practical limitation. We cannot verify 100% of the transaction. We only do based on sample. Now, when entire audit in predominant cases is based on sample, how the sample has to be selected? See, like somebody can run, so tomorrow you become an auditor, you become a CA. Okay, tomorrow you are verifying some company transactions. You can't test everything. Only few you can test. Which few items you can test? How to pick up those items? So that is, I mean, there, how to apply sampling technique, how to select the samples. See, there are crores of transactions. Like if you take DMart, if you take Reliance, if you take any big companies, the number of transactions will be lakhs and crores. I'm talking about the number of transactions, not the value. Value will be obviously lakh crores. Now, among those many crores of transactions, you can hardly check 200, 300 transactions, or maximum 500 transactions you can check. Which 500 transactions? Which month you should check? That is where the sampling techniques comes. Getting it? Now, before I start before we will discuss all this content, let us once see how in reality we do sampling. Okay, so you can directly, actually this is my YouTube marathon. In this one Excel, one working I did, so that only you need to use. Okay, I will try to, I mean, those of you who are watching online, this particular portion I will cut and then upload in the app also. Or you can simply type, you can type like this, see Ram Harsha Audit Marathon Part 3. If you type this, here you will see Part 3, first itself it is coming. So you open there. In this first discussion itself is sampling revision. Okay, this here the discussion is based on my old material, but I'm not talking about the material. I'm talking about the example which I took, because I use here Mac system. Here Excel sheet won't work. I cannot use Excel here. Windows system, I know Excel workings, all that. That's the reason. So I'm using here. So I will play this and I'll explain. Here also I'll explain. If you want to see the original video, you can type there and then see the original video. Just 10 minutes only this example is. Okay, fine. you can see here. Actually what happened is, yeah, yes, you know, this is an Excel generated sales related example. Sales, what they have given here in sales, you see here, product is given, customer is given, total sale value is given. Okay, but actually the sales, generally if you see a sales register, no, sales register if you see, generally date will be there, order number will be there, sale value will be there, customer, product details, so many will be there. But that much complex example let us not take. Simple example, what product we sold, to whom we sold, how much, at what price we sold, that's it, simple example. And you see, you know how many items were there, you see here, the last number, row number 278, almost some 270 plus transactions were there. But remember, we cannot verify all the 270. In this case, the sales are only 270. What about purchases? What about employee benefit expenses? What about TDS? What about GST? So many items we need to verify it. So we can't verify entire 278. So what we need to do? Among this 278, we decided to verify 20 transactions. We decided to verify 20 transactions. See how I'm going to select. First, let us complete this example, then we will discuss the entire concept. Yeah, 277 transactions were there. I renumbered again. What is the total sale value? Here you see. Just a minute. Yes, what is the total sale value? 1,54,490. Total sale value of 277 transactions put together, it is 1,54,490. Yeah, you're able to understand by looking at this? Huh? Yeah. Yes. See further. Now, you see here how I'm applying. There is a formula which I'm using. If you see, yes, it's coming. There is a formula in Excel sheet for selecting random number, rand, between 1 to 277. Why 1 to 277? Because we have invoice number 1 to invoice number 277. I want to select 20 transactions. Which 20 I should select? I don't want to take a decision. I am using here random number table. This formula is nothing but random number table application. Have you heard of random number tables? Okay, in your school mathematics probability theory, you have a probability, right? In CPT also, your foundation also have statistics probability chapter. Probability means random number tables, all that. Earlier, olden days, no, there will be a table book, random number table book, where page numbers are random, numbers will be random, everything will be random. For example, I'll show you how random number table books look like earlier. Random number table. You see here, this is how the random number tables looks like. If you ask 3-digit random numbers, it will give you 3 digits random number, 4-digit numbers, 5-digit numbers. Suppose if a company you are doing audit, sales invoices 5-digit numbers, all sale invoices are in 5-digit numbers. You want to select 30. So identify first invoice number is what, last invoice number, between that 20. Okay, like I'll show you here. You see here. So random between what I typed is random between 1 to 277. Between invoice number 1 to invoice number 277. One random number I asked to computer. It gave 81. You see, I am now selecting 20 random numbers. 20 numbers I have selected. That's it. So these are all system generated invoice numbers. See, I want to verify 20 sale transactions, correct? Which invoice I want to verify, which 20? See, I can also randomly give me 81, give me 24, pick up 63 number, pick up 144, pick up 178, like that I can also ask. But somewhere we generally be biased towards some number, correct? In order to avoid that, in order to avoid some bias, why should I? Because repetitively some numbers I will be focusing. I don't want to go with that also. Let computer select. Why should I select? Let computer pick which 20 bills I should verify. Between out of 277 bills, which 20 bills I should verify. in our audit, let computer select, let random number table select. So that's what. So accordingly, now you see, now it selected and gave me these invoice numbers 141, 1211, 136, 95, 52, 242. These invoice numbers I will directly select there. Now, like, look at. Actually, here I'm applying one value logic. You know, some VLOOKUP kind of logic I'm applying. You see, 141 is there, right? That invoice value is 42 rupees. In our Excel sheet before sheet, we have 277 invoices, product customer invoice value. So that value 141 bill value is 42 rupees. You see, like this we have selected randomly 20 bills we selected. You know what is the total bill value? We selected 11,600. You're able to understand here? First 20 numbers randomly generated. 20 numbers we randomly generated. System only given the 20 invoice numbers. Each invoice number value how much we taken from the original data. The total value of the invoices we selected for testing. 20 invoices we selected. 20 invoices values how much? 11,614. By the way, total sales were there, right? How many invoices were there in total sales? 277. What is the total sales value? 1,50,000. Yeah. Now you see further what I am discussing. Yes. Now you see what is the percentage of value we selected? 11,000 rupees worth we selected out of 1,55,000. How much value of the sales we selected? Value out of the total sales value, how much value we selected in sample? 7.5%. Now tell me here, we directly selected, no, there are any 20 numbers. Computer gave any 20 numbers. Yes or no? Tell me, in this 20 samples, right? Do you think all high value items are selected? Just listen to the question carefully and tell me. 20 samples computer selected. 20 transactions it selected. Did it select high value transactions fully? We can't say no, we can't say yes, we don't know. Technically, we don't know. Correct? Did it selected low value item? We don't know. Any 20 it selected. Out of 277 bills, the value we don't know. Any 20 we selected. Now look at. Now you see, this is, now again I'm applying this one more technique. By the way, right now whatever we applied, 20 samples we selected, right? Right now we applied random number table formula, all that, and we selected 20. We identified 11,500, 7.5% value. This technique is called as simple random sample. This technique is called as what? Simple random sample. Now there is another technique I'm showing you, haphazard. See, actually here explanation is there. Since I'm showing you recording in the class, I'm just explaining once again. Okay, I request you to watch once again this video, just 15 minutes portion. This entire example is taken in 15-20 minutes only, but that will give you a lot of clarity. Yeah. Now again, no, I'm applying one more technique called haphazard. You see, I'm typing there. Haphazard technique. What is haphazard technique? You see, I'll be applying, I'll randomly going somewhere and putting star mark. Means I'm selecting that item. I don't know which item I'm selecting. I'm not looking amount, I'm looking at number, anything. I randomly select. This technique is called haphazard technique. In simple random sampling, there the item is selected by computer system, random number table book. I don't know which will come. In a haphazard sampling, I will only select, but randomly. Here, random logic is applied by manually, human power, human being. Whereas in a random table book, computer, that is scientific, even more scientific. Able to understand? You see, some random number, I don't know which I'm selecting. I just selecting 20, any 20 items. Now you see what items we selected, and let us see the total. Yeah, total value. See, in a haphazard technique, 20 samples only we selected here also. In a simple random sampling, we selected 20. Here also 20. Sample size is same. The number of transactions selected for testing is same, but the value again differs. Now it is 10,265, which means the percentage will be again some 6.5 or 7 or some percentage will come 7 exactly 6.6. Clear? Then now and there is another selection, block selection. There is another method called block. There are different methods of sampling. Okay, block sampling, haphazard sampling, simple random sampling, monitor unit sampling, systematic sampling, stratified sampling. There are so many methods, cluster sampling. Okay, so there are many methods of sampling. I'm just taking few examples which are there as part of our book, which are there as a part of our syllabus. Block. There is another method called block sample. Block means what? Continuous items. Block of items, continuous items, a group of items. Okay, so you see what will happen in a block. Here you see I have given names also. Simple random sampling, haphazard sampling. Below I have given names. You're able to see? Okay. Now wait. I think block. I think I removed it. I guess so. Okay. Block. It's okay. You will understand later also. I will explain it. Okay. Now you see when I'm applying stratification. Now you see what is a low value item in the population? 12. You see you're able to see this here? 12 and off. Okay. Now you see high value items. I will show you. What is the last high value item? 4,689. The lowest value is 12. High value is 4,689. But you see in a simple random sampling, when I'm selecting out of 277 any 20, I don't know whether I will select 12, 4,000, 3,000. I don't know. Tell me, 12 is so low, 4,700 is so big. In a simple random sampling, computer is testing either that or this. We don't know. Computer selecting either that or this. But can we give equal importance to both the transactions? Like, is it okay to treat them equally? Lowest value transaction, highest value transaction, can we treat them equally? Actually, computer selected any 20. Good, that's good. Any 20. But high value transactions we should check most, right? Because they're significant transaction. They're significant transaction. We must check high value. What I will do is here, let me divide the same population. 277 bills are there, right? We will divide them into 3 parts. All transactions above 2,500 or 2,000. Transactions whose value is between 1,000 to 2,000 or 2,500, some number. Transactions which are less than 1,000. Like the entire transactions, 277 transactions, we will divide them into 3 categories. High value transaction, medium value transaction, low value transaction. And what I will do, high value transactions, I will do test 100%. Because generally, high value transactions will be too many or less number wise. Number of high value transactions will be generally less. Low value transactions will be generally too many. Correct? You see how we divided. Yeah, you see, we have selected high value transactions beyond 2,500. First we filtered out of 277 transactions whose value is more than 2,500. Just 6 items there. Only 6 transactions. High value transactions are only 6 were there. Why again sampling in that? Let me select all the 6. I selected all the 6. Out of 26 got selected. Still I have 14 samples to pick. Correct? Now look at. Now again between 1,000 to 2,500. You know how many were there? 37 were there. How many transactions were there between 1,000 to between 1,000 to 2,500? Actually, our lowest sale value 12 rupees. High value is 4,700. So what we divided? We divided the entire transactions into 3 parts. Okay, like how we divided? Look at once. So we entire transactions are divided. High value more than 2,500 value. Only 6 transactions were there. Between 1000 rupees and 2500, 37 transactions were there. Less than or equal to 1000 rupees transactions, balancing figure. By the way, total number of transactions 277. So 277 minus 37, 240 minus 6, 234, balancing figure. So low value transactions are so many. High value transactions are just 6. In high value, we selected entire 100%. Sample is also 6. Medium value, I will see. I would have selected some 6 or 8. Some number I would have selected. Okay. Now, medium value. Randomly, I'm selecting. Yeah. Yeah, medium value. I think this is again. Yeah, I think all the selection is over right now by guess. 20 samples. So what we did is, out of 37, some 6 or 7 we would have selected. Medium value also sampling we applied. Then remaining all other values will be low value. Out of low value, some 6-7 items we selected. Totally 20 we selected. Now we brought those 20 into a separate sheet. Now you see what is the total value of item selected. You see how much is the value? 35,000. Now if you apply, if you pay attention, in simple random sampling, selected 20 items only. But 20 items value is just 11,000. In haphazard also we selected any 20 randomly. Those values 10,000. 7.5%, 6% of the total population value, total sale value. Here also we selected 20 only. But you see percentage wise, just a minute, 22%. Same 20 transactions we selected, but the percentage of the value that we are checking increased substantially. Correct? Where is 7%? Where is 22%? Same 20. Able to understand? Generally, stratified sampling. That this technique right now what we applied is stratified. What is stratified? You know, stratification. What is it? Stratification. Stratification means dividing whole sales. For example, here sales is the value, right? Sales into 3 parts. That division is there, right? That's called stratification. Dividing the population into subgroups. From each subgroup, we will select a sample. That is called stratified sampling technique. Able to understand? Now, among these 3, in this case, which method is best? Stratified sampling. The reason is, with the minimum sample size, same 20 samples, we are able to test more. And here, no, in stratified sampling, one very good feature is there. What is that feature? You know, we are testing high value items, we are testing low value items, we are also testing medium value. See, suppose, no, generally management, what they will think, you know, company management, auditors, now they'll be testing high value items only. So we can do frauds in low value. They'll be thinking like that. Generally, especially middle level employees, low level employees and all, whoever is dealing with all the transactions, they try to do frauds in low value items and medium value items generally. So that is the reason why what I am doing, I will select transactions from every segment. Now, here we divided the transactions into 3 parts. You can divide it into 5 parts. Somebody can divide it into 7 parts. Depending upon the scenario, depending upon the company, depending upon number of transactions, depending upon variations. Able to understand? So this is stratified sampling. Okay. I hope you are able to understand now. If possible, later you watch that video once again, so you'll get more clarity. Yeah. Now, so that is stratified sampling. So at the end of the day, the sample purpose is what? See, in a simple random sampling, no, there we selected 20, but we are not sure whether high value item comes or low value item will be selected or medium value. Sometimes only all medium values might be selected. Computer might select only medium values. We don't know. Computer only may select low value items. We don't know. In a simple random sampling, slight risk is what risk? The sample may not be representative of population. Actually, in sampling terminology, we call it as population. Total sales data is called as population. Whatever we are selecting is called as. What is the purpose of sample? Tell me, for auditors, what is the purpose of sampling? What is the objective of sampling? like the objective is we want to verify sample and want to give opinion on the sample or on the population. Opinion we should give on population, but we cannot test population, we can only test. So by testing sample, we want to form opinion on population. In such a case, tell me, I should talk about population at the end of the day, which means the sample must be similar to population. Sample must be representative of population. It must represent every characteristics of the population. So which means, for example, if I'm testing sales where it has low value, where it has extreme high value, my sample should have all those characteristics. I cannot select a sample which is medium value. So my sample has to be representative. Means in population, whatever characteristics are there, whatever features were there, whatever variations are there, those variations must also come in sample, right? This is my objective. So when population is having so many variations, stratified sampling technique is best method. When population does not have variations at all, suppose I have to select some 5 students in 100 students among, I can apply simple random technique. Yes or no? I can simply give your roll numbers, roll number 1 to roll number 100, pick up any 5, computer can generate, anybody can select. That their simple random can be useful. I don't want to take, I want to select directly. That's haphazard. Generally when you read the matter, simple random and haphazard, they both look so similar. But in a simple random technique, we use scientific tools like random tables, system, all that. In a haphazard, we manually select, which is more safer. Simple random sampling is more safer. Getting it? But if population has variations, then for example, suppose I want to select some 5 students in a classroom of 100 students, where in that classroom some 70 students are girls, only 30 boys were there. In this case, I should divide the population into 2 parts, select more samples from the girl section, and from boys again I should select lower number. Yes or no? When population is not uniform, when the characteristics are not uniform, then you should analyze the population, then accordingly select the sample, divide the population into parts, and then select the sample again. That is called stratified sampling. Be able to understand. I showed you a stratified sampling example based on sales invoices. Clear, all of you? Now, so ultimately the sample objective is sample SA 530. The objective is by testing sample, by verifying sample, we should be able to give opinion on population. The objective of sample verification is to give opinion on population. That's why you see what is the objective of auditor. What is audit sampling and what is objective of auditor under SA 530. The objective is what? To provide reasonable basis for drawing conclusions about population. By using sampling, we want to form a conclusion on population. I will test 20 sale transactions. If all the 20 sale transactions are correctly recorded at right amount, disclosure is right, classification is right, amount, presentation, everything is right on the 20 transactions, I assume remaining 257 are also correctly recorded. Is this what the objective? If these 20 items there is no mistake, I assume that out of 277 also there is no mistake. So to draw a reasonable conclusion on the overall population. Okay. So what is audit sampling? What is audit sampling? Nothing but sampling is nothing but what? Do we verify 100% of the transaction or less than 100%? Less than 100%. Audit sampling refers to applying audit procedures. What are audit procedures? Remember, we in audit evidence chapter we saw inspection, inquiry, recalculation, reconfirmation, something. Some verification I do either checking, I do inspection, something. My audit procedures are applied to less than 100% of items in population to draw conclusions about population. So we test, we verify less than 100% of the items, but we form conclusion on 100% of the items. Able to understand? Yes. Next. So automatically when this standard will be applicable, this standard will be applicable only when we are applying sampling technique. Suppose I decided, suppose the company has purchases Company has purchased only 50 transactions. I want to verify 100% of it. In the purchase verification, should I apply this standard? No. When SA 530 is applicable, SA 530 applies when the auditor decided to use audit sampling to perform audit. Correct? So if I want to perform audit by sampling method, then only this standard applies. If I don't want to verify, if I want to verify 100%, I don't want to go for sample, this standard itself does not apply for me there. So in a company, there will be so many transactions: depreciation testing, employee benefit expenses verification, directors remuneration verification, purchases, sales, so many will be there. Sales, I will apply sampling. Purchases, I will apply sampling. Director remuneration, I will not. I will verify 100% in depth. Depreciation, 100% I will verify. Wherever I don't want to apply sampling, there I will do direct testing, 100%. Wherever I have to apply sampling, I should remember there are sample methods. Sample should be carefully selected. Sample must be representative. There are so many things that I need to consider. Whenever I'm applying sampling, I should take a lot of care. What kind of care you should take is what the standard is giving you. You know, tell me, is sampling mandatory? Is sampling mandatory? Auditor must do audit by sampling only. He should not do 100%. Is there any rule like that? Nowhere it is mentioned. It is auditor's absolute choice. But in reality, practically, we cannot verify 100% in big companies. Therefore, we adopt sampling. It's not that sampling is compulsory. It's not that SA 530 is compulsory. But if you decided to verify not 100%, less than 100%, then follow 530. Yes or no? So this SA deals with, so automatically now this standard is explaining what? This standard is when applicable we saw. This standard deals with what? How to design and select a sample. Just now we saw how to design and select. Simple random sampling, stratified sampling, so many methods we saw. Perform test of controls and test of. Once you select the sample, you need to test, right? Once you select the sample, you need to apply testing. You need to verify that and evaluate the result. Correct? What exactly the standard is explaining? How to design and select sample, perform the work on the sample, then draw the conclusion. Correct? Now there are two approaches for sampling. Like entirely there are two approaches. One is statistical, which is a modern approach. Another one, non-statistical approach. There are two approaches to sampling. One is statistical, another one non-statistical. So statistical means what? Scientific. Mathematics will be used, probability theory will be used, computer tools will be used. Non-statistical, manually we do, which is not proper. For example, no, out of 100 students, every time I'm selecting first row only. Is it correct? No, it is non-statistical. Okay, of course, you know, statistical we can explain it easily. Non-statistical we can't even explain it. What is non-statistical sampling? Some biased sampling. What is it? Biased. Getting it? Yeah. So that sample objective and what exactly the standard. This itself can be asked as a 4 marks question. Write only this point. What is audit sampling? What is the objective of auditor? Also explain what the standard 530 deals with. Like this they can ask a question. Be able to understand. You see, in the previous chapters also, at many places I showed how in different ways a question can come, and I even simultaneously showed Jan 25 paper, some other papers also. Okay, so any way the question can be tested. In the recent CA final May 25 attempt, no, CA final May 25 attempt, historic toughest paper in the history. The question paper is 40 pages. MCQ papers are 24 pages MCQ paper. So don't take it granted. Okay, if someone says auditor nothing easy, no, don't believe like that. It is tough and we know how to crack it. We are reading in order to crack it. Getting it? So it is not an easy subject, it's a tough subject, but we know how to handle it. That's it. We must learn that one. Don't say easy. It's not actually, it's tough only, but we must know how to crack it. Next. Clear everybody? So, you know, this introduction to sampling is there, right? This was once tested in 2019. In one of the attempt in 2019, they tested. What they tested, you know, like they gave this statement. traditional audit is economically wasteful, which focus on all transactions leading to unnecessary routine checking. Comment 4 marks question. They gave this statement and asked just a comment 4 marks question. Imagine who will answer this. I'll show. Wait, I think it's November 2019 paper. Number 2019 audit paper. BA Inter. We'll see. Will it come or not? Difficulty level. Yes. Yeah, here it is there, I guess so. Yes, November 2019 audit paper. This is SM auditing. Mostly, no, for me, once I read a question paper, 99% I remember. Even which year, which attempt also, I generally remember. I'll see. November 2019 or May 2019. In 2019 attempt only, I saw this question. Just 1 minute, I'll pause the video. I think that related introduction only. In November 2019, they gave a true or false statement that time. Non-statistical sampling is criticized on the grounds that it is neither objective nor scientific. The statement is like true or false. Yeah, true or false statement question, 2 marks question they gave. Okay, all these points we have covered in our book also. Every point. See, like simple. Don't expect a straight question that is there in question bank. At least 25 to 30 marks minimum will be newly designed. Nowadays, from the past 4-5 attempts, we are seeing every question is newly designed. They are not copying from any past exam like that. They are picking one line in one concept, and based on that, they are designing one case study. Recently, I made one video on CA final audit. Like I will show you. Just I will show you. You see, you observe to what level institute went for. Just you type CA Ram Harsha audit MCQ. Yes, mind-blowing MCQs in audit. This video you will find. In CA final audit, they went beyond my expectation in MCQ testing. I generally tell you, this is the worst scenario MCQ can come. Beyond that, they tested this time. In Jan 25 also, in CA inter audit, it's not so tough. Most of them are predicted in our class. Most of them. I'm telling you, every question that you're going to see in the upcoming September Jan exam also, 99% of the questions I would have told in the class, this is how it can come, this is how it can come. Pakka it will be matching. You need to be prepared for the worst. Never expect it to be easy. Okay, prepare for the worst. Then you can handle any kind of paper. So in one of the paper, I'm not able to recollect exactly, routine checking, this entire statement was asked as a true or false statement. It's not a descriptive, it's a true or false statement, correct or incorrect. And they simply ask, is it correct or incorrect? Those who skip reading this, they can't write. You know, for this kind of statement they gave, this is the answer which they expected. True or false you need to write and then give this reason. Many wrote some random answers. Every one of them scored wrong. Okay, but now correct or incorrect is not there, but a theory question might come right. So, in traditionally, no, in olden days, no, audit is done by 100% verification. Useless process, like without analyzing data, all that they used to verify. Okay, so traditional audit is economically wasteful, which focuses on checking all transactions leading to unnecessary routine checking. How many you will check? Just invoice will be there, you know, what the bills, supporting proofs and all will be there. So many, just routine checking, no objective. So routine checking involves extensive vouching of all entries, ignoring the concept of materiality. MCQs, true or false based MCQs. In MCQs we get true or false, like they'll give you 3-4 statements, which statement is false, which statement is right, like that they'll give you. In a routine checking, extensive vouching will be done for all the transactions where they ignore concept of materiality. In true or false they might ask, here they will remove this word, considering the concept of materiality they will use. That statement is false. Routine checking means, do they consider materiality? No. Next. So now audit is shifting from routine checking to focus on principles and controls. Nowadays, when we are doing audit, no, we are not directly going to books of accounts immediately on day one. Remember risk assessment chapter? Even in audit evidence topic also I told, first we never verify books. First we will try to understand the company, what they're doing, what business, who are the people, what is their culture, what is the environment, how the workforce, how the factories are situated, how are the internal controls. Yes or no? We first understand the entity, process, controls, then we will go and verify real transaction. Our objective is not primarily real transaction verification. Actual transaction already happened. Let me not focus on that. First, let me understand the system. So, with a shift in favor of internal controls, the routine errors and frauds have been greatly diminished. In today's world, in most of the companies, they have implemented formal controls, formal processes, CCTV cameras everywhere. Thefts and all were avoided a lot. Olden days, no, theft used to be very high in especially supermarkets and all. Yes or no? Theft used to be the biggest threat. Now it is avoided to a greater extent because of camera scheme, surveillance scheme 24/7. So many technologies being introduced. So with implementation of internal control, errors and frauds were greatly diminished. Earlier, no, when they're accounting also, manually they need to type everything. Books also manually they used to write, later computerized. But now, even we are not typing today, we are only scanning the data, system is automatically taking. Amount is fixed, price is fixed. Suppose you go D-Mart, you go Big Bazaar, you go anywhere. Yes or no? They don't type the price. The moment they scan, price automatically comes. Yes or no? Why? To avoid errors. So, ultimately, what extent auditor has to check? Like, should he check 100% of transaction? Should he check a sample? Nowhere mentioned in the law. Did law talks about how much you should check? The extent of checking is purely determined by auditor's judgment. There is no statutory requirement for, there is no law what to work, how to work, what extent it should be done. Yes or no? The auditor primary role is, see, ultimately your objective is what? To give opinion on financials. Now, in order to give opinion, whatever you feel to do, you do it. Standards are there to give you guidance. But in purchases, select 50 transaction, sales 30 you select. Nowhere it is set. It is your judgment. Should I select 50? Should I select 100? Should I verify 45? That is your choice. But ultimately remember, you should only give opinion. That to reasonable assurance. Tomorrow, if at all when we verify, subsequently if some external authority come and verify your audit, whether you did audit properly or not, we must feel that you did sufficiently. See, you did audit, you gave an opinion that everything is true and fair. Tomorrow many frauds were discovered. Will directly they punish you? They won't. I told already in the previous sessions also, they won't directly punish you. They will first see whether you did audit carefully. You showed working papers. Sir, you see, I genuinely worked. I designed sampling, I used system, computers I used, softwares I used, so many scientific tools I used. We all sat for so many days. We verified the work carefully. We could not find out the fraud. What can we do? It's a limitation. Our audit suffers from so many limitations. So it is not easy for us to detect frauds every time. Sometimes frauds, no, the person committing the fraud will do fraud in such a way it cannot be discovered through audit. Only through investigation it can be discovered. For doing investigation, do we have enough time? So just because after audit is conducted, if a big fraud is revealed later on, if big fraud is bursted out later on, you can't straight away say audit failure. You cannot say auditor failed there. It's not an audit failure. What is audit failure? We did not apply a standard properly. Because of our negligence, we failed to discover. Suppose we applied standards correctly, we followed all the guidance notes correctly, we worked sincerely, we showed our working papers, everything, work is very perfect. In spite of it, if some fraud is there, my audit is successful. Able to understand, my audit process is successful. There is no failure in the process. That is inherent limiting. Are you getting it? Easy? That's it. So auditors are not legally bound to use sampling techniques. If at all sampling is used, auditor should rely on techniques with a recognized basis. So indirectly, what are they saying? You don't have any compulsion. There is no mandatory compulsion for you to use a sampling. But if you're using sampling, use some scientific method. use some recognized sampling techniques. Statistical sampling is scientific. Statistical sampling is reliable. It is widely accepted. So ultimately, sampling allows auditor to make conclusions and express a fair opinion without checking 100% of the item. This is introduction to the sampling. Got it? Easy or not? Now, this entire thing, how I mentioned in my chart book, you see, the same point. How this chart book can be integrated in your preparation, you can see. 530, economically wasteful, traditional approach, correct? Routine checking without considering materiality. Auditors are not legally bound to use sampling. Should use only recognized methods. Statistical samplings gives you fair opinion without checking all the items, correct? So there is a changing approach. Like what? Shift is from routine checking to checking of principles, checking of controls, checking of processes, checking of culture. Okay. Effective controls have reduced routine errors and frauds. So to what extent you should check is ultimately auditor's judgment, not statutory requirement. Primary role is ultimately to give opinion. You see, every point is covered here. How quickly we are able to brush up, able to understand. Next. So that's it, the introduction. Now we need to actually start the subject. What is population, what is sample? Now one by one we should check whatever we discuss the example, right? That once again we will see. Okay, that's it. We'll continue in the next. So now, how sampling is different from traditional methods? This itself can be asked as a straight 4 or 5 marks question, descriptive. How sampling is different from traditional methods? If you do not see this question particularly, there is a high chances that many will write the first point. Intro sampling is there, right? That they will write many. Sometimes no students, they'll see the question, they'll understand the question, they'll write the answer also, but that is not the answer. They think they'll get 2 or 3 at least out of 4, but when they see the actual certified copy, 0 they would have got. Reason? These kinds of mistakes. How sampling is different from traditional method? Immediately they'll think introduction to sampling. Intro to sampling is what it is about. It is about routine checking. Yes, sir. So what do you mean by traditional audit approach? In a traditional audit approach, routine checking and all will be happening. So they spoke about before sampling. Whereas now the discussion is about what? How sampling is different from traditional methods. Like, does sampling give 100% assurance? Again, no. It can only give reasonable assurance. We cannot get 100% level of assurance anywhere. Now look at audit evidence is rarely conclusive. Remember, we discussed types of evidences in audit evidence topic, where we discussed prima facie evidence, persuasive evidence, conclusive evidence. In investigation only we get conclusive. In audit we cannot get conclusive. Conclusive means this is 100% fact. In audit we don't focus on conclusive, we want persuasive. We want to convince. If it is convincing, I'll proceed further. I don't bother about is it 100% factually correct, conclusive, 100% pakka. I'm not bothered about it. Company said we purchased machinery. Show me the machinery. I saw machinery physically there. Show me the bill. Bill also shown. GST number, everything is visible. I convinced that it is owned by the company. But in reality, the machine is temporarily brought and kept. The invoice is forged one. Forged invoice. Fake invoice. I don't know all that. I am not bothered about it. See, if I know that, fine. If I discover it, fine. But if I'm unable to discover, that's not my fault. Because in audit, we generally want persuasive, convincing, persuasive evidence. Machinery is physically there, invoice is there, amount is paid to the vendor, bank statement showed amount paid, everything shows, everything is convincing me that it's a genuine transaction, then it's enough. In reality, this entirely might be fabricated. We don't know. Able to understand? So audit evidence is rarely conclusive. Even with 100% checking, auditor cannot derive absolute assurance. Sometimes you check 100%, still you can't get absolute assurance. For example, I verified 100% of transactions, all that. Suppose there is one item in the books of accounts, depreciation, provision for bad debts. How do I know provision for bad debt is 100% accurate? Able to understand? So auditors achieve good satisfaction by checking less using sampling technique. So by checking less items, you can still derive good satisfaction, you can still get more confidence, you can still get reasonable assurance just by applying proper sampling techniques. So if a sample is chosen randomly, it reflects the features and characteristics of population. If I am biased, no, see, there is something called bias. Bias means what? Selecting only some items which I like. Suppose I like number 5, for example. Okay, every item with 5 give me. That's a biased selection. Yes or no? If I select randomly from population, so many items, but if I pick up randomly, there is a possibility that this sample will be representative of population. Next, reliability of sampling checking depends upon effectiveness of controls, obviously. Yes or no? A sample becomes effective if organization internal controls are also effective. Suppose in the company, the processes, management, culture, internal control system, everything is so strong, very good. There is very low chance for errors and fraud. In that company, if I select some transactions and check, still I will get very good satisfaction. Correct? So this point you can strike, not required. So sampling is ultimately a process of estimation, and definitely this process will have errors. The acceptable tolerable error depends upon auditor's judgment. Like what is a tolerable error? I will come back to it later, because we have in some other concept also tolerable error discussion, all that is there. Okay, so sampling is obviously an estimation process. Estimation process means what? We also don't know. Should I select 50 samples? Should I select 100 samples? Should I select 70? We don't know. It's just an estimation process. Just like how depreciation is estimated, just like how provision for bad and doubtful debts is estimated, I am also estimating 50 samples will be sufficient. That's what my estimation is. Able to understand? Now, the acceptable error depends upon auditors. See, sometimes within samples also I may find mistakes, but these mistakes are, let us assume, within tolerable range. Actually, I discussed about the concept of materiality. Remember, in 450 standard, I spoke about triviality level, I spoke about performance materiality, I spoke about overall materiality. Triviality level is there, right? Remember, triviality means what? Small amount, very small amount. If at all any mistake is there below triviality level, you can ignore. Now, what is trivial? That's a judgmental issue. For some auditor, triviality means 1,000 rupees. For some auditors, they will feel 10,000. For some companies, triviality level may be 10 lakh. For some companies, it is 1 lakh. So up to what extent I can ignore? Okay, even if something went wrong, it's below immaterial, it's below trivial level. Generally, tolerable means immaterial. That context you can take. Able to understand. That's it. So the acceptable tolerable error, like to what extent I'm okay with error. Tolerable error means what? I can bear. It's okay. Even if that error is there, I don't mind. My opinion will not be affected. Suppose on a company, I gave a true and fair view opinion, past one modified opinion I gave. In the same company, my article brought and showed me, sir, you see 5 lakhs worth of mistake is there in debtors. We gave unqualified opinion. I told you, this is tolerable range. Small error, not an issue. Are you getting it? Now, what is tolerable error is judgment of the auditor. Clear? So, sampling, how sampling is different from traditional methods. You see, when they're explaining this, they're not giving direct answer. They are saying, rarely audit evidence we get conclusive. Even with 100% checking, we cannot get absolute assurance. So we can achieve good satisfaction with less checking by using sampling techniques. Ultimately, if a sample is chosen randomly, it has the features and characteristics of the population which is not there in traditional checking. Are you getting it? So in a sampling, even with a sample, if at all we select samples randomly, which is a modern method, yes or no, the sample will still be representative. Reliability is depending upon ultimately controls within the organization. And remember, sampling is a process of estimation. In a traditional method, we do check 100%, whereas in sampling, we do estimation. So this is how sampling is different from traditional methods. What is traditional method? Intro they explain. What is sampling? Here they explain. What is the difference between them? You need to compare. Are you clear? That's it. So that's about how sampling is different from traditional methods. Next, the sampling topic is so lengthy. The weightage is 4 marks. That is the reason I kept this in 1/4 priority. Like I divide the entire syllabus into 2 categories, 3/4 and 1/4. Why I kept this in 1/4 is because it is too lengthy. It's not that worth it to invest this much time. So that is the reason. Risk assessment and internal control topic, SA 530, SA 520, and even different types of entities. Or an alternative chapter, another chapter you can take, alternative, instead of different types of entities, another alternative chapter you can take. For example, items of financials. Okay, even if you leave them, rest all other chapters, if you study thoroughly, you can still write 85 to 90 marks. Undoubtedly you can write. In the recent May 25 paper was extreme tough. Nobody predicted CA final. The all India rankers followed 3-4 strategy. Like I gave 2 podcasts of 2 all India rankers who got exemption in audit. They both followed 3-4 strategy in audit. They clearly mentioned 3-4 strategy means you can easily write 80 marks. 80-85 marks of the paper you can easily write. If you're able to attempt 80-85 perfectly, 70 plus is easy. 60 plus is easy. It all depends upon level of perfection. Next. Clear until now? Now let us now look at difference between statistical sampling and non-statistical sampling. Difference between statistical sampling and non-statistical. Like the moment when we think of sampling, there are 2 approaches: statistical, non-statistical. What is statistical? We can easily say we use computer generated random numbers or random number table. We measure using mathematics, probability theory, all that. These are all statistical. What is non-statistical? A method which does not have these characteristics. Simple. Non-statistical means it's not a statistical sampling. Simple. So what is a statistical sampling? Audit testing is a scientific. In a statistical sampling, we do scientifically the testing. It uses loss of probability to determine sample size. How many samples we should select? Should I select 100? Should I select 50? Should I select 20% of the value? Should I select 30% of the value? In reality, in many audits, when we do, it's not about 50 purchase transactions, 20 purchase transactions, 100 transactions. No, we tell the team the sale value, sale is 5 crores. You need to verify 1 crore worth of sale. 20% of the sale you should verify. Now this 20% of the sale value, right? It may be represented by 10 invoices, 20 invoices, 100 invoices. We don't know. The team has to select. Are you getting it? So generally, sample is always expressed as a percentage of population. Generally, in value because we do financial audits. Tell me, sampling is used everywhere. It's not necessary in audit alone. Yes or no? It's used everywhere. Suppose government want to take people's opinion. Like a ruling government want to know what is the public opinion on the government. Do you think they go and take everywhere, every person? Do you think they will conduct voting like system, call everybody and take an opinion? No, they randomly go and do. Sampling is everywhere. Sampling is something that is everywhere. You watch a demo class before enrolling. That's like a sample. Yes or no? Everywhere, every one of us in our routine life, we follow sample. So audit testing is scientific as it uses loss of probability to determine sample size. So in a statistical sampling, even the size of the sample, how much sample, that is scientifically we decide. Now today there are many tools which are available, data analytic tools and all were there. That and all they will be using. Next. Now sampling is when useful? When population is very small or population is very big? Big. Yes or no? When the items that are there, transaction size is very huge, their sampling is more useful. Sampling is suitable for populations with large number. Yes or no? Common form compliance testing, common forms of sample or where and all we use at compliance testing. We can use it for receivables confirmation, external confirmation. We can use it for employee payroll check. We can use it for vouching. Vouching means purchases testing, sales testing, transaction testing, payments testing, receipts testing, verification. That's called vouching we call. Anywhere you can use. Technically speaking, anywhere you can use. In a statistical sampling, personal bias is reduced because I don't know what I'm going to select. Computer is selecting. Personal judgment is not there. Are you getting it? Why you selected 20 bills? Why you selected bill number 41? I didn't select that. System selected it. Personal bias is not there. In a statistical sampling, personal bias will be reduced or it will be zero. Clear? Results will also be evaluated scientifically and reliably projected to the population. Suppose I selected 20 samples. In that one sample, some mistake I found, a fraud or error I found, amount I found, mistake I found. Within 20, this mistake is there. The actual population is some 300 items. How many mistakes will be there? How much mistake might be there? We need to project it. This process is called as extrapolation. What is this process is called as extrapolation? What is extrapolation? Like out of 20 samples, out of 1 crore worth of sale value, I discovered 2 lakh worth of mistake. Out of 5 crore total sale, how much mistake will be? 10 lakhs. Like this I will project, I will extrapolate. But remember, it is not as simple as this. Again, when I find a mistake, in sample I found a mistake. 2 lakhs worth of mistake is there in 1 crore sample. This 2 lakh worth of mistake I will interpret first. I will evaluate what nature of this mistake. Is this anomaly? Is this non-anomaly? Like this, some discussion is there, which we will discuss now. If it is anomaly, we will not project. If it is non-anomaly, we will project. In reality, when we are doing audits, the kind of mistakes that we discover are anomalies. Projection concept is very, very rare. It won't be there in reality because most of the mistakes are mistakes are unique. In that scenario, the unique mistakes there, like you can't find that mistake in another invoice. You can't find like this. For example, accountant is there, when he's entering transaction, but instead of typing 10,000, he wrongly entered 1 lakh. Can I say every 1 lakh item is 10,000 only? Exactly. Instead of writing 10,000 expenditure, he wrote accidentally 1 lakh. He typed 10 extra. Okay, I found this mistake. Can I say every 1 lakh item in the software, accounting software, will be 10,000 only? Can I say that? Can't. Able to understand? Fine. So that discussion we will do. So for large organizations with huge transactions, statistical sampling is what recommended. Yes or no? So verifying purchases with 45,000 transactions, use random sampling under statistical methods. So many transactions, for example, 45,000 transactions were there, use sampling methods. We hardly pick 150 bills. Even though 45,000 transactions were there, we only verify 150, 100, max 200, worst case. Able to understand? But the value will be 20% of total sales value. That number is 1% only. 0.5% only, in fact, number. For example, if I'm selecting 200 bills on 45,000, out of 45,000 bills, 200 is selected. 0.5% only, number wise. But value wise, it can be 20% of the total purchase value. It can be 30% of the total purchase value. Generally, whenever we say sample, whenever we are telling our articles or anybody how much you should verify, how many samples, we tell them verify 30% of the purchases value. That 30% value may be only 50 bills, maybe 100 bills, maybe 150 bills. Doesn't matter. This is how we select sample in reality. Monetary unit selection we call. We call it as monetary value weighted selection, monetary unit sampling. We'll come to that later. Okay. What is non-statistical? Here, sample size, sample selection, both are based on personal experience of the auditor, judgment of the auditor, both auditors' judgment. Objectivity cannot be assured. There is no independence, there is no objectivity, there is no unbiased nature. Here auditor is biased. Yes or no? And risk of personal bias cannot be eliminated. For example, my lucky number, let us assume 5. I will tell the company, bring all the vouchers which will have 5 number. Okay, 005, 050, 00, like 500, 5000. Okay, 5154, whatever, wherever 5 is there, bring me that voucher. If at all company knows that, I only select vouchers with 5 number. If they know that, for example, they may do frauds in other vouchers. They will not do frauds in this voucher. Automatically, when I verify these vouchers, I will not find any fraud or mistake. I will assume everything is good. Yes or no? So, in a non-statistical sampling, we generally check year-end transaction. Okay, to assess cutoff procedures and identify risks. In a traditional approach, non-statistical, we don't focus on throughout the year transaction. We focus year-end transactions mainly. it lacks scientific objectivity, and it is criticized for being subjective. Remember one true or false statement I showed in November 2019 paper. So non-statistical sampling is criticized on the ground of the non-statistical sampling is criticized on the ground that it is neither objective nor scientific. You see what is the statement here? It lacks scientific, yeah, neither scientific. It is criticized for being subjective nor objective. Which the statement is correct only, right? So when they gave that statement for 2 marks, that time true or false statements concept is there. Okay, now it can be asked as an MCQ. Yes or no? So indirectly they are asking you to write about non-statistical sampling answer. Suppose in exam they'll give you the non-statistical sampling is neither objective nor scientific comment. What you will comment there? 3 marks question they give, descriptive. What you will write? This matter you need to write. Any 3 or 4 points you need to write. Able to understand? And sample results cannot be measured due to statistical techniques were absent. The sample may not be representative of the population due to personal bias. So if I select all 5 value vouchers, 5 number vouchers, can I say my sample will have every characteristic of the population? I can't. So in a non-statistical sampling, the sample may not be representative of population. Whereas in a statistical sample, the sample will be highly representative of population. Clear? So that's it. So this is about what is statistical and what is non-statistical sampling. Clear all of you? Easy? Next. Now, like many a times we are discussing the word, right? Representative sample. What is representative sample? What is representative sample? For example, like what do you mean by representative? The sample must be representative, correct? Like sample must be closely similar to population. It may not be 100% same, but it is similar. For example, in our original initially we discussed one Excel sheet example. Stratified sampling, if you see, there we selected 20 only totally, but this sample 20 items includes high value items, low value items, medium value items, which are already there in population. Population is extremely different. The population consists of heterogeneous. They consist of so many wide variations. There are extreme high value, low value, medium value, so many were there. Even my sample also has that. So if I select a sample in such a way, then it is representative. In such a case, when I verify sample and I feel everything is true and fair, then I can say population is also true and fair. You know, there is something called audit risk, remember? Risk of expressing an inappropriate opinion when the financial statements are materially misstated. Audit risk. One of the main reason for audit risk is detection risk. Yes or no? In risk assessment chapter, I gave this intro. Detection risk means what? Risk of not detecting a fraud, not detecting an error. I did not discover mistake. Mistake is there, but I did not discover. Since I did not discover, I assume there is no mistake. Since I assume there is no mistake, I give unmodified opinion. Now, when I know, I want to know the reason why you did not discover. Why you did not discover the mistake? That mistake is in one transaction. That transaction is not in my sample. One of the reason. Why the transaction is not in your sample? The reason might be sampling risk. That risk is called as what? Sampling risk. So sampling itself has a risk. What risk is there? You may be selecting sample which does not have any mistake. That's why when you are selecting sample, you have to be very, very careful. Getting it? You need to select sample adequate number. 200 bills, 300 bills, number you should select. At the same time, all different values, all transaction types, different months you should cover. Clear? So sample size must be large enough to provide meaningful result. So sampling is performed on, of course, you know, we do sampling on control checking and test of details. For both we will use sampling. For testing internal controls we can use sampling. For testing details also we can use sampling. I told in one of the class, control testing and details testing are not different. They are one and same. Compliance, procedure and substantive, many think that both are different, but they both are same. See, very simple. Suppose no, there is a sale voucher, there is a sale bill. Okay, here value is there, value is there. Somebody has authorized it. Okay, some amount is there. From whom? Date, voucher number, all this is there. You know, here, for example, I want to verify. Okay, fine, everything is there. Amounts, everything is there. Everything like, for example, amount is some 10 lakhs, 10 lakh, ABC company. This is a purchase voucher. So we purchased it from ABC, 10 lakhs worth. So who authorized? Some, you know, production manager has authorized, finance manager has authorized, everybody has authorized. You know, if I am checking who authorized, okay, production manager, I will go and see policies and procedures of the company also. I will see company policy. If I am checking policy matters, that's compliance testing. That's called control procedure, test of controls. Getting it? Suppose no, 10 lakhs, suppose no, here 10 lakhs worth of transaction, these two people, I check the company purchase policy. In this company purchase policy, up to 10 lakhs, the authorization will be by purchase manager and finance manager. Like that only the policy is written. Here also up to 10 lakhs is there, these two people authorized, only then the purchase has completed. Like that I saw. Able to understand? Here I am checking controls. Fine. Test of details. Substantive procedure means what? Substantive, same voucher I will check again. How much amount? Is the amount same? Yes or no? Like this amount is matching with purchase order. This amount is matching with goods received nota. This amount is matching with e-way bill or not. This amount is matching with third party invoice or not. That is test of detail. In both the cases, same voucher, same transaction I am checking. If at all I am checking whether transaction is correctly executed. If I am checking whether transaction is correctly executed as per the rules and regulations, policies and procedures, that's compliance procedure. If I am checking transaction with other documents to know whether it is accurately recorded, it is test of details. Are you clear? I can apply. If I want to test internal controls, purchases, are the purchases controls are effective? Are purchase, I mean simple, internal control system on purchases, is it effective? I want to know. I can take some 100 purchase transactions. I can apply test of controls there. Whether purchases are recorded correctly in the books of accounts. I can, same 100 transactions, I will verify in a different parameters. The parameters alone will change. Between test of control and test of details, what will change is only the parameters will change. In reality, test of details and test of controls is done simultaneously. We do simultaneously. We don't do separately. Able to understand? I told this point in one of the earlier classes also. I told this. Next. So, test of controls. Why are we testing controls? To identify deviation from expected control. Expected control means what? Generally companies will have SOPs. They'll have SOPs, standard operating practices. Purchase up to 10 lakh, manager has to approve it, then only you can purchase. Purchase above 10 lakh, CFO has to approve. These like controls will be there, processes, expected processes will be there. What really they followed, what exactly the rule. Is there a deviation? If at all controls there is a deviation, that's more risk. That's a very even more risk. Control itself is deviation, is it? That's a bigger risk. Test of details. Why do we test details? To identify mistakes. Details means what I told you. I will check invoice. I will check GRN. I will check e-way bill. I will check, you know, purchase order. How much amount is there? How much quantity is there? I will check quantity, amount mainly, and authorization, everything, to know is there anything wrongly recorded. Able to understand? Yeah. So to identify misstatements in account balance or class, test of details. Why do we test details? Detail checking means what? The date, amount, these are all details. Controls means what? Who signed it? As per the policy, who should sign? When is the date? When approval is happened? When purchase transaction happened? Before approval, after approval transaction happened? Like this. This is process testing. Process testing means control testing. Generally, we do both simultaneously. Why should I open the same invoice again and again? One time I take, first I will do control checking. Controls are good. Then I will check details. Details are also entered correctly in the books of accounts. Fine. Over. Clear? That's it. So what is representative sample? This itself can be asked as a 3 marks question, must, right? So the sample must be representative. Sample must be similar to population must be large to provide a meaningful result. Sampling can be performed on internal controls. Sampling can be performed on details also. Clear? Easy? Next. Now, as I already told, there are two approaches to sampling, correct? What are the approaches? Statistical sampling and non-statistical. Which approach auditor should follow? I recommend statistical. Ultimately, auditor has to decide. The decision to use statistical or non-statistical depends upon auditor's judgment. And remember, no, it's like we have seen, no, statistical versus non-statistical, we have seen some differences. Here they made one statement: sample size is not a valid criteria to distinguish between statistical and non-statistical. In one of the exam before, in old scheme, they gave it as a correct or incorrect statement. Actually, they removed this word not. They gave this as a, correct or incorrect statement. Now you might get it as an MCQ. Which of the following statement is not correct? They'll give 4 statements. One statement is like this, they give this word not is removed. Sample size is a valid criteria to distinguish between statistical sampling and non-stat. Like that they gave a statement. That's not true. Because, like, see, when somebody asks you, what is the difference between statistical and non-statistical? How do you tell them? Statistical is scientific, where random tables are used. Personal bias will not be there. This is statistical. Non-statistical is something where we don't use random number tables. Personally, auditor will select. Yes or no? Like that you will mention the difference. Can I say statistical sampling 100 samples we verify? Non-statistical will verify 200 samples. Can I say like this? Sample size. Is this a distinguishing factor between them? No. Sample size is not a distinguishing factor. What is statistical? What is non-statistical? Distinguishing factor is personal bias. Distinguishing factor is random number tables. Distinguishing factor is mathematical probability calculation, results evaluation, all that. Sample size is not a distinguishing factor. Sample size is determined separately. First approach will be decided, then sample size we will decide. Sample size is not base for approach. Correct? So sample size is not a valid criteria to differentiate between statistical and non-statistical. In a statistical sampling, we do select random selection of sampling units. We use probability theory. We measure sampling risk. We consider sampling risk, and sample is chosen using mathematical methods, statistical methods like Excel sheet tools, sample random number table tools, like that. Various tools we will use and then select. Non-statistical sampling does not have the above features. Non-statistical sampling does not have above features. Easy, all of you. Next. Now, advantages of statistical sampling. See, I'm going in a particular structure. Okay, so best order. I'm just telling you the best order so that you can develop the concept layer by layer. Advantages of statistical sampling. What is the advantage? Tell me. Well, here the universe is not the right word. Population. Okay. Yeah. Advantages of statistical sampling. For example, a company has 1 lakh transactions, purchase transactions 1 lakh were there, total 1 lakh transactions were there. But I decided to check 200 bills only. There is another company, they have 2 lakh transactions. Should I check, since 1 lakh bills, 200 bills I checked, here 2 lakh transactions, 400 bills should I check, like that? Will it increase? No. Sample size will not increase in the same proportion like population. For example, a layman example, a simple example I'll tell you. You're cooking rice. Whether you're cooking in a small bowl or a big kadai, I want to know whether the rice is boiled or not. I just take some 4 or 5 grains and then test it, whether it is boiled correctly, adequately or not. Correct? Suppose it's cooking in small, I will take 3 grains and test. If it is cooked in very big one, I'll take 10 grains and test. Is it so? No, right? Correct? Sample size generally does not increase in proportion to the size of the population. Clear? So sample size testing does not increase proportionately with the size of the population. Sample selection is more objective and defensible. In a statistical sampling, the selection happens unbiased. Yes or no? That's an advantage. The person who is selecting also don't know what he's selecting. That's the beauty of the statistical sampling. Correct? Minimum sample size is enough. Just 200 bills enough. Transactions can be 2 lakh transactions. It can be 3 lakh transactions. Doesn't matter. 200 enough for me. With a minimum sample size, we can evaluate, how much risk is there in the population with precision, with accuracy. Minimum sample size. A statistical sample provides a way to estimate minimum sample size with specified risk and precision. Enables estimation of calculated risk and sampling error. The probable difference compared to examining the entire group. See, instead of verifying 100%, by simply verifying sample, you can calculate total risk. You can calculate total error, sampling error, population error, how much error is there, everything you can calculate. And even, provides better description of large mass of data and reduces non-sampling errors like clerical errors and processing errors. You see, there are again two types of errors: sampling related errors, non-sampling errors. This I will discuss in sampling risk analysis. We have a topic called sampling risk analysis. There I will discuss sampling risk, non-sampling risk again. Detection risk is two types: sampling risk, non-sampling risk. From sample point of view, why audit risk is there? Sampling risk is there, non-sampling risk is there. That we will discuss later. Okay. So a small sample will give better representation of large mass of data. That's an advantage of statistical sampling. And statistical sampling is scientific. It is free of personal bias. Result can be evaluated and projected reliably to the population. Clear? Understood? Easy? Many times this was asked. 4 marks question. Any 4 points you need to write. For example, 1, 2, 3, 4, 5, 6 were there, right? Any 4 points you should write. Any 4. First point is easy. Yes or no? First point, you can, testing does not increase proportionately with the size of population. Minimum sample size is enough to give description. Yes or no? Of minimum population size is enough to give better description of large mass of data. It is scientific and free of personal bias. In sampling, we can calculate the risk and sampling error. Instead of comparing entire population, instead of verifying entire population. Clear? Any 3 or 4 points enough. Maximum 3-4 marks question only will come. Next, there are cases where sampling may not be useful. When not to use statistical sampling, nothing but when we will not use sampling technique. Statistical sampling at some times we may not use. It is not suitable at certain places. This itself can be asked as a 3 marks question. For example, I want to know exact accuracy, 100% accuracy I want. I can't apply sampling. Yes or no? I want 100% assurance. Their sampling cannot be applied. Audit staff lacks knowledge of sampling technique. So where it is complex and inappropriate. If at all my staff does not know how to use sampling, I cannot tell them to use. So sampling can be used only when you know how to use sampling. So where sampling methods are not useful, where sampling should not be used, 1, I want 100% assurance. Their sampling is not possible. 2, people who is doing sampling not aware of how to do sampling. For them also I will recommend not to use. Usage of another approach provides better information in less time or with less effort. Instead of sample, there are some other methods. Through that way you can get 100% accuracy. That time also we will not use. So sometimes statistical sampling methods may not be appropriate. What are they? Accuracy is required. Exact accuracy is required. Staff is lacking knowledge of sampling technique, or some other method provides a better results with less time, less effort. By using less resources, better result we can get other than sampling. Then go for that method only. You want 100% accuracy, don't go for sampling. You don't know how to apply sampling, don't use sampling. In all these cases, sampling may not be useful. Statistical or non-statistical, forget about it. Here they mainly wrote in the context of statistical, because statistical only we use. So where statistical sampling is not useful, these three scenarios it is not useful. Easy. Yeah. Next. Now we will discuss about sample selection methods. Just 2 minutes. Yes. Now let's discuss. Let's continue with the discussion on selection methods. How do we select sample? When you're reading, also preferably read in this order. You will get a better clarity. Okay. Selection. There are so many methods. I told. Remember, we already saw 3 methods. Random sampling we saw. Haphazard sampling we saw. Stratified sampling also. Of course, all the methods are not listed here. But see, in random only, stratified sampling is sub method. In random sampling only, stratified sampling is another method. Okay. That's why you see simple random sampling has 2 methods. Simple random sampling, stratified random sampling, like that. Okay. Sometimes in exam, no, write about random sampling methods. You should write both the methods. Simple random sampling means what? Stratified sampling stratified random sampling means what? Simple random sampling means what? Remember in system we did one rand between one formula we applied in Excel sheet. Ran between 1 and 277 and it just gave random number. That is simple random sampling. Each equal chance. Okay. Like this is actually side heading. Okay. Each unit in population has equal chance of being. One of the characteristic of simple random sampling is what? Each item in the population is having equal chance. Tell me, when system is giving that 1 to 227, between those 277, any one random you give, computer don't know which one to select. It randomly selects one. Anything can be selected. Equal chance will be there. In a simple random sampling, equal chance will be there for each item, because scientifically we are collecting. It uses random number tables to avoid bias in selection. It uses random number table. Yes or no? Where our personal bias will be avoided. Next, appropriate for population with similar units and reasonable range. Suppose if population does not have much variation, all are more or less same values, simple random happily we can use. Tell me, if population has multiple variations, that time it is better to divide population into multiple parts. From each characteristic select the sample. Correct? Stratified. What is stratified sampling? Stratification. You know, in a stratified sampling, we apply stratification technique. Stratification means what? Stratification means dividing a heterogeneous population into homogeneous strata, and samples are drawn from each subpopulation. What is meant by that? For example, no, you know, there are expenses, so many expenses were there. You know, company has given expense file. Sir, these are all our expense vouchers, sir. What expenses are there in this? Power bill is there, you know, administrative overheads were there, production overheads were there, sales overheads, so many were there. I will divide expenses into 3 categories: production, sales, administrative, and from each category I will select vouchers. This is a stratification technique. In our example, what we did, sales, we divided sales into 3 categories: high value, middle value, low value, and selected sample from each category. Why? Because the population has extreme high value, big item is there, small item is there. So no. So stratification means, what is stratification? Dividing heterogeneous population into homogeneous strata. Like the population has different characteristics. So I will first study the population. I will first see the population. Okay, the population has high value items, medium value items, low value. Now what is high value? 2500 and above, high value. Medium value 1000 to 25. Low value less than 1000. Less than 1000 means they are all similar. 1000 to 2500 means they are similar. Above 2500 they are similar. As a whole they are heterogeneous. Correct? As a whole 277 bills are heterogeneous. But if you see independently 3 parts, they are all homogeneous again. So dividing a different variations population into subgroups of same characteristics. Correct? So dividing a heterogeneous population into homogeneous subpopulation, the technique is called stratification. Now from each subpopulation I will select sample. Therefore my sample will be representative of the entire population. The subpopulations are called as what? Strata. Selection. How do we select now the sample? Items are selected from each stratum, because the stratum itself is treated as a separate population, and the auditor decides the number of strata. Correct? Should I divide that into 3 parts of population? Should I divide the population into 5 parts? That's auditor's choice. For example, debtors item, here it is debtors. Okay, balances about 10 lakh, 100% we will select. Balances between 5 lakhs to 10 lakhs, 25% of them only I will select. Balances between 2 to 5, 10% only I will select. Balances below 2 lakhs, 2% only I will select. See, actually, if you see here, this number is there, right? 6 items were there. All the 6 we selected. Correct? Between 1000 to 2500, 37 bills only were there. Here also we selected some 6 items. Whereas less than 1000 rupees value, 234 bills were there. Here we selected only 8. Now if you see quantity percentage, 100%. 6 by 36, 20%. 8 by 234, just 2% or 4%. In a low value item, the percentage is less, but the number is high. In a high value item, percentage is high, but the number is less. Able to understand? Here 4% means 8 items were there. Here 100% also it is only 6 items generally, because high value transactions number will be less, percentage will be, and the value, the sample percentage will be more. Able to understand, able to comprehend it? Yeah. So that is what they also mentioned here indirectly. Next, systematic sampling. What is systematic sampling? Like this is stratification, stratified sampling, understood? Now related to this, one concept is there. Stratification means what? What do you mean by stratification? Stratification means what? Dividing a population into discrete means separate, different subpopulations based on identifying characteristics. Yes or no? Identifying characteristics means what? Each subpopulation has an identification. In our example, 3 categories were there. Each category has an identification. Less than 1000, 2500, 1000 to 2500, that is one identification. More than 2500, that is one identification. So dividing the population into subpopulations based on some characteristics. Correct? Easy or not? Each subpopulation is called as stratum, and units under those are called as strata. Now here one confusion. Look at, if you see here, each subpopulations are called as strata. Correct? Subpopulation is called as what? Strata. Now here you see units under those subpopulation are called as strata. They said contradiction. You take this one. Okay, in stratification, whatever it is given, you take this one. This is right definition, technically speaking. Clear? But there the matter is given like that only. Here the matter is given like this only. If a correct or incorrect question based MCQ comes, stratum means subgroup. Strata means within the subgroup 6 items are there, right? Each item is called strata. Real word is both are interchangeably used, but I don't know why this fellow gave here like this. The one who drafted this material. Understood? ICA material I'm talking about. So the one who gave ICA material, they gave like this point. That's the reason I specifically mentioned here and there. Understood? So for example, no, here if you see, this is called stratum. Stratum. 6 items were there, right? 1, 2, 3, 4, 5, 6. Each each invoice is called a strata. That's it. Sampling unit is called as strata. Subgroup is called as stratum. All subgroups put together is called as population. These are the terms. So why stratification? It improves audit efficiency. Correct? Efficiency means what? How efficiency means what? Within shortest time, verifying maximum amount. That's called efficiency. Low resources, high output. That is only we called efficiency. Efficiency means that labor efficiency ratio. Yes or no? Efficiency means that only, correct? Yeah. Now you see, when you look at the example, no, that example, first we applied simple random sampling, 20 vouchers we selected, but value is 11% only. Whereas same 20 we selected in stratification also, but the value is 22%. Same 20, but percentage increase. Efficiency increases. That's what the meaning. Stratifying the population improves efficiency. So what is the objective of stratification ultimately? Why are we stratifying? So that our sample will be from every corner of the population. To select a sample from all parts of the population which are having different characteristics. For test of details, when you're conducting vouching of sales, vouching of purchases, monetary items, stratification is often based on monetary value. That's what we did. Sales, we divided into subpopulation based on 1000, less than 1000, 1000 to 2500, more than 25. Yes or no? Now from each strata I selected, right? Okay, I selected samples. Our first category, more than 2500, 6 items were there, all the 6 I selected. Second category, 37 items were there, but I selected only 6. Suppose in the 6 I found one mistake. Look at this. Look at this example. For example, I divide that into 3 categories. Total population 300. Let us assume total invoices 300. Example. Middle category has 40. In this I selected 10 vouchers. Okay. In this 10, no, I found one mistake. Now, out of 10, one mistake is there means out of 40, how many were there? Correct? This is one projection. My article came and told me again this, sir. Here out of 10, one is there. You should see out of 300, how many he is coming and saying me. Should I go with this projection or should I go with this projection? Should I project to the stratum or should I project mistake within the stratum to the population? Within the stratum I should project. Okay, so first I will project. Here out of 10, 1 is there, which means out of 40, 4 mistakes might be there. Here within the stratum I will project. Within the stratum I will project. Then total of the each stratum mistake is equal to population misstatement. Is this correct? That's what they're saying. Result from sample within the stratum can only be projected to the specific stratum. You cannot project it to population. In a simple random sampling, no. 300 bills are there, 20 I selected. Out of 21 mistake is there. Out of 300, how many is there? Straight away I will project to population directly. In a stratified sampling, I will not project to population directly because the population is subdivided now into subpopulations. Now each item is a separate population. Now when you are projecting, you should only project to subpopulation. Then total that all the subpopulation projected value to get the total projected value. Correct? Yeah. So results from sample within a stratum can only be projected to that specific stratum. Then combine projected misstatement of each stratum to assess total impact on the transactions and balance. Correct? Then each stratum will be totaled, projected stratum. Then total population mistake, how much we will. This process is entire, this discussion is called as what? Stratification. Directly in exam they'll give you as a 4 marks question. What do you mean by stratification? Some students, what they do, they will write stratified sampling answer. When the question is this, they will go and write stratified sampling answer. Stratified sampling means what? Using stratification technique in sample selection process. That is stratified sampling. Stratification means what? Dividing the population into subparts. So each subpart is called a stratum. Within each subpart, multiple items will be there. Each item is called a strata. Yes or no? So stratification improves audit efficiency. What is the objective of stratification? In order to select a sample from every subpart, every characteristics of the population. Here sometimes stratification is sometimes done based on monetary value. Yes or no? Stratification, projection, how? In a stratified sampling, projection will not happen directly with the population. At a sample, in one sample mistake is there. We project that mistake to stratum. Like that, for under each statement we do projection separately. Then total that to understand total impact on the overall population. Clear? Next, you see, for example, 20% of items may form 90% value. Correct? Sometimes the auditor examples a sample from these items, evaluate results, and separately test the remaining 10%. Next, value weighted selection. Value weighted selection. Generally, in a monetary sampling, stratification we do based on monetary, right? High value items we select 100%. Low value items we select very small percentage. Even the low value, for example, you see here, low value items, no, just 4% only we selected. But still the number of sample is bigger than high value items. The number will be bigger, percentage is smaller. You see the same wordings. Under this, sample size, sample selection, evaluation, everything is based on monetary amounts. Value weighted selection. Value weighted means monetary. Greater focus is placed on large value items, which will have a higher chance of selection, but still it will be smaller sample size. You see, more than 2500, 6 items only were there. 100% we selected, still the sample size is 6 only. Yes or no? Higher chance of selection, 100% we selected, but still the sample size is 6 only. Yes or no? So value weighted selection is best used with random sampling. So it is most efficient to use with random selection. Value weighted random selection, that is nothing but stratified sampling. How do we stratify? Sometimes based on monetary unit, yes or no? Sometimes we divide the data based on amounts. If money is used, if monetary terms, values are used, that is called value weighted selection. Value weighted selection is a separate, another type of stratification. That's it. Okay, if stratification is done based on values, then it's a value weighted selection. High value items will be given higher chances of priority, even though even still you will get low value, less number of samples only. So here sampling unit is defined as individual monetary unit. Each and every invoice is itself is a sampling unit. Each and every invoice, 40 rupees transaction, 100 rupees transaction, 5000 rupees transaction, 1 lakh rupee transaction, whatever transaction value, that each item is called a sampling unit. So sampling unit may be defined as individual monetary unit. So value weighted selection, under this sample size, sample selection, evaluation, everything is in monetary amounts. Sampling unit is nothing but each and every monetary item. Greater focus is placed on large value items, where small sample size only will come. So it is best used with systematic selection, and it is most efficient with random selection. Now what is systematic selection? We have not yet covered. That we need to discuss now. Are you clear? Now, before I conclude this particular session, let me talk about another important definition. Sampling unit. Many a times we are getting the sampling unit. What is sampling unit? We saw first introduction, one example, right? Excel sheet. 277 items are there. The 277 items together is called as population. Each item is called as sampling unit. Each item is called as sampling. Individual items that makes up the population, they are called as sampling units. All 277 items together is called as population. So those 277 items are called as sampling units. Yes or no? Each and every item in the 277 items that makes up the sales value, sales transaction population. Okay, the population can be divided into sampling units in various ways. Extrapolation. Audit procedures are applied on these units. Correct? We do verify population, we do verify sampling, samples. Our audit procedures are performed only on, we do audit of samples only, but we take a decision on population. So audit procedures are applied on these units, means sampling units, correct? Which are selected from population, and conclusions are projected to population. Conclusions drawn on sample becomes conclusion about population. Correct? Yes or no? So based on sample we decide what is population. For trade receivable, sampling units will be customer balances or invoices. Simple. For trade receivable is a population. Sampling unit is what? Each and every customer account, each and every invoice. That's it. Clear? So Generally this is important for MCQ mainly. Sometimes in a descriptive question also might come for 3 marks. Write about sampling unit. Now we understood sampling unit, correct? Then we need to understand what is population. Then we need to understand what is population, characteristics of population. From here little bit standard will increase. The discussion standard will increase little bit. Until now it is only at a fundamental stage. Okay, technically half the chapter completed. SA 530 half completed. Still another half only pending. Until now confident? That's it. So we'll take some break and then come back and then discuss. Okay, next session will continue. So now let's continue the discussion on again methods of sampling. Okay, so we started with methods of sampling and we went up to stratification, value weighted selection, all that. Now what is stratified sampling, simple random sampling, and what is stratification, what is value weighted selection, all that we understood. Now let's now understand systematic sampling. Actually in the ICA book they have given like this only breakup: systematic sampling, then monitor unit, haphazard, block. Basically block sampling is also a method of systematic sampling. Systematic sampling has 2 types. Interval sampling, one sampling is interval sampling, another method is block. Both are systematic selections, both are classified as systematic, but in ICA book what they said is systematic sampling means interval sampling, that's it. But in reality systematic selection has 2 methods: interval, block. What is an interval sampling? This actually systematic sampling or interval sampling. From exam point of view, systematic sampling means interval sampling, you need to remember that. So what is systematic sampling? You know, for example, we have a invoice number 1 to 277, right? Okay, invoice number 1 to 277, right? Suppose I want to verify 27 vouchers. I want to select 27 sample size. Okay, what is the total population? 277 divided by how many samples I want to verify? 27. What is the interval? 10. Correct? What is the interval? 10. Now what is this? Now look at the word interval sampling. Interval sampling, like what does it mean? So 10 is the interval, right? What I will do is, for example, 1 2 3 4 5 6 like that up to 277. I will randomly first generate one number, 1 to 277, one random number I want. Suppose computer picked 141. Okay, 141 is the first random number which random number table gave me. 141. Now what is our interval? 10. 151, 161, 171, 181, 191, 201, 221, 211, 231, 241, 251. Likewise I'll go 131, like before this interval, up to 131, 1, 11, 21, 31, like that. Understood? Now if you total all this, no, you will get 27 samples. So in interval sampling, first number will be randomly selected. From then every 10th item will be selected. In our example, interval is 10. Suppose if at all interval is 50, then every 50th item will be selected. First number only random, rest all other are systematically selected. That is interval sampling, systematic selection. Simple. Clear? Here the first number should be very careful. Okay, now look at the verdicts. Look at this. Systematic sampling or interval sampling, the population is divided by sample size. For what reason? To calculate, to determine sampling interval. Correct? Random starting point. First point will be random. Starting point can be determined haphazardly or using random number tables or using computer formulas, all that. For true random sample, use random number tables or random number generators. We use random number generator in Excel sheet. Correct? Avoid patterns. I mean, okay, fine. Ensure that sampling interval does not match with a particular pattern in the population. You need to be very careful when you're systematically selecting. No, first number you randomly selected 141. Random number selected first one is 141. 141, 151, 161, like that I selected 27 items. But when I observe all the 27 items, no, they all are depreciation entries. They all are depreciation entries. Okay, which means my sample selection pattern matches with some transaction pattern, which means I should change my interval or I should change my starting point. Correct? Yes. use multiple starting points to mitigate risk of missing important transaction. Able to understand precautions. So when you're using interval sampling, make sure your interval does not match with some particular pattern. Okay, and use multiple starting points so that your samples will be more representative of population. See, at the end of the day, whatever method you follow, ultimate objective is what? Sample must be powerful, representative, so that on the sample, if I verify whatever satisfaction I'm getting, I will extrapolate it to the population. Correct? Easy. So for example, no, branch sales example. For example, you see, if branch sale only occurs every 100th item, every 100th transaction is a branch sale, not company head office sale, and auditor picks every 100th item for review as an interval, then automatically auditor will be selecting all branch sales. He will not be verifying head office. Another example, if one accountant A records transactions for 1 month and another accountant is recording for next month, the auditor checks transaction from alternate months. They might be reviewing only one accountants. Suppose auditor decided, I will check April, June, August, October, only alternate months I will verify. I will not verify second month related. For example, I decided to verify Q1, Q4 accounting records only. Q2, Q3 I don't want to. Q1, Q4 one accountant prepared. Q2, Q3 another accountant prepared. So automatically you are verifying only one accountant data. Another accountant data you are not verifying. Some random example they give. Able to understand. So when you are following interval sampling, make sure your interval does not match with any pattern. That's it. Observe the pattern. Okay, you selected sample. See the sample first. Is the sample having different characteristics or not? Check out. If all the sample items that you selected, no, they all have same characteristics, then once again shuffle it. Once again start sampling. Clear? That's it. Monetary unit sampling. This is nothing but value weighted selection. I told you, remember, value weighted selection is nothing but monetary unit sampling, where sample size, sample selection, evaluation, everything is clearly given in monetary amounts. That is called monetary unit sampling or value weighted selection. Haphazard. What is haphazard? Haphazard means name itself says no technique, no structure, haphazardly, carelessly. Yes or no? The sample is selected without a structure, but bias and predictability are avoided. Bias won't be there. Remember in the Excel example I showed, I manually applied stars. I'm just going down the data randomly wherever possible applying. That is haphazard. Yes or no? Haphazard is also random only, but every item may not have equal chance. Suppose if I use a computer random number generator, if I use a formula 1 to 277 randomly, you give me some number, it will give me random number truly equal. Every unit, every number have an equal chance. Whereas in haphazard, no, since manually we are doing, I cannot give equal chance to everyone. I cannot give equal chance to all the items because it's not possible. Yes or no? Correct? Limitations. Not superior to statistical methods. It is not as good as statistical method. All the sampling units in the population have a chance of selection. Chance is there for every item. But remember, equal chance may not be there. In a simple random sampling and haphazard sampling, what is the difference? In a simple random sampling, every unit will have equal chance. In a haphazard sampling, every unit will have a chance, but not necessarily equal. Are you getting it? Next. So that's haphazard sampling. This was also asked many times for 3 marks question. All these methods were tested in the past exams. All the methods were tested for past exams. Next, block. Block sampling means what, you know? You see the words. Selection of blocks of continuous items. Actually, you can say continuous. They use the word contiguous. Okay, it's nothing but continuous items. Continuous adjacent items within the populations. Now, fine. Remaining points I will first explain. Okay, for example, no. My block is 10. My block size is 10. Okay. For example, 277 invoices were there. Okay, 277 invoices were there. I will select 2 random points. I will select 2 random points. 1, 1. For example, one random point I will ask computer. It gave me 129 number. Another random point 64 it gave me. Okay, fine. Now what I will do is, my block size is 10. Here already one selected, plus 9 sample continuously I'll select, plus 9 samples continuously I'll select. So 129, 130, 131, 132, 133, 134, like that. Block of 10 items I will select. 64, 65, 66, 67, like that. Block of 10 items I will. Block first item is there, right? That is random. Remaining 9 items is continuous. In a block sampling, I will pick up some 3 or 4 random points. And at each point, continuously 10 or 15 or 20, depending upon my block size, I will select. That is block sampling. Able to understand? Here also one risk is there. All continuous items you are selecting, right? They may belong to same category of transaction. That risk is there. So you need to be careful. Look at. So items in a sequence may have similar characteristics where it will limit coverage of diverse transactions. Correct? Limiting diverse transactions coverage. You can't cover diverse transactions because sequence continuous items may be same only. Unusual transactions may not be covered in a block if at all they are all taken once. For example, I decided only one starting point. I want to go with block some 50 samples I want. First number only randomly I will generated continuous 50 items. Are you clear? Next, bias risk. If management identifies the block selection pattern, suppose if management knows auditor will select a block number from this number, misstatements may be overlooked by management practices. Management may do mistakes in some other cases, some other items where you may overlook. Yes or no? It has similarities to non-statistical. So block sampling is typically non-statistical, continuous 50 items. What is this? Where is that scientific approach of selection? Stratified sampling, you see, randomly you select. Interval sampling also good at least. Yes or no? Because first point random means remaining points also random automatically. Because I don't know first number which will come, I don't know. Yes or no? So block selection, continuous 50 items. That's very, very worst method. It's a non-statistical method. It is similar to a non-statistical. It is simple, economical, but prone to bias. Pattern of selection may be noted by clients. Audit means client. Take the first 200 sales in September month. Take 4 blocks of 50 bills. Once the first item is selected, then the block continues. This is example of block sampling. You're able to understand? Block sampling means all of you. So once we complete this, I will also do revise from chart the sampling. So you will understand how easy to sync the chart book in this. Okay. So with this methods of sampling and all, we understood thoroughly. Confident, all of you? Yes. Now another important discussion, sampling risk discussion. Sampling risk. What is a sampling risk? Look at, we have seen the word risk, audit risk, right? What is audit risk? Audit risk is a function of risk of material misstatement and detection. This is the one which we discussed in our risk assessment topic. Okay, you see, sampling discussion, see how many interlinked topics are there. That's the reason I kept it last. Many will discuss sampling chapter at the beginning. I can also discuss, but that will be very vague. You need to listen to this chapter generally at last, after completing 450, after completing 265, after completing 315. Then you will have a better understanding. Some topics in sampling anybody can understand. Until now, whatever we discussed, anybody can understand. But from here on, only if you are 100% good in that, you can understand better. Okay, that's it. So audit risk. Audit risk means what? Actually, what is audit risk? Suppose financial statements are materially misstated. Financial statements are materially misstated, but you gave an unmodified opinion on this. When the financials are materially misstated and you are giving unmodified opinion, means you are saying indirectly everything is true and fair. It's a risk or not? Tomorrow, if everything is discovered, audit, everybody will start questioning auditor. What happened? Okay, if I carefully did the work, if I am able to prove, that's fine, but people will start questioning me, right? Suppose financials they are true and fair actually, but in the sample I selected, I found so many mistakes. As a whole population, not much, but in sample few mistakes I found. But what I thought, in population also mistakes will be there. I gave adverse opinion. Actually, financial statements are as a whole true and fair technically. Qualified opinion is enough there, but I interpreted so negatively and I gave adverse opinion. And tomorrow suddenly a big fraud was discovered. Will anybody come and question me? Will anybody come and question me? Nobody. Why? Because I already gave adverse opinion. I already test everything is not true and fair. They're not at all true and fair. I already told. So what people will come and question me? But they will question me when I say everything is true and fair and tomorrow a fraud is discovered. Even though I did my work honestly. Yes or no? Suppose I conducted audit carelessly and I gave an adverse opinion. Careless. That's actually I am careless. I misinterpreted the client position and I gave adverse opinion carelessly. Okay. And everything is actually true and fair. Tomorrow, I mean, whether fraud discovered or not, keep it aside. My risk is zero. That's why in risk assessment topic, I told adverse opinion means zero audit risk. Audit risk is zero. Because audit risk definition talks about risk of expressing inappropriate opinion on the financial statements which are materially misstated. When the financial statements are materially misstated, you are giving inappropriate opinion. When the financials are materially misstated, what is right opinion? Adverse. But you are inappropriately giving unqualified opinion, for example. That is audit risk. Now, why audit risk? Because of two reasons. One is risk of MMS. Mistakes are there. And okay, mistakes are there, but I'm not detecting it. See, if mistakes are there in financials, if I also discover them, why will I give unmodified opinion? I would have given qualified or adverse, right? But the problem is mistakes are there in financials, but I am not able to discover them. Detection risk, not able to detect. Detection risk. Detection means finding out. Detection risk means not finding out. I'm unable to detect misstatement in the financials. That is the reason why I am giving wrong opinions. Financials are materially misstated, but I couldn't discover. Since I couldn't discover, I gave unmodified opinion on the financials which are materially misstated. Why you are unable to detect? Like why you are unable to detect? What is the reason? Detection risk. What is the logic? Why are you unable to detect? There are two reasons. One is sampling risk. Another one, non-sampling. One is sampling risk. Another one, non-sampling. For example, non-sampling risk means what? What is a non-sampling risk? Here, you are here. There is some risk. Like this, ultimately, risk means what? We are taking a wrong conclusion. Ultimately, erroneous conclusion. Here, I am taking a wrong conclusion because of sampling, because of other than sampling. Other than sampling. Non-sampling risk means risk that the auditor reaches an erroneous conclusion for any reason other than sampling risk. What is sampling risk? First, let us finish that and then come back to non-sampling risk. What is sampling risk? Risk that auditor's conclusions based on sample may be different from the conclusion if entire population was tested. See how beautifully the definition is stated. Auditor's conclusion based on sample differs from the conclusion if at all the entire population was. When I selected sample, no, suppose out of 300 bills, 30 bills I verified. 30 bills I verified, 30 bills everything I felt true and fair. But actually in the remaining 270 many frauds were there. But I didn't get that. I selected only 30. They don't have any fraud and error. Based on 30, since these 30 were right, I thought remaining 270 are also right. I thought remaining 270 are also right. Now based on 30, I am taking a wrong conclusion on the population. Suppose tell me, if at all I verified entire 300 transaction, will I get the same conclusion? Normally what I did is 300 items were there. 30 items I selected a sample. All the 30 were true and fair. Naturally what I will conclude about remaining 270, they will also be true and fair. But if at all I verify entire remaining 270 also, will I get the same satisfaction, same conclusion? No. Auditor's conclusion based on sample will be different from the conclusion if at all entire population is tested. If the conclusions are going to be different between sample testing and population testing, then sample is not represented. That is called sampling risk. What is it called as? Sampling risk. To understand it clearly, for example, 300 purchase bills were there. Okay, out of that 30 bills I selected. You know, in this purchases, no, so many frauds and errors happen. But actually, the 30 bills which I selected, no, they do not have any error. They don't have any error. These frauds and all happened in the remaining 270. But I am unlucky. When I select 30 items, no, in this 30 I in-depthly verified. So depth I verified. And I found there everything is true and fair. Everything is true and fair. Now tell me naturally what I will conclude. Since I selected only 30, since I verified only 30, since they are true and fair, I naturally conclude remaining 270 are also true and fair. This is called sampling risk. Now tell me, in this case, is the 30 bills which I selected representative of the population? Are they representative of the population? No. Why? Population has so many frauds and errors, but the sample which you selected does not have any fraud and error, means your sample is not representative. But remember, as an auditor, we don't know whether it is truly representative or not. We don't know, but we will try our best to select a representative population. We try our best to make sure the sample is representative, but in reality, is it really representative or not? Nobody knows. How to make sure the sample is representative of population? That's why what we do, we study first population. 300 items, what are all there? We study high value, low value, which month, which quarter, which item, all that we study. We divide that into multiple parts and select a sample from each part. We did our best. Till at the end of the day, the sample which you selected might not reflect all the characteristics of population. Able to understand. So risk that the auditor's conclusion based on sample are different from the conclusion if the entire population was subject to testing. If at all entire population is tested, you get a different conclusion. You tested sample, you got a different conclusion. If you test the population, you would have got some other conclusion. If that is the scenario, your sampling is risk. A sample is not represented. Risk of selecting inappropriate sample. Risk of selecting non-representative sample is nothing but sample. Okay, sampling. Now tell me, sampling risk will always be there. It's inherent. Can we avoid it? We can't. It's impossible. Yes or no? Now, so this is also known as risk of selecting inappropriate sample. Sampling risk is also called as risk of selecting inappropriate sampling. Now, what is the, because of sampling risk, what is the consequence? Like, what is the consequence because of sampling risk? Two consequences. In test of controls, two types of consequences. In test of details, two types of consequences. Suppose I'm checking internal controls. Suppose 30 purchase bills I verified. Out of 300 bills, 30 bills I verified. In this 30 bills, 5 bills does not have authorization. The voucher, no, it is not authorized properly. Without authorization, they paid money. Actually, only for those 5 transactions will mistake happen like that. Remaining 295 were correct. But as an auditor, what I will feel, out of 35 were missing means out of 300, 50 will be missing. That's how I interpret. Yes or no? What I told you, your internal controls are not good. I told directly to the director, your internal controls are ineffective. I directly wrote a comment, ineffective internal control. A possibility. Yes or no? Now, tell me, if I do not trust controls, what will happen in audit? If at all, when I'm testing controls, I found so many deviations. When I'm testing internal control, I found many deviations from SOPs. What company actual process, what they're actually following. If there is a deviation in the sample which I tested, if I find many deviations, what I will do generally, I will stop trusting controls. I will be focusing more of actual transactions. I will be testing more transactions. My extent of testing will be increased. Audit efficiency will affect. In internal controls, with respect to internal controls, the sampling risk is two types. One is risk of over reliance. What is that? Risk of over reliance. Another one, risk of under reliance. Risk of under reliance means what? I'm not relying controls, but actually the controls are working good. 3 or 4 transactions only it happened. Predominantly the controls are working effective. But within the sample, those 3 or 4 mistakes are bad luck, company bad luck. I found those 3 or 4 issues within the sample only. Now, within the sample itself, I found 3-4 deviations. I naturally assume that entire transactions are having so many deviations, correct? Because of this, I will not trust the control, even though the control is effective. Actually, control is effective, but I am not trusting it because in my sample, I found deviation. In the sample which I selected, I found some deviations, risk of under reliance. Because of this, what happens? Audit only time waste. What will happen because of under reliance? If I don't trust internal control, what will happen? I will be doing more substantive testing. So treating controls less effective than they actually are. They're actually effective, but you are treating them as less effective. Because of this, what will happen? Your audit efficiency will affect. It will affect audit efficiency. You unnecessarily spend more time. Yes or no? Results in additional work to verify conclusions. This is at least okay. This risk is not bad for auditor. Actually, it's good only. Which is more dangerous, over reliance. Over reliance means what? Actually control is not effective, but I am thinking it is more effective. Because of this, what will happen? Audit risk will increase. So no, treating controls as more effective than they actually are. They're not effective. Actually, internal controls are not effective, but whatever invoices I checked, no, their controls are properly implemented. Their controls are properly followed, properly adhered to. I felt everywhere controls are effective. I thought like that. Naturally, what will happen? I will decrease my sample size. Generally, we will, if controls are effective, that the number of transactions that we test will decrease. If controls are weak, the number of transactions that we test increases. One point we have seen: sufficiency and appropriateness of audit evidence, effectiveness of internal control. If the internal controls are effective, lesser evidences we require. If controls are not effective, we want more evidence. Exactly. Yes or no? Suppose if I believe controls are very good, if I am thinking that controls are more effective, actually they are not. They are very ineffective. So many fraud centers errors all happen because of control weaknesses. But somewhere I felt controls are effective. Naturally, what will happen? I will test less number of items. This leads to a wrong opinion tomorrow. So FX audit effectiveness, you see the words so cleverly they used. Audit effectiveness increases. Sorry, audit effectiveness decreases. You see here, audit efficiency decreases. Actually, audit efficiency decreases because of under-reliance. But because of over-reliance, efficiency, you will be doing work efficiently. Less time only you will invest. But audit output will be wrong. Effectiveness means talking about output. Audit opinion might go wrong. So FX audit effectiveness and may lead to inappropriate audit opinion. May lead to an inappropriate audit opinion. Easy or not? Yes or no? Next. So because of sampling risk, what is the impact of sampling risk on test of controls? 3 marks question. Sampling risk in case of test of controls. Like, what is the impact of sampling risk in case of test of control? In test of controls, the sampling risk has 2 types of impact: risk of over reliance, risk of under reliance. Risk of under reliance means what? Control is effective, but you are treating it as not effective. Because of this, what will happen? Your efficiency will affect. You will be testing more. Risk of over reliance means what? Control is not at all effective, but you are thinking it is effective. Yes or no? Because of this, audit effectiveness will affect. Audit effectiveness will go wrong. Yes or no? And may lead to a wrong opinion. Now, in case of test of detail, sampling risk has 2 different types of conclusion. One is risk of incorrect acceptance, risk of incorrect rejection. Like, suppose I am verifying 300 purchase transactions. 300 transactions are there. I am verifying only 30. Within this 30, I found 3 mistakes. I found 3 big mistakes I found. Actually, in the entire 300 also, only these 3 mistakes are there. Remaining 297 are correct only. Only 3 mistakes. But management's bad luck, those 3 mistakes were there as part of my sample itself. What will happen because of this? Out of 30, 3 mistakes happened. Out of 300, for sure, 30 mistakes would have happened. I rejected entire population saying it's not true and fair. Purchases are not true and fair, I said to the management, based on sample. Is this a risk or not? But tell me, this is not a risk for the auditor. Why? If I say everything is wrong when they are right, tomorrow if at all something went wrong, for example, nobody will question me. Risk of incorrect rejection, that is called as. What is it called as? Risk of incorrect rejection. What is incorrect rejection? Concluding that a misstatement exists when it does not. You are concluding that so many mistakes are there. Actually, it is not. Only 3 are there. You are thinking 30 were there. Does not affect your risk. It does not affect your audit risk, because audit risk means your opinion and all. Like, audit risk won't be affected, because audit risk definition is what? When financials are materially misstated, You are giving unmodified opinion. That only audit risk. Their financials are free from MMS. They are free from MMS. They are absolutely true and fair. But you are giving adverse opinion. This is not audit risk. Audit risk definition does not cover this parameter. You clear. Next, incorrect acceptance. What is incorrect acceptance? You know, there are so many frauds in purchases, but in the 30 items which you selected, in that also fraud is there, or may not be there. We don't know, but you did not discover. Naturally, what you will do, you will accept entire financials as you are accepting purchases as true and fair, when in fact they are not. That's an incorrect acceptance. Because of this, what will happen? Auditor might end up giving a inappropriate opinion, concluding that no misstatement exists when in fact it does. Leads to audit risk. These are the erroneous conclusions that will arise because of sampling risk. Because of sampling risk, these kinds of erroneous conclusions we may take. Are you confident? Next. Now, non-sampling risk. So finally, what is a sampling risk? Ultimately, risk that auditor's conclusions might be different if the test sample, risk that auditor's conclusion based on sample may differ from the conclusions if at all entire population is tested. Indirectly, inappropriate sampling is sampling risk. Sampling risk have different impacts. Okay, on controls, the impact is two types: over reliance, under reliance. On test of details, incorrect acceptance, incorrect rejection. That's it. Clear? Next, non-sampling risk. What is non-sampling? It is a risk that the auditor reaches an erroneous conclusion for any reason other than sampling risk. For example, use of inappropriate audit procedure, misinterpretation of audit evidence. You know, like actually I saw a client gave me, suppose a client has recently purchased one building. Okay, they showed that it is our building, and the funds were also transferred from the bank statement to vendor, some third party account, and building name, everything the company showed me, registration document they showed me, but actually registration document is fake, and it's actually visible also easily, it's visible, but I interpreted it as genuine. Here, is it because of sampler? Is there any sample involved here? No, but I am taking a wrong conclusion because of some other judgmental reason. This is non-sampling risk. So non-sampling risk cannot be mathematically measured. Using wrong item, wrong procedures, using wrong your procedures are not right. Suppose when inventory is with third party, you need to get confirmation from third party, but what auditor is doing, he is checking whether goods are sent to third party or not. He is checking goods outward only. Whether he has the goods or not, he is not checking. Your subject is wrong. Your application of subject is wrong. That is your mistake. That is non-sampling risk. And sources, causes of non-sampling risk: human mistakes, misinterpreting sampling results, relying on wrong data. Data is wrong. What can be done? The data itself is wrong. So these are all non-sampling risk. This is an error. Here you are doing something wrong, not because of sample issues, not because of sampling related reasons, but some other reasons. If auditor is taking some wrong conclusion not because of sampling, that risk is called as non-sampling risk. Because of sample, if the auditor is taking a wrong conclusion, that's a sampling risk. Yes or no? That's it. Then we have few more discussion: performing procedures on sampling, and nature and cause of deviation, projection of misstatement. Then we need to discuss population term. Yes or no? Population means what? Characteristics of population and sample size. If these 5 or 6 topics, if it is done, sampling chapter will be done. Until now you're able to easily understand? Yeah. Just 2 minutes, we'll continue. 2 minutes. Until now whatever is happened, just give a brief revision. Then we will continue discussion about population and rest of the content. Now we'll continue on population definition and characteristics of population. Population means what? Entire set of data, correct? From where sample is selected and conclusions are drawn. Conclusions are never drawn on sample. Conclusion is always taken on population. Yes or no? We give opinion on population. We don't give opinion on sample. So population refers to entire set of data from which a sample is selected and conclusions are drawn from. Yes or no? Characteristics. Obviously, the sample items must be representative of population. So the following are the important characteristics of population. Population must be first appropriate. If I want to verify purchases, I must verify only from purchase. Further, I want to verify quarter one purchases. I should verify population of purchases must also belong to quarter one. So the population used for sampling must be relevant to the specific audit objective, as projections are based on population, made on population. Audit procedures, no, they are applied on sample, but conclusions are drawn on the population. Now, population must be appropriate. You know, for appropriateness in SA 500, we told one point. For example, you want to test for overstatement. Here itself we give, for testing overstatements of receivable, use accounts receivable listing. For example, no, recorded transaction, are they overstated? I mean, I want to know whether purchases are overstated. Whatever recorded, you test them, you will understand overstatement. Suppose purchases understated, I want to know. I want to know, like, there are 1000 purchases, but company recorded only 900. 100 items they didn't record. I want to know like that. Recorded 900 you will verify, or some other you will verify. Suppose company said there are 1000 purchase transactions. I am wondering, 1000 chance illa. There is no chance at all. It won't be 1000 at all. 900 or 950 transaction, 1000 won't be there. Whatever 1000 they recorded, if you test them, you will understand whether are they genuine or not. Suppose company recorded 900 and you are thinking 1000. Testing that 900 will not discover remaining 100. Some other document you need to check. Yes or no? So what is appropriate population depends upon direction of testing. What are you testing? For that, what population you need to verify? You want to test you want to verify overstatement. You want to verify overstatement, like whatever recorded transactions, are they really existing? Indirectly, overstatements means over occurrence we are testing. What assertion we are testing? Occurrence assertion we are testing. Overstatement testing means we are indirectly testing occurrence. Did it really occur? So for testing occurrence, no, recorded items, listing nothing but recorded items you should check. Testing understatement testing means indirectly what, you know, completeness assertion, checking whether all the transactions are completely accounted. Are they completely accounted means, what is my question here? Are there any missing items? Suppose purchases 900 bills are there. Are they only 900 or more than that? I want to know. If I want to know, is there any missing transactions? What should I check? Should I check recorded transaction to discover missing transaction, or should I check some other set of documents? Obviously some other set of, for example, use subsequent disbursements, unpaid invoices. For example, no, I want to know whether purchases are properly recorded. All purchase transactions are properly recorded. I feel purchases are under recorded. Verify store register. In store register, if more inverts are there, but purchase is not reflected, then purchase is missing. So to know whether understatement is there, you should not record the actual, that original record. You should verify some other incidental supporting records. To check overstatement, verify recorded item. Is it genuine or not? Am I right? Sir, no? That's it. Suppose, no, very simple. In a classroom, some 100 students, some 70 students are sitting. I want to verify absentees. Should I count the 70 and then verify absentees? I should verify attendance book and then compare here who are all present, so that remaining will be coming out. Yes or no? Left out. Who are absent? Like who are absent? I can't come to classroom and check who are absent. Yes or no? Of course, that will also help. See, how should I check? I should not check, like, for example, no, whoever have attended, they wrote their names on paper. That name, if that paper, if I see, I don't get absentees list. I should see original student enrollment register and see who attended. The balance will be missing list. Yes or no? Suppose, no, all 100 people came, 100 people signed, and I want to know whether all of them there or not. Should I check attendance register? Should I come to classroom and check? Exactly. Able to understand? So whether overstatement of purchases, are they overstated? Check the recorded one. Is it genuine or not? You will understand. Is purchase understated? Recorded one, I don't have a problem. I am thinking about unrecorded items. How do I know whether they are unrecorded items? Check some incidental records. E-way bills you check. Stock registers you check. Gate entry registers you check. Yes or no? This will make you discover unrecorded items. Clear, all of you? So what is population? Appropriate population means what you are testing, for that what is to be tested exactly, that is population appropriate. So the population user for sampling must be relevant to the specific objective. What is objective? My objective is testing overstatement or testing understatement. My audit objective is testing existence or occurrence or completeness. Depends upon the objective, population will vary. Correct? Completeness. And remember, population not only appropriate, you should also make sure it is complete. Population must include every item throughout the entire audit period. All the purchase transactions must be there. First, make sure the population is complete. Then you select the sample. Only then you will select sample from all parts of the population. Suppose if population is incomplete. Suppose company has 3 purchase registers. 2 registers only they gave you. You will be selecting sample only from 2 registers. The 3rd register you ignored. So first, before you select sample, first determine what exactly the population, what is the right population, is that population complete, all the transactions recorded or not. Then take the 100% record, then from them you select the sample. Correct? A complete population ensures that conclusions drawn are reasonable. If testing, if at all you are testing a control activity, the population must cover all activities related to the control throughout the period. Just a simple example they gave, okay, but you can correlate it with purchase register, that one. Reliability. The population must be sufficiently complete and accurate for audit sampling. Auditor perform procedures to ensure population is reliable. Is this correct population or not? Correct sales register or not? Correct purchase register or not? Like companies will have financial data, like accounting data in a software. So generally that is more reliable. Reliable evidence. Auditor shall obtain evidence about accuracy and source of the population. If the population is not reliable, sample will not be relevant for the audit objective. Like to make your reliability of population, I will tell you an example. For example, you go to some billing stores, Reliance Trends, DMart, everywhere, no? Salesperson is there, right? They will bill you. Okay, you pay the money by card, phone pay, something. They will maintain one book, manual book, where they will write bill value, bill number, how customer paid. Manually they will write just for their internal records. Yes or no? Now you want to know total sales happened how many. Will you see the system or will you see that book? System is more reliable than that book. Correct? This is for some other internal objective, like this person how many he billed. For that reason they might be maintaining that notebook. Able to visualize this. At some places they will do this. So population must be reliable. Reliability means like you should take the right source. So the population must be sufficiently complete. It should be complete, it should be accurate, so that you can apply sampling on that. So auditor perform procedures on the sample only when the population is reliable. Auditor shall obtain evidence about accuracy and source of the population. If the population is not reliable, sample will not be relevant for audit objective. Yes or no? Sampling will not be useful much. Sometimes in exam, no, they'll ask you, write about completeness and reliability of population. 1.5 mark, 1.5 mark, 3 marks. Okay, there are certain characteristics which a population must have, from where sample must be selected. What are the characteristics of the population? Appropriateness, completeness, reliability. Actually, if you see, in audit evidence chapter, we saw appropriateness word, nothing but relevant and reliable. So in audit evidence topic, we understood that appropriateness means relevance and reliability. But whereas here again, appropriateness, reliability were discussed differently. Actually, they are interlinked. That's it. Clear? Confident? So what are characteristics of population? Population means entire set of data from where sample is selected and conclusions are drawn. Sample must be representative of population. That is the ultimate objective. For that reason, you need to see characteristics of the population. Appropriateness. So the population user for sampling procedures must be relevant to the audit objective. Audit procedure applied on sample and conclusions are drawn on population. For example, if you are testing overstatement, indirectly occurrence, the appropriate population must be recorded transactions listing. Whatever the list of receivables were there, that is recorded one. Okay, for testing understatement, nothing but completeness, subsequent payments, unpaid invoices, GRN, goods received notes, e-way bills, these are all the proper items. Completeness. Population must include all the relevant items. Only then the conclusions drawn are reasonable. Example you can ignore. Reliability. The population must be sufficiently complete and accurate, and auditor will perform procedures only when the population is reliable. Easy or not? All of you, sometimes they'll ask you, write about characteristics of, write any two characteristics of population with example. You can't write some other example also, you should write this example, and that is also one issue. Example, for example, here you see here, if control activity is tested, the population must cover all activities related to the control throughout the period. Here throughout the period is what population is called as. Throughout the period is called population. Throughout the period is nothing but what, 365 days, whether that control is active or not. For example, you want to verify whether security guard, that exit controls are proper or not in a store. So the store said, management said security guard will be there, sir. We have 3 shifts security guard. Okay, every 6 hours one security guard will come. Our store is open for totally 18 hours. Okay, morning 10 to evening 12. Sometime they told. Okay, so our evening 2. It's a restaurant, for example. Security guard will be there every time. Whenever a customer taking parcel out, he will stamp and then give security guard. Okay. Now throughout the period I should cover 365 days. I will take attendance register. Yeah, just 1 minute. Yeah. So that's it. I mean, so 365 days attendance register, some proofs will be there whether he attended or not. So that entire register you should take. Getting the point? So with this population and characteristics of population, that concept is also over. Then once from the beginning, let us see what are all the points pending. Now we'll go with just pending points. Okay. So that is over. Now factors for extent of checking. Okay, this and a sample size question. This I will come back later. Sample size point also I'll come back to it later. Yeah, then the first remaining I'll finish and then come back to the intro. I mean that pending points initially. Performing audit procedures on selected sample. Fine. For example, 300 purchase bills are there. I selected 30 bills. Now on those 30 bills I should perform my whatever the procedures I thought. Verification, I should verify. Okay, amount correct, name correct, all that is correct or not. So the auditor performs audit procedures appropriate to the purpose on the each item selected. See, my audit objective might be I want to test occurrence, I want to test completeness, whatever. Depending upon my audit objective, based on the sample, I just apply my testing. Whatever I want to verify, I'll verify that. If a procedure is not applicable to the selected item, the auditor shall perform it on a replacement item. What does it mean? I selected 30 purchase invoices, right? In that one is a cancelled invoice. I thought of verifying 30 purchase bills, but one item what I got is actually a cancelled purchase. It's a purchase cancelled. They just printed bill, but customer did not take the delivery also. It's not even purchase written. It's a cancelled purchase. Now tell me, I want to verify 30 samples as a whole. One item, it's cancelled item where I am unable to verify. Then what should I do? I should replace with another item. Then I will ask system to give me one more random number. Then system will give one more random number. I will take that number or that invoice once again. So if a procedure is not applicable to the selected item, the auditor shall perform it on a replacement item. For example, if replacement is also not possible or reasonable, the auditor applies an alternative procedures. Sometimes sometimes it may not be cancelled purchase, but what I want to verify may not be possible there. What I want to verify may not be possible there. Alternative I will check. To be precise, I can say, if a procedure is not applicable to the selected item, the auditor perform it on actually they gave example, replacement item example they give. While testing payment authorization, cancel check, replace with a valid check. Nothing but purchase order cancel, new purchase order I will select. Unable to apply procedure. If sales document is lost, confirmation can be sought from debtor. For example, invoice is missing. Suppose purchase transaction is there, but voucher is missing. Out of 30, one item is there, purchase is there, but original voucher, invoice, something is missing. Then I will verify subsequent payment proof to them or external confirmation. Something I will have to verify. Are you getting it? Next. So, if replacement is not possible or reasonable, the auditor will apply alternative procedure. Suppose you are unable to apply procedures. If auditor cannot apply procedure or an alternative, then the item is treated as deviation or misstatement. In the recent CA final paper, this is what tested in MCQ. And many final students could not understand this because this is inter-syllabus. In final, no, entire audit sampling is given in one chart in final book itself. Okay, but we have a question bank. Inside that question bank, this discussion is there. Okay, some past exam question, some MTP, RTP, somewhere this discussion is there. But who will read? They only read the notes, chat notes. Yes or no? That too, some chat notes in the market, they don't even cover any content. And when they see this question for the first time in CA final paper, they were shocked. Like mind blowing completely. Recent May 25 paper, I'll show CA final May 25 better. I think this time they have given suggest answers, no? Already it came. Suggest answers were released May 25. CA final paper, okay, May 25. Advanced auditing. MCQs. Directly, can we search here? Replacement. Here you see, during testing, thus the following scenarios arose. A selected item could not be tested because supporting documentation was unavailable. Some purchase transaction we selected, supporting document is not available, so we are unable to apply audit procedure. Actually here, no, if at all transaction itself is cancelled, I will replace it. If supporting document is missing, I will not replace the item. I will try to perform some other procedure so that I want to know whether the transaction is genuine or not. The auditor is unable to apply designed audit procedure since documentation relating to sales is lost, like sale order record, sales invoice, all that. One item, that is one item, okay. During testing, the following scenarios, this is actually case study. Second scenario, second issue. A deviation was identified in the sample that could potentially indicate a misstatement in the population. A deviation was identified in sample that could potentially indicate a misstatement in population. The auditor found an item that is seemed anomalous but required further procedure to confirm that it was not representative of population. All this we are going to get in our sampling topic. Now, what is the MCQ? What is the MCQ actually? You see. Based on 530, which of the following is most appropriate response for the auditor in handling these situations while performing sampling test? If audit procedure is not applicable to the selected item, then auditor shall perform only the alternative procedure but not only replacement. That's wrong. In our book also we saw, if audit procedure is not applicable on selected item, replacement. Or if replacement is not possible or not reasonable, then alternative procedure. In case when auditor considers a misstatement or deviation discovered in a sample to be an anomaly, the auditor shall obtain high degree of certainty that such misstatement is representative of population. Very simple. In case when auditor considered misstatement or deviation discovered in sample to be an anomaly, the auditor shall obtain high degree of certainty that such misstatement or deviation is actually it's non-representative of population. Fine, we'll come back. Here, what is the question they asked? Which of the following is the most appropriate response for the auditor in handling this situation? Okay, fine. See, rely solely on the result of sample and assume that deviations no. If the auditor is unable to apply designed audit procedure or suitable procedure to a selected item, the auditor shall treat the item as misstatement. This is correct answer. If an auditor is unable to apply designed procedure or alternative, we are unable to apply. The transaction is there, but we are unable to apply alternative procedure. It means simply we are unable to perform audit on that item, which means that is either a deviation or misstatement. That item is treated as either misstatement or deviation. That only here they gave, you see. If auditor is unable to apply procedures or an alternative, then the item is treated as deviation in case of control testing, or the item is treated as misstatement in case of test of details. This statement is wrong. Here no, actually, here if you see, suppose no, here no, if at all the word not is used here, then this answer is also right. They just eliminated the word not. That sentence also I will show you. That sentence also I will show you. You see here, if an auditor consider a misstatement or deviation is to be anomaly, they must obtain high degree of certainty that it is not representative of population. You see how sensitive the MCQ is. Actually, that question is supposed to be in CA inter question paper, but they tested in final where they don't even study this. Understood? That May 25 CA final paper, how sensitive these terms are. Clear, all of you? This is how even in CA inter will be tested. For me, no, CA inter audit paper is generally tougher than CA final paper, audit paper. This time it was reverse. CA inter audit paper was moderate. Final audit paper was very tough because they tested all fundamentals. They tested all in depth. Whatever we study in CA inter, actually CA inter audit is in depth than final. People will think in a different way. CA inter audit is very in depth because SA 530 here we have 11 pages, 12 pages. In final we hardly study in 1 page. We study briefly. That's why students suffered a lot. Because ICA thinks what? He qualified CA inter, he would have in-depth knowledge, he will understand sentence and meanings or context, everything they will think. But they don't know reality, right? Yes or no? They don't know that it's an important question batch, chat book batch. They don't know, right? So they tested in-depth question, students failed. This is May 25 CA final audit question. You understood? So your inter audit, if you are so strong, final audit will be very, very better for you. Inter audit you are weak, final audit also you will be inherently weak. You cannot be strong in final audit and weak in inter audit because the syllabus is same. But in final we have various other chapters. Additional chapters were there beyond inter. Understood? So this and all we are going to discuss now. Anomaly, non-anomaly, what is representative, what is non-representative, all that we need to discuss. Until now clear, everybody? Now you see once again. The auditor, ultimately, write about, in exam they'll ask you this question directly. 4 marks. Write about performing procedures on selected sample. Write about performing audit procedures on selected sample. Like this they may ask you. So performing means what? First you need to perform audit procedures appropriate to the purpose on each item. Suppose I want to test existence. I want to know whether purchases are correct. Occurrence I want to test because 1000 invoices are there. I want to know whether really 1000 is there or is there any overstated I want to check. Okay. Take last March, last month cutoff. Remember? March month, last 50 invoices take. See whether all corresponding documents and all see properly whether they're genuine transaction or not, check. Suppose no. If a procedure is not applicable on the selected item, the auditor shall perform it on a replacement item. If the selected item is cancelled item completely, then I'll replace. In the selected item, some supporting documents are missing. Where I can't verify the way I thought, then go for alternative way of testing. See, for me, what I thought, for example, for all purchases which are made, I want to test whether they are existing or not. I want to know whether the purchase transaction real or not. For that, what I thought, I will check e-way bill, I thought. But in one of the case, e-way bill is missing. As a whole transaction is there, but e-way bill is missing. Okay, if e-way bill is missing, what I will do? Okay, I will do one thing. Transport copy I will check. Alternative item. Purchase itself is cancelled. Then I will replace with another transaction. I am unable to apply procedure, but the transaction is there, but supporting document is missing. I will apply alternative procedure. Suppose alternatively also I cannot check. Purchase document is there, e-way bill is missing, and I don't know whether the really goods are received or not. I am unable to check altogether. Third party, I asked management, sir, can I send confirmation to third party? No. They said no. Typically, when purchase transaction is there, we received units also, company received units. That's what they recorded in books, but I am unable to check whether they recorded or not. Ultimately, I am unable to check. I will consider that as a misstatement. I will consider that as a misstatement because ultimately I am unable to apply audit procedure. So I will consider that as misstatement or absence of evidence. Something I will treat it as. I will treat it as a deviation or misstatement. So if replacement is not possible or replacement is not reasonable there, replacement is not a correct option there, then I will apply an alternative procedure. There alternative I will do audit. If auditor cannot apply either the procedure or alternative, the item is treated as deviation or misstatement. You see how this concept is tested as a big 2 marks MCQ. Understood? Next. Examples they have already given here. Okay. Suitable alternative procedure. Examining cash receipts and supporting evidence when no reply is received from a confirmation. Suppose no. First I try to apply alternative. Suppose sales document is lost. I sent third party confirmation. He also did not reply. Then I will try to see whether we received money or not. Some other alternative I will try. So alternative procedure, suitable alternative means if alternative one is not working, then another alternative. That alternative is called a suitable alternative. That's how they refer to you. Next, manual bill in a computerized. Suppose if a manual bill got selected in a computerized sales test, I want suppose no, in the company, there are two types of sales. Manually sales are there, manual bills they are giving, and computer sales are also there. For example, you go to you want to donate to a temple. The temple has an online website where you can donate, or temple also has in the temple some chair and table is there, some karta, some temple, some organizer is there who is maintaining a manual book. So temple is receiving donations in both the forms. You want to test whether manual bills are correctly there or not. But tell me, at the end of the day, all the bills, whether online donations and offline manual donations, both will be recorded in one ledger account only, right? I selected 40 samples with a view to test manual bills. But in the 40 bills, no, 5 samples which are electronic items were selected. What should I do? I will remove those 5, add these my 5 manual bills. That's it. So if a manual, here no, it is reverse. I want to test here automated bills, but manual got selected. That time what I will do? I will replace it. Able to understand? If a manual bill is selected in a computerized sales test, it can be replaced after verifying its correctness with the supporting document. Confident? So that's about performing procedures on selected items. A straight question can come or an MCQ can come. See, remember from this book, any line can be tested as an MCQ. Don't be like MCQs, this is important for question. No, nothing such. Anything can be tested as an MCQ. Anything can be tested as a descriptive. Confident? But if you listen to the class, 99% MCQs you can handle. But for descriptive paper only, you should revise thoroughly. Based on class, maximum you can get confidence for MCQs. Okay. Finally, now you applied audit procedure on sample. Once you apply audit procedure on sample, you will get an answer. What answer you will get? Either you will be satisfied, yes, everything is fair, or you will identify deviations, or you will identify misstatements. Now you should interpret them. Interpret the deviation, interpret the mistake. You should interpret it. Why you should interpret it? Some mistakes are there. For example, in purchases, for example, e-way bill is missing. E-way bill is missing. And there is a purchase transaction, okay, for some 1000 units. And the value of the transaction is 10 lakh. And I want to know whether we really received these goods or not. Okay. For that, I decided to check e-way bill. But e-way bill is missing. I tried to apply this on an alternative item. For example, goods received note and transport copy I want to verify. They are also not available. Ultimately, I am unable to verify whether this 1000 units are received by the company in reality or not. I am unable to verify. Okay. Since I am unable to verify, I will classify this as a misstatement. Since I am unable to apply the designed audit procedure on a replacement or alternative, something I am unable to apply ultimately. So I will treat it as a misstatement or absence of evidence. Something I will treat, and I will decide to include this in my modified opinion. That framing, that opinion framing I will consider. This is a misstatement, correct? Now, okay, some bill is missing, right? For for example, I mean, this is one bill. This is one bill value. This is one bill. Actually, I selected 40 bills in my audit procedure for purchase testing. In 40, one bill is missing. For one transaction, e-way bill is missing. Actually, the company has totally 4,000 transactions. Company has totally 4,000 transactions. In that 40 only I selected. Out of 40 transactions, for one transaction, e-way bill is missing. Can I say out of 4,000, 100 transactions e-way bill will be missing pakka? Can I say like this? Can I say out of 40 transactions, in one transaction e-way bill is missing? Can I say in the 4,000, for 100 transactions also it will be missing only? Can I say like this? You're able to understand my question? No, I cannot. Because here, e-way bill is missing is not a repetitive nature. It's not a repetitive nature, correct? It's not repetitive. Accidentally one bill got missed. Out of 40, one bill got missed. Out of 4,000, how many missed? You can't correlate like that. You can't extrapolate like that. So every deviation that you are finding, every mistake that you are finding, sometimes they may not be there in other parts. It is there only specific to that. It is only specific to that. For example, no, examiner is valuing your answer sheet. The question you wrote wrong answer. Can examiner say remaining also will be wrong only and then directly without validation? No. Correct? Huh? So that is called non-representative, non-repetitive. That is actually called as non-repetitive. Non-repetitive is called as anomaly. Anomaly. For example, one more example I'll tell you from exam validation point of view. For a particular question, suppose I'm verifying I'm an auditing paper validation I'm doing. 100 papers I have. First 10 students for a particular question, everybody wrote a wrong answer. Can I say remaining 90 also will do the same? These 10 are anomalies. These 10 are anomalies. Are you getting the point? Anomaly means what? Just because here that mistake is there, that doesn't mean there also mistake will be there. Unless every one of them copied. Suppose if valuationer got an intimation that in that particular exam center, all 100 students copied from one answer only. First student, whatever answer is there, remaining 99 students also same answer will be there, is what I got to know. If here first student answer is wrong, I can straight away conclude that remaining 99 students answer will also be wrong. That is non-anomaly. Non-anomaly means what? Here repetitive. Anomaly means what? Non-repetitive. Suppose no, in normal, in business environment, you know, for example, 1 lakh rupee they are entering bill value. By mistake they enter 10,000 rupees. Bill value actually 1 lakh, but they by mistake enter 10,000 only as purchase value or expenditure value. Because of this, expense has been understated, profit has been overstated. Now, a 1 lakh item is recorded as 10k. Based on this, can I say every 10k item is 1 lakh only? My question is, 1 lakh rupee worth of transaction is recorded as 10,000 in one of the scenario. At one scenario, that day accountant was on huge stress. Some reason, instead of typing 5 zeros, he typed 4 zeros and pressed enter and closed the books of accounts also. Okay, happened, I found out this. Based on this, can I say every 10,000 rupees entry is actually a 1 lakh entry? Can I say that? You can't. Exactly. So here, the mistake which I identified is anomaly. You know, like why this analysis is important? You need to identify the nature and cause of misstatement, deviation or misstatement. Why? What is the nature of mistake? What is the cause? Why it is happened? You need to understand the nature and cause so that whether to project it or not. Some mistakes we will project. Some mistakes we will not project. Are you getting the point? For example, company is giving discount. Company is giving discount. Okay. How much discount? Some 17% discount they are giving. Some 17% discount they are giving to existing customers. To existing customers. Existing customers as on 31st March 2024. For them only the discount will apply. Whoever is logging into the company website then after, for them coupon will not apply. Okay, coupon will not apply. So I am selecting audit sample from 1st April 2024 to 31st March 2025, current year data. I am doing audit. Okay, 24-25 data I am doing audit. In this, for some 5 bills, I found this discount is applied. For 5 customers, they have this 17% discount coupon is applied to them. Array, these customers are newly added into the company this year only. The 17% as per the company policy should not apply to them. Are you getting it? It should not be applied to them. I got information. I discovered this mistake. Now, when I discovered this mistake, right? First, I should investigate why 17% discount is applied to these 5 customers. I want to investigate further. When I see coupon designing, discount coupon designing, every coupon will be having some settings. To which customers it should go, to which phone numbers it should go, like that some settings will be there. When I open the settings, they forgot to select the 31st March data customers. Because of that, anybody whoever knows that coupon, if they apply, they will get the discount. Are you getting the point? Now tell me, here 5 customers only the 17% discount is there, or many more will be there? Many more will be there. Repetitive in nature. This is non-anomaly. This is called as non-anomaly. Non-anomaly means what? Repetitive. Anomaly means what? Non-repetitive. Able to understand. So now, tell me, by default, If out of 100 sample, if one mistake is there, out of 10,000, these many mistakes, by default everybody will project. That's what we assume. By default we have to project. When we will not project, then the mistake we identified is anomaly. If it is anomaly in nature, we will not project because it is not repetitive. It is only there. Now, if you want to prove that it is not repetitive, you need high degree of certainty. You need more evidences that it is not an anomaly. So it is an anomaly. To prove that it is anomaly, not repetitive, you need proof for that. If auditor considers a misstatement or deviation to be anomaly, if you want to treat that a mistake is an anomaly, like it is not repetitive, they must obtain high degree of certainty that it is not representative of population. The auditor has to obtain high degree of certainty. High degree of certainty means what? You need to obtain more evidences. You need to get more evidence. You need to prove that it is not anomaly. It is not representative of the population, that it is anomaly. If you want to prove that if a mistake is anomaly, a deviation is anomaly, sir, this is exceptional, sir, this is not there in the population. If you want to say that, get me more evidence that it is not a representative of population. Now you understood in the CA final that para? Yes or no? Yes, sir. So auditor performs additional procedure to ensure anomaly does not affect the remaining population. Correct? You need to perform additional work. You need to gather more evidences that it is anomaly. It don't have any impact on the other parts of the population. Clear? Next. Anomaly means what? Anomaly can be a misstatement in case of test of details. It is a deviation in case of test of controls. Remember, the word deviation is used in controls. Misstatement is used in details testing. So anomaly means either a misstatement or deviation that is demonstrably not representative of population. It is not representative of population. Sir, in a sample of 100, one mistake I found. It is anomaly. Only in that 100 it is there. In the remaining 10,000 it will not be there. That's called anomaly. You want to say that it is not there, get more evidences, perform more work, gather evidence that it is anomaly. So to prove some mistake as anomaly, you need evidence for that. Are you clear? Now look at. So nature and cause of deviation, nature and cause of misstatement. In one of the exam it was asked 4 marks questions. What is that? Auditor may observe that all deviations or misstatements generally share a common feature. Yes or no? Example, transaction type, location, period, product line. Generally, whenever we find some mistakes in audits, it will be repeated in similar transactions. Generally, that mistakes might be repeated. Auditor may identify all items in population with the same common feature and extend audit procedure to those items also. If at all you found a mistake, if that mistake feature is like that, similar transactions also might have a mistake. So you will verify other. Suppose in the given case, 5 customers in the current year who newly joined our company, who newly logged into our company, they also got discount. Why they got discount? When I investigate, the discount coupon was not correctly given. So automatically remaining customers, there might be many other customers who have got this discount. Such deviation or misstatements may be intentional and indicate a possibility of. Able to understand? Next. The auditor investigate nature and cause of deviation or misstatement. So generally, that is the reason why we investigate. Whenever there is a mistake, why it happened? What could be the background reason? Also evaluates their effect on the purpose of the audit procedure and other areas. If auditor consider that a misstatement to be an anomaly, they must obtain high degree. Whenever you're reading, deviation word you ignore and then read, so that you will get a better word, better understanding. First one, auditor may observe that all misstatements share common feature. Auditor may identify all items in the population have some common feature and extend audit procedures there also. These mistakes may be intentional. The auditor investigate the misstatements, also evaluate their effect on the purpose of audit procedure and other areas of the audit. If auditor consider misstatement to be anomaly, they must obtain high degree of certainty. Able to understand? Able to comprehend it? Next. So that's it. Then we need to understand the concept of projection. Which one we will project? Anomaly we will project, and non-anomalies. Non-anomalies only we will project. Projection means what? Out of 100 sample, I found 10 mistakes. Out of 10,000 population, how many mistakes will be there? That is called projection. Out of 100, 10 mistakes are there. Out of remaining 9,900, how many will be there? That is projection. First of all, in order to project, the mistakes characteristics must be such that the characteristics must be there in the other parts of the population, then only we can project. That is why we investigate nature and cause of mistake. If the mistake nature is such that it is not an anomaly, then we will extrapolate. If it is anomaly in nature, we don't extrapolate. Extrapolating means try to identify. We are trying to identify similar mistakes in population. That is called projection. Extrapolation means nothing but I found one mistake. I saw the characteristic is such that okay, this mistake might be repeated at other places also. Then I will try to find out mistakes in other places in the population. That is called projection. That activity is called as what? Projection. Which one we will project? Anomaly or non-anomaly? Non-anomaly we will project. Non-anomaly means repetitive nature. We will project. For example, no, the computer, no, that keyboard has a special button. For example, okay, that has 0 button is there, 00 button is there. 2 buttons are there on the keyboard. Yes or no? Sometimes an accountant while typing 00 he typed button, which means there is a high possibility that any transaction which is exactly dot 10,000, dot 100, dot 1 lakh, 10 lakh, dot 1 crore, all these actual transactions might have mistakes, because either he might have pressed 1 time 0 or 00. Chances are there. Yes or no? So here, if I know the cause of the mistake, sir, the keyboard has some 2 buttons, sir. Like actually here is generally I'm habituated to hold the keyboard where 0 is there, that place. But this time there is 00 button. So accidentally I typed multiple times. Here repetitive nature. So then what I will do in this case, I will take all transaction where exactly it has 100 rupees, 10,000 rupees, okay, 1,000 rupees, all exact dot transactions I will take. 2 lakhs exact dot transactions I will filter, and I will see real transaction value how much. Are you getting the point? Because here the nature of mistake is such that it might be present at other places also. But suppose it's a normal 0, one time only it happened. Yes or no? Then I will consider that as anomaly. Okay, only here it will be there. It won't be there at some other places. That's how I conclude. Are you clear? And you know, in reality, most of the mistakes that we find in audit are anomalies. That's why the concept of projection we rarely use. In real audits, we don't project it. We don't. Able to understand? Yes. Misstatement projection. The auditor projects misstatements to total population to get a broad view of the total scale of misstatement. Projection may not be sufficient to determine exact amount to be recorded. Just 1 minute. Okay, fine. I think we'll take 5 minutes gap and then continue. Okay, but it's already 1 hour 50 minutes continuously. We are okay. Some 5 minutes gap we'll take and then project this projection concept and evaluation of sample results. Only 3-4 concepts are there. That's it. Over. The standard is over. I think it'll take another half an hour to 45 minutes. Okay. Yeah. Now let's continue discussion of the remaining pending topics. That is projection of misstatement and evaluation of sample results and sample size topic. 3 topics are pending mainly. Projection of misstatements. So the auditor projects misstatements to population to get a broad view of scale of misstatement. Naturally, from the beginning I'm telling, we verify sample. Based on sample, we decide on the population. In sample, we find some mistakes. That mistake first we analyze. Is it anomaly or non-anomaly? If it is non-anomaly, we will try to figure out whether these kinds of mistakes are there in population also or not. That kind of projection, that kind of what, if at all I found a mistake which is repetitive in nature, if I think these mistakes are there in population also, I will be taking remaining items also and test further. That is called projection, extrapolation. But as I told you, most of the misstatements that we find in reality are anomaly in nature, which don't require any projection generally. Non-anomalies are very rare. Repetitive mistakes are very rare. Most of the mistakes are non-repetitive in nature. Projection concept in reality we don't use. Now which one we will project? Anomaly will project or non-anomaly will project? Non-anomaly we will project. That's why that projection is called as non-anomalous projection. What is it called as? Non-anomalous projection. Now projected misstatement plus anomalous misstatement is equal to total misstatement. Projected misstatements plus anomalous is equal to total misstatement in the population. Misstatement in sample plus we will project it. So the total misstatement in sample, actually misstatement in sample plus projected misstatements plus an anomalous misstatement, if all the 3 if we total, we will get total misstatement. Total misstatement in the population we will get. If that misstatement is more than performance materiality level, then we will give a modified opinion. Are you getting it? If at all if at all we are identifying any mistakes in sample, if it is below triviality level, we don't even project, we ignore it. If it is above triviality, we accumulate it as per 450 standard. You remember accumulation of mistakes? Once we accumulate, then we interpret the nature of the mistake, cause of the mistake, and we decide anomaly, non-anomaly. Then we decide projection. See how interlinked all this. That's the reason I kept 530 at last. Next, to be honest, many won't teach these concepts. They're very in-depth. They're not that easy to understand also. You need a practical understanding, you need theoretical understanding, both you need to integrate and then next. Now, by the way, when we project misstatement, we project misstatement, right? Projected. Okay. Projected misstatement means, is it actual mistake or estimated mistake? When we estimate this much mistake is there in books of accounts, can I tell the company, please rectify books of accounts with this amount? Can I tell the company to rectify? For example, I verified, company total sale value 10,000 crore. I verified, let us assume 2,000 crore worth of sale through sample. 2,000 crore worth of sales I verified. In that, I found 50 crore worth of mistake. In 2,000 crore, I found 50 crore worth of mistake. And now I estimated that total mistake is 250 crore. In 2,000 crore, 50 crore worth of mistake is there. Means in 10,000 crore, 250 crore mistake will be there is what? My estimation. I told the company, please write a rectification entry in your books for 250 crore. Can I say this? This projection may not be sufficient to determine exact amount to be recorded in the books. Correct? Projected misstatement, it's only for decision making purpose. That projection we are doing only for our audit opinion decision making, not for rectifying books of accounts. For rectifying books, no, actual mistake only we should find. In books, we can rectify only based on actuals. We can't rectify based on projections. Correct or not? So the projected misstatement may not be sufficient in order to write an exact amount in the books of account. Correct? A statement, MCQ possibility. Next. Further, you should exclude some mistakes from projection. Suppose you found some mistake that should not be projected. Which mistake we should not project? Anomaly. If a misstatement is established as anomaly, it may be excluded from projection. Which one we generally project? Here if small is there how much is there? Big. Project. Project means which one will project? Non-anomalies we will project. Anomaly we will not project. Correct? The effect of any uncorrected anomaly must be considered in addition to the non-anomalous misstatement while determining total. This point also correct? Uncorrected anomaly. And what do you mean by uncorrected anomaly? Anomaly means a mistake is there which is not rectified in the books of accounts. Anomaly. That should be considered along with projected misstatement to determine total misstatement in the population. At that only, the effect of uncorrected anomaly must be considered in addition to non-anomalous while determining total misstatement in population. Add this word in population for a better meaning. Correct? In population. In population. Correct? Next, test of details, we generally do extrapolation. Only in test of details only we verify anomaly, non-anomaly, of course. And if it is non-anomaly, we project. Controls, no, we don't project it. Generally controls, no, we call it as deviation, 10% deviation, 20% deviation. Deviation is always expressed in percentage. When it is expressed in percentage, percentage in sample is equal to percentage in population. For example, in sample 10% deviation is there. Can I say in population 10% multiplied by population factor 200% deviation? Percent can be maximum 100. Are you getting it? If 10%, see, suppose in a classroom 100 students were there, 10% absent. Another classroom 500 students are there. Can I say 50% absent? 10% only they are also absent. Percentage generally we don't increase. Just because there is an increase in population, percentage won't increase. Able to comprehend? Yes or no? That's it. Yes. So in controls, no, when there is a controls, when I'm checking internal control, when there is a deviation and the deviation is generally expressed in terms of percentage or simply deviation. When there is a deviation in sample, we naturally assume that the control is ineffective. In a sample, when I verify on some 2 or 3 days, on a random surprise visit, I went to one company to know whether security guard is working correctly or not, and I found security guard is not there. Security guard is not there at that particular location. In one of the Reliance Trends store, security guard is not there. One day event, morning event, afternoon event, evening event, one day is not there. I assume that there is no security guard in that store. I generally assume like that. Are you getting it? So first I will ask reason, management, why security guard is not there? So today is absent, emergency. Then it's an anomaly. Suppose no, they're trying to give me some other reasons. Some reasons, like there is no valid reason. Then I will consider this is what every day happening. So today security guard not there means every day he is not there. In a control verification, if I find a deviation on a particular day, in a sample if I find a deviation, I assume that the same deviation is there throughout the year also. That's how I assume in case of controls. There is no need of extrapolation. Deviation is always a qualitative nature. It's not about quantity, it's about quality. So that's why when we are evaluating quality, either it is right or wrong. That's it. Wrong, that's it wrong. Wrong in sample means wrong in population. That's it. So no extrapolation in case of controls. Whereas in details, monetary amount, in sample 10,000 worth of mistake is there. In population, how much mistake is there? I need to extrapolate. I need to analyze anomaly or non-anomaly, and accordingly I need to go for extrapolation. So for test of details, the auditor projects misstatements found in sample to the population. Able to understand? That's it. Whereas in case of test of controls, no explicit projection is required, as sample deviation rate itself is population deviation. Confident? See how tough the standard is. Now you're able to understand why I kept it last? Very tough. The reason why I kept this in 1/4 topic also, this is the reason. The discussion itself is taking close to 4.5 hours, almost 4 hours discussion. That too, since I have so much of command and clarity. Imagine you need to read this once again. It will take another 4-5 hours for you, minimum, to get a command. Revision another 1 or 2 hours, total time. 10 hours you need to invest on this time. The weightage is 4 marks. Most of the times this MCQ, even if it comes also, see, the only reason I'm discussing this chapter, only reason I'm asking you to at least watch the class is, if at all a case based MCQ comes, 3 MCQs 2 marks each, na, gone. So that risk we should not take. So listening class is enough to answer MCQs, but remembering this and giving in a descriptive paper, it's very tough. That's why these chapters I generally tell them to avoid. Rest all other, they are not this complicated. They are very easy. By the time you spend 10 hours on this, no, you can revise entire subject once again. Remaining rest of the entire syllabus, you get 3/4 strategy syllabus, you can revise once thoroughly. Because day before exam, intensely you revise, no, 20 hours. Half the time this is nothing but. So that is the reason I tell that 10 hours you invest on that. Finally, evaluation of sampling results. Evaluation of sampling results. This itself can be asked as a 4 marks question. So the auditor evaluates whether audit sampling provide reasonable basis for conclusions about population tested. Ultimately, sample result. Sample result means what? What is sampling result? I verified sampling. I found some mistakes. I found some deviations. I need to evaluate it. Yes or no? First I will identify nature and cause of mistake, nature and cause of deviation. Then I will project everything I will do. Now I need to take a decision. In order to take a decision, you need to evaluate it. You need to evaluate the sample result in order to take a decision. Now, you know, the best way to evaluate is, what is the best way to evaluate? Consider projected misstatement and anomalous misstatement. Then only it is called as total mistake. The best way to evaluate sampling result, the best way to take a decision based on sampling is consider total misstatement. Total misstatement means what? Projected misstatement plus anomalous misstatement. Anomalous misstatements are non-repetitive. Yes or no? And are considered for calculating aggregate misstatement on whole population. Correct? Okay. Now here there are some, and in case of test of details, no, an unexpectedly high misstatement in sample may indicate the entire transaction balance is materially stated. When I'm verifying test of details in sample, if I found a big mistakes, it makes me believe that entire class of transaction is false. Entire class of transaction is not true. Correct or not? An unexpectedly high misstatement in sample may indicate the entire class of transaction is materially misstated. An unexpectedly high sample deviation rate may increase the assessed risk of MS. In controls, if they're not effective, my risk appetite, my risk classification of that particular transaction will change. The assessed risk of MMS will change, will increase. If there is a high deviation rate in sample of controls which I tested, naturally my assessed risk will be increased. What is assessed risk? Risk of MMS, risk assessment chapter. Identifying and assessing risk of MMS through understanding the entity and its environment. And risk assessment is a continuous process. It's not a one-time process. And circumstances when sampling does not provide reasonable. This itself can be asked as a 3 marks question. Now here one more new term will come. Okay. If projected misstatement plus anomalous misstatement exceeds tolerable misstatement, the sample does not provide reasonable basis. If projected misstatement plus anomalous misstatement exceed tolerable misstatement, this sample does not provide reasonable basis. The standard is written like this for a precautionary purpose. Standard is written like this for a precautionary. Look at this scenario. Suppose 100 samples I select. I found some mistake. I concluded that it is a repetitive in nature. I found few mistakes which are non-repetitive also. Anomaly also I found, non-anomaly I found. But for non-anomaly, I project to the population and I totaled the mistake. It is crossing tolerable level. It is crossing tolerable level. Tolerable level crossing means I generally give modified opinion. In some countries also, tolerable misstatement is considered as performance materiality. In some gaps, like audit gaps, tolerable misstatement is nothing but performance materiality. Tolerable means what? Up to that level, up to that amount, I can tolerate. I don't mind. If the misstatement cross toleration level, I will give modified opinion. That's what the tolerable. That is what performance materiality concept is also. Able to understand. So now, when I calculated projected mistake, anomaly mistake, totaled it. When I concluded when I see the total mistake, it is crossing tolerable level. I told management I will give modified opinion. Do you think management will agree? Sir, yours is an estimate only. How can you give modified opinion on financials without a proof that there is an actual mistake? It's an estimation, sir. That's your estimation is wrong. Then do one thing, take extra sample and see once again. You selected only 50, sir. Out of 50, you found this much mistake. Out of 5,000, no, 50 is too less. Take another 50 and then tell me again. Management will tell us. That's why the standard is written in such a way. What the standard? If projected misstatement plus anomalous misstatement is exceeding tolerable level, the sample is not reasonable. The sample does not provide reasonable. They are saying sample is wrong. Indirectly, auditor procedure is wrong. So better what auditor has to do? Take extra sample. Once again, see you are getting the same answer or not. The sample is written in a precautionary method. This statement is not absolutely true, not absolutely false. It's a precautionary statement. Are you getting it? If projected misstatement exceeds auditor expectation, there is unacceptable sampling risk that actual misstatement exceeds tolerable misstatement. Obviously, if the projected misstatement is exceeding auditor's expected misstatement, now here there are terms: risk of material misstatement, expected misstatement, projected misstatement, anomalous misstatement, non-anomalous misstatement, uncorrected misstatement, tolerable misstatement. So many. Yes or no? So again here there is one topic in the above which I kept pending. What are the factors for determining sample size? In case of test of controls, in case of test of details, one small discussion is there. That also we need to discuss to understand this particular statement. Okay, fine. I'll do one thing. If projected misstatements exceeds auditor's expected misstatement, actually when I do risk assessment, I generally assume this much mistake might be possible. Expectation. See, tolerable means what? If that is crossed, I will take an action. Expected means what? My perception. If the projected misstatement, see, expected misstatement is before starting the audit. Projected misstatement is after completing the audit procedure. Correct? Agreed? Expected misstatement means it's my risk assessment time. Projected misstatement means I already selected sample, I already concluded, I already projected. If at all my projected misstatement is crossing my original expectation, two conclusions possible. One, my sample might be wrong. No, I expected this much only, but so much is there. Probably my computation sampling might be wrong. So that's what they're saying. There is unacceptable sampling risk that actual misstatement exceeds tolerable. So indirectly, auditor, what he might conclude, projection itself is more than expected, means real mistake might be much more bigger. Like that, auditor may conclude. That is also one more possibility. See, generally, whenever tolerable level crossed and whenever you want to give modified opinion in all these scenarios, management will say your sample is wrong. Your sample is not representative. Your sample is not sufficient. You increase the sample and tell me, sir. That's how management responds generally. So the standard is written so that you take more precautions. Based on sample, you decided financials are materially misstated. Increase the sample and see once again you get the same decision or not. Precautionary. Even after that you got the same decision. Then you will decide that and then you will proceed with that instinct and then you give modified opinion. Able to understand? The closure, you see here the word, the closure, the projected and anomalous, nothing but the closure total. The closure total misstatement to tolerable misstatement. The more likely actual misstatements exceed tolerable. The closure, the total misstatement, nothing but total means here what? Projected total misstatement. The closure, the projected and anomalous to tolerable, the higher chances that the real mistake is more than tolerable. Able to understand? Your projection itself is cross a toleration level, means your projection itself is nearing toleration level, means the actual mistake would have already crossed the tolerable level. For this you need to remember the logic between overall materiality and performance materiality, undetected misstatement logic. Have you covered that risk assessment topic, materiality topic? Huh? I told in risk assessment topic materiality standard when I'm explaining SA 320, overall materiality, performance materiality, triviality level. Overall materiality, for example, 10 lakh, performance materiality 8 lakh, triviality level will be some 20,000. I told like this. Here we maintain a gap for undetected misstatement. Undetected misstatement. This point I told in SA 450. This point I told in SA 450 and 320 concept when I'm explaining. So this undetected misstatement. Undetected means what, you know? Because in audit, no, we may not detect so many mistakes. In sample, we detect mistake and project it. But real mistake might be much more bigger. We don't know. So on a precautionary note, these standards have been wrote. Able to understand? So that's why you don't take much stress. You need to remember these sentences correctly. You need to remember these sentences. Evaluation of sample results. How to evaluate the sample results? Very simple. Okay, the auditor evaluates whether sampling ultimately gave reasonable basis so that you can draw conclusion on the population. In case of test of controls, high deviation rate increases assessed risk of MMS. High misstatement, unexpectedly high misstatement in sample in case of test of details indicates that the account balance is totally materially misstated. The best way is what? Projected plus anomalous put together, estimated. You know, if at all projected misstatement plus anomalous, if at all it is crossing tolerable, the sample is not reasonable. Or they're reaching, or if at all projected misstatement is reaching auditor expected level, there is unacceptable risk that actual misstatement is more than tolerable level. So the closer this to tolerable, the more likely the real mistake is higher. Because of undetected misstatement logic. Undetected misstatement logic means 320 materiality logic. This is very tough. This because this is highly debatable. This is not true. This is not false also. It is written on a precautionary note. Now, what is your response if sampling has not provided reasonable basis? Like, you know, we saw here. What we saw here? This point, you see, if projected misstatement plus anomalous misstatement, you see this point. If projected misstatement plus anomalous misstatement is exceeding tolerable, you say that management will say this, your sample is not reasonable. What if your sample is not reasonable? Additional sample you select, additional procedures, or ask management to investigate. You are saying my sample is not reasonable, no, you investigate. Auditor may request management to investigate the identified mistake and then come with a full detailed report. If audit sampling does not provide reasonable basis for conclusions about the population, if auditor sample does not provide reasonable basis, the sample which is selected is not reasonable, management is saying, ask management to investigate the actual result and come back with a report, or I will perform additional work. Like I will increase the sample size, extend the sample size, test and alter to control, modify substantive procedures. Understood? This question was recently asked in CA final. Number 24 or that before May 24 attempt, it was asked for CA final for 4 marks question. CA final they have asked. But this matter is not there in CA final book. Understood? Now, there are some precautions when you are applying test checking. Audit sampling is also called as test checking. Test checking means what? We don't check 100%. We check, we test randomly. Test checking. This is also called as what? Test checking. Okay. So test checking means what? Before you do sampling, you need to thoroughly study accounting system. There are some precautions. Precautions before applying test checking. 4 marks question. Direct possibility. Precautions before applying test checking. Direct 4 marks question possible. Perform a thorough study of accounting system before. Conduct a proper study of internal control system. First one, accounting system thoroughly understand. Second one, internal control thoroughly understand. Identify areas which are not suitable for sampling. First, you want to apply sampling technique. First, identify where sampling is not suitable. Then on the remaining area, sampling you can apply. And plan sampling methods to be used and explain them to the staff. Then properly classify, stratify transactions and balances. Ensure sample is chosen in an unbiased manner. Determine sample size appropriate to achieve the audit objective. Sample size must also be sufficient. You can't simply say 10. Sir, why verifying 10? 100? 10 is also sample. No. What is the use of verifying 100? What is the use of 10,000 transactions are there? Whether you verify 10 or 15 or 20, it doesn't matter. No. Sufficient size must be there because your satisfaction is important. See, ultimately, auditor should get satisfaction. Yes. At 100, after verifying 100 transactions, your confidence level is different. After you verify only 10 transactions, your confidence level is different. We want to get a reasonable assurance. Remember, until I get reasonable assurance, okay, population will be true. I will be getting a reasonable assurance, then only I will take a decision. Able to understand? Next. And also, obviously, auditor has to analyze the errors located in the sample. Analyzing the errors means what? Anomaly, non-anomaly, deviation, misstatement, all that. These are the precautions which auditor has to apply while undertaking test checking. Clear, all of you? Next. Sample design, sample size, sample selection. Requirements. Yeah. What are the requirements as to sample design, sample size, sample selection? A straight question, 4 marks will come. What are the requirements as to sample design, sample size, sample selection? Sample selection must be in a way in the population has a equal chance of selection, correct? Sample selection must be in a way each item in the population has a chance of selection. In such a way selection must be. Size, how much sample size? The auditor shall determine sample size that is sufficient to reduce sampling risk. Able to understand? If I have bigger sample, the possibility of taking wrong conclusion will be less because I will be verifying more transactions. So I will understand correct reasons properly. If I simply verify 10 transactions, 1 mistake I found, out of 10, 1 means 10,000 how many? That's wrong. You verify 100, still you found only 1 mistake. Now you can project it. Are you getting it? So sample size must be sufficient so that sampling risk will be reduced. Sampling risk can be reduced only by increasing the sampling size. And sample design. Should I follow simple random sampling or should I follow stratified method? That is also most important. That depends upon the characteristics of the population. The auditor consider the purpose of audit procedure and characteristics of the population. Purpose of audit procedure means what? Purpose of audit procedure to test overstatement or to test understatement or to test completeness, occurrence. What is the purpose? What is the characteristic of the population? Then accordingly design the sample. Sample design must be like that. Stratified or simple random, all that you will decide accordingly. Are you? Suppose if I want to test understatement I want to test. Understatement means what? Completeness. Whether all the transactions are recorded or not, all the transactions recorded or not. There I can go for simple random sampling. Whether recorded transactions are really arisen or not, there I can go for stratified sampling. Recorded transaction means I will divide the transaction into multiple parts and I test whether that really happened or not. Stratified I can go there. Able to understand? Next. Now, what are the factors while choosing sample design? For sample design itself, we have a in-depth discussion. Getting it? Sample size we have in-depth discussion later. Sample design. This is nothing but M point. Sample size is nothing but P point. Sample size is nothing but P point. M and N both are talking about sample design. P point is talking about sample size. Sample selection means selection methods are there na? One question. Sample selection methods, one topic is done, that's it. So for sample design, sample size, sample selection, detailed discussion is given below. Understood? Now, when you are choosing sample design, know which method of sampling I should follow. How should I? There are some points you should consider. First, auditor has to consider specific purpose and identify it's the combination of procedures that are to be performed to achieve the purpose. Specific purpose, you want to test overstatement or understatement, and identify combination of procedures. Combination of procedures means what? Suppose you want to test understatement, nothing but completeness you want to check. You want to check completeness of recorded transaction, completeness of recorded. Then you need to check incidental records. Some incidental records will be there, third party confirmations will be there. So what are the combination of procedures you should perform? That you should decide first. The purpose of, what is the purpose of the audit procedure, and identify what procedures to be performed. First fix that. Understand the nature of evidence and possible deviation misstatement assist in defining the population. First, what kind of evidence is required and what kind of mistakes or deviations are possible. First figure out, like what mistakes are possible, first figure out. Accordingly design your sample so that you can try to figure out those kinds of mistakes. Auditor must clearly identify what constitutes a deviation, what constitutes a misstatement, to ensure only relevant conditions are considered in audit. You must know when this is called as a misstatement, when it is not called as a misstatement. For example, you are testing existence of receivable. Existence you are checking. Payments made before confirmation date and received shortly after the date are not considered as misstatement. For example, debtors balance outstanding is there as on 31st March or some date. I want to know whether he has to pay this much amount or not. I sent confirmation. It reached him and he replied me within 3 days. 4th day he replied. Today I sent, 4th day he replied. You know what happened? Today I sent no. Today evening only he paid money. And he replied on 4th day saying no outstanding balance. When I sent mail, outstanding balance is there. But when I'm receiving, by then it is cleared. Now can I say company is fraud? No. So payment made before confirmation date but received shortly after the date are not considered as misstatement. Wrong postings between customer account do not impact total balance but may affect fraud assessment or adequacy of provision. Sometimes XYZ Industries Private Limited, there is one company, one vendor from whom we purchased goods. There is another company called XYZ and Co. When we purchase this, company accident recorded in this account. Purchase is recorded but the ledger name changed. At the end of the day, overall accuracy of the books of accounts is not changed. This is posting mistake. This may not affect. Are you clear? So what exactly constitute misstatement, you must know. Be able to understand. Test of controls. Auditors assess expected rate of deviation to design audit sample. If rate of deviation is unacceptably high, the auditor may choose not to test the control. Generally, first we will understand internal control and figure out whether deviation is possible or not. If at all we are expecting some deviation, we test more controls. If at all we expect high deviation, unacceptably high, we don't test that control itself. We directly go with substantive procedure. See, ultimately, whenever we are testing controls, our objective is not to give opinion on the controls. Our objective is always same, opinion on the financial statements. Yes or no? Now, in order to decide how many transactions we should check, for that only controls we are checking. If controls are very effective, number of transactions will reduce. Sample size will reduce. The auditor assesses the expected misstatement in population to determine sample design. If at all I'm expecting more mistakes are possible, I will stratify the population into multiple ways and then verify. If at all I expect very low number of mistakes, least number of mistakes, I may go with simple random sampling. Sampling severity, nothing but. Simple random sampling is less severe. Stratified sampling is more severe. That's it. If the misstatement is high, the auditor sometimes may decide to conduct 100% examination or use a larger sample size. Understood? That's it. Factors while choosing sample design. In exam, any 3 points you write. Any 3 points. Better, I recommend 1, 2, 3. or your wish. Out of this 5, any 3 points you write. Any 3. And now sample size discussion. I think it will take another 20 minutes to half an hour, because I have to conclude it again neatly, because after covering this, again all the dots, interconnected points, I need to once again revise. So we'll do one thing, we'll continue the next session, this part, okay? And after this, 520 discussion, essay 520 discussion. Analytical procedure is little simple compared to sampling, little easy. So in sampling, in entire 530, if you see, 80% of the standard is quite easy, 20% is very tough, that is linked with many other discussions, okay? Yeah. So let's continue the last topic in sampling topic, essay 530, sampling standard, regarding sample size and factors affecting them. But before this, we actually started one concept called what are the requirements regarding sample design, sample size, sample selection requirements. Selection related discussion we already completed. How to select a sample, there are various methods of selecting sample, all that discussion is completed. Sample design. Design is based upon purpose of audit procedure. You want to verify existence, you want to verify occurrence, you want to verify completeness, depending upon that. And characteristics of the population, homogeneous population, heterogeneous population, accordingly the sample design will be decided. Okay, statistical or non-statistical, or which method we have to follow, all that. Then selection must be in an unbiased way. That is what selection point speaks about. Now, in order to select in an unbiased way, in order to have a chance for every item so that it will be selected, there are various scientific methods which we saw. Simple random sampling, stratified sampling, all that, right? Now for sample design, you need to keep in mind various factors. Purpose of audit procedure, and what exactly the evidence that you want, what type of evidence you want. You want evidence for existence, or you want evidence for completeness, or for what exactly you want evidence for occurrence, you want evidence for valuation, what exact evidence you want. And you need to first understand what exactly constitute a misstatement. Suppose you are verifying purchases. In purchases, what is meant by misstatement in purchase? You need to first define misstatement. So in order to find out that misstatement, what method of audit procedure you need to follow, what population you need to identify, you need to verify, that you need to know. That's it. Then, and stratification. Through stratification, which is one of the design factor. Okay, now one of the design factor, through stratification you can select sample from all parts of the population. Next, within stratification, if at all monetary value is used to stratify the data, to divide the data into multiple parts, if values are taken into account, based on value we are dividing, then that selection is called as value weighted selection. Now sample size and factors affecting them. What should be the sample size? What is the requirement of SA 530 regarding sample size? What is SA 530 requirement? SA 530 says sample size must be sufficient. SA 530 says sample size must be sufficient to reduce sampling risk. To reduce sampling risk means, what is sampling risk actually we saw? Sampling risk means risk of selecting an inappropriate sample, where if you verify the sample, what conclusion you get, same conclusion you will not get if you verify the population. That risk is called as what? Sampling risk. Now to reduce sampling risk, sample size must be sufficient. That's why you should take a bigger sample as much as possible. Don't just have, whether it is 100 or 20, it doesn't matter. No, verify a decent number. 250 samples you verify. In case of 10,000 or 1 lakh or whatever, minimum 250 samples you verify, so that if you are able to verifying 250 to 300 samples, you will cover all the months, you will cover all the types of transactions. Able to understand? So sample size must be sufficient so that sampling risk will be lower. Next, if you want to lower the sample risk, lower sampling risk you want, then larger the sample size. So between the sample size and sampling risk, the relationship is inverse, indirectly. Sample size can be determined using statistical formulas or even professional judgment. We generally use professional judgment. Okay, next. Now, as I already told, we do perform audit procedures two types: test of controls, test of details, compliance procedure, substantive procedure. So in both the cases we will apply sample, right? Controls also we check on a sample basis, details also we check on a sample basis. Now controls, how many you need to check, how much should be the sample size? It's again, sample size is a matter of judgment. but there are certain factors, there are certain parameters which will influence your sample. Simple. I want to get more assurance whether controls are operating effectively or not. Whether controls are operating effectively or not, I want more assurance. Naturally, sample size will be bigger. Yes or no? My toleration is very high. I can tolerate more. Then my sample size can be lower. If my tolerance increases, my risk will be increasing. My risk taking capacity will increase. If I am taking more risk, sample size can be lower. As simple as such. If my tolerance is very low, I cannot tolerate errors at all, I cannot tolerate misstatements at all, I don't want to see even a small mistake also, then my sample size will be bigger. Audit risk indirectly. If auditor is ready to take more risk, sample size can be lower. If auditor is not ready to take more risk, sample size has to be, if at all he is not ready to take risk, bigger. If I'm ready to take more risk, sample size will be lower. Getting it? Like there are so many factors. The more assurance you want on operating effectiveness of controls, larger sample size. Higher the tolerable rate of deviation, smaller the sample. If I am tolerating high, if I am tolerating more, if I can tolerate more, sample size will be low. Suppose when I'm doing risk assessment, I felt at certain places in purchases or in inventory maintenance, I expected more control violations, more control deviations. I'm expecting more. Naturally, there I will verify more controls. Correct? Higher the expected rate of deviation, larger the sample size, and obviously vice versa. Correct? Now, again, there are factors for expected rate of deviation. Like how do you know expected rate of deviation? In purchases, these many controls can be violated, so and so control can be violated. Purchase order control, I told in previous sessions also, purchase order control, if I feel purchase order authorization is not being followed, yes or no, so automatically my expected rate of deviation will be high, the possibility of misstatement will be high, yes or no. So what are the factors for expected rate of deviation? Your understanding about the business, how much I know about the business and controls, changes in people and changes in control, results of audit procedure in prior period and some other audit procedures which I got to know. Risk assessment, for example, other audit procedure means what? Risk assessment procedure. Other audit procedures might give me an indication whether here rate of deviation will be high or lower. Expected rate of deviation. Next, higher the desired assurance that not exceeded, tolerable rate of TROD means nothing but tolerable rate of deviation. Okay, tolerable rate of deviation. Higher the desired assurance, you want more assurance that tolerable rate of deviation is not exceeded by, means actual deviation is below toleration level only. I want to know, I want to ensure that actual deviation is less than toleration level, then automatically sample size will increase. And population size also, for larger population, minimal impact on sample size. Sample size is not a big deal for larger population, but for smaller population, sampling may not be sufficient, where full 100% verification might has to be. Are you getting it? But generally, if population increases, sample size also increases, but not in the same proportion. It may not in the same proportion. If population, for example, transactions, I'll tell you, last year the company transactions are 1 lakh, that time we verified 300 samples. This time the total number of transactions are 2 and 2 lakh, still we may verify 300 samples or maybe 350. We will not double it. Clear? So, if auditor's risk assessment includes consideration of operating effectiveness of controls, then he is required to perform test of controls. This point we have already seen in which one, risk assessment topic also, and even we saw this in audit evidence also, test of controls. When do we perform test of controls? When auditor's risk assessment includes consideration of operating effectiveness of controls. See, in all big companies now, without controls evaluation we cannot do audit. Predominantly the transactions are control driven. Suppose you see Reliance Trends, you go, the directors and all were in Mumbai, the top management is in Mumbai, but a Reliance Trends store is running successfully somewhere at some corner of India because of controls. Controls means what? Nothing but monitoring. Somebody is monitoring the employees. All the floor level staff are monitored by store head. The store heads are monitored by the district or probably the state heads, regional heads. So that kind of monitoring, that's a control. That's a internal control. You know, when you buy some, you know, whenever goods are coming into that, whenever some garments, you know, inflow, everything is scanned, everything is stock, you know, entered in the stock records, store records. Billing cannot happen without, you know, without payment, billing won't happen. And you know, without removing the tag, the garments will not go outside of the store. Security system is there. This kind of robust controls are maintained. Automatically, the owner sitting somewhere will always have an assurance that my products are safe, my inventory is safe. Getting it? So naturally, in this kind of control driven environment, I cannot verify many transactions. I want to verify how safely the business is being done, how business is ensuring assets are protected, how they're ensuring frauds are prevented, how they're ensuring errors are prevented. So I focus more on processes. So naturally, in most of the audits, in our risk assessment, we wanted to know whether controls are operating effectively or not. In our risk assessment means what? See, ultimately, first we do in audit, first we do risk assessment. First, throughout, in fact, it's not just one time process, but at the beginning we do thoroughly. Later on, we will be alert. So risk assessment, in our risk assessment, we want to know exactly where and all risks were there. So accordingly, I will plan my audit. So naturally, as a part of my overall audit, I wanted to know operating effectiveness of controls, because there is no point for me twisting thousands of transactions without understanding controls effectiveness. Able to understand? That's it. So these are the factors. Any 4 points? Actually, you know, here only up to this enough. Okay, but if at all the paper has to be extremely tough, this yellow, this point, whatever I highlighted, you know, factors for expected rate of deviation, that question can come. Now I'll go one MCQ. Okay, here you need to be very careful. Which of the following is not a factor? Which of the following is not a factor for determining sample size? Which for determining sample size in case of test of control? Which of the following is not a factor? Option A, tolerable rate of deviation. Option B, expected rate of deviation. Option C, actual rate of deviation. Maybe not actual. Okay, some word I will use. What else is there? Assurance level of auditor. Okay, option D, projected rate of deviation. Which of the following is not a factor for determining sample size in case of test of control? When auditor is performing test of control, he want to verify few controls. Only few controls he want to verify, not all the controls, only whether the controls are operating at a particular point or not. So sample size. So he want to verify he want to decide on sample size, how many controls to verify, how many transactions to verify. Technically speaking, how many transactions to verify to test the controls. Okay, should I take 100 transactions or should I take 150 transactions so that I can verify test of controls? Now, which of these is not a factor? Tolerable rate of deviation, expected rate of deviation, assurance level required by auditor, projected rate of deviation. Which one? The answer is projected one. The answer is projected. This is not a factor for sample size. Projection will happen at last. First, no, I should fix the sample. First, I should select the sample. Then I will apply audit procedure. After applying audit procedure, then I will understand whether there is a rate of deviation or not. Accordingly, then I will project. Project is the purpose of the sampling ultimately. This is not an input for sample. This is an output of the sample. Yes or no? Projection is the outcome of sampling process. That is not the input. For inputs, for sample size inputs, these are all various inputs. Tolerable, higher the tolerable, lower the sample size. Higher the expected, higher the sample size. Yes or no? Higher the assurance the auditor want, higher the sample size. Simple. Like this in exam they might ask. In one of the MTP it was asked. Be able to understand. Now tell me, without understanding these terms, how can someone answer? Next. Now same way, for test of details. Remember, I told you many a times, test of controls and test of details. Transactions only we will take and test the controls. Same transaction only we will test the details. If I take purchase bill and if I am verifying amount, party name, date and inventory quantity as per goods received note, purchase order copy, how many quantity we ordered, in received goods received note how much quantity is there, in store record how much quantity is there, in accounting records how much quantity is there, rate how much is there. If I focus on all these actual details, that's test of detail. In test of details, our primary objective is accuracy of records. Our objective is to verify accuracy of records. If there is any mistake, then that's a misstatement. Whereas in test of control, same voucher, there I will check, is there a purchase order? My questions are different. Is there a purchase order? Who placed this order? Who authorized this order? When the order is placed? When the goods are received? Yes or no? Whether goods received quantity more than order quantity. Suppose I ordered 1000 but received 1200. That's wrong. These are control evaluations. Able to understand? So when I'm performing test of controls, when I'm performing test of details, in both the cases, sample is same. But for control evaluation, for me 50 samples enough. But for details evaluation, I want 200 samples. That can be there. For controls checking, for example, in a company, what happened is, I will just simply give you this example, which will give you clarity on entire the subject. Okay. For example, in the company, every month some 100 purchase transactions are happening. Every month 100 is happening. Okay. Now the purchases of this company are broadly divided into 4 categories. Okay. Up to 5 lakhs, 5 lakh to 10 lakh, 10 lakh to 20 lakh, beyond 20 lakh. Up to 5 lakhs, purchase manager and finance manager. Okay. Beyond 5 to 10 lakh, extra one more authorization is required, who is like probably general manager of the company. If it is 10 to 20 lakh, CFO also has to authorize. If it is more than 20 lakh, CEO also has to authorize. The transaction is more than 20 lakh, 5 people has to authorize it. Production manager, purchase manager, purchase manager, finance manager, general manager, CFO, CEO, 5 of them has to approve it. Only then amount will go. Then only he will dispatch the goods. Are you getting it? Now what happened is, during May month, CFO has been changed. During October, okay, finance manager was changed. During Feb, okay, for example, this is April 24, May 24, 25. During Feb 25, CFO has been changed. CEO has been changed. And our accounting period is 24, 25, April to May. Now I should select sample in such a way where these 5 kinds of transactions has to be verified by me. At least 333 transactions I should verify, at least whether control is followed correctly or not. Plus, whenever there is a change, old CFO and new CFO, both the times transaction is taking place, right? Those samples also I should verify. Yes or no? So that if I select sample CEO, whenever CEO change, before that old CEO transactions I saw, new CEO transactions also I saw, whether he is verifying or not, approving or not. So imagine how many changes were there in the internal controls during the year. Every change I have to verify in my sample. Every change should reflect in my sample. Then only my sample is representative. Are you getting it? Fine. Once I verify controls, if I get a satisfaction that controls are robustly followed, then test of details. Then I need to verify details in these transactions. If at all controls are very effective, I felt that mistakes no chance at all, then the same 50 transactions I will verify details also. Suppose in controls, if I found some deviations, in order to identify whether because of this deviation any mistake or fraud happened, I may increase the sample size to 100. Are you getting the point? So first we will decide sample size for controls, then we will go for details. Details sample size is influenced by effectiveness of the controls samples we tested. Correct? That's it. You remember this throughout the audit subject, will be easy. The test of control means it's not something different. Same transaction only we check, but control aspects we check in the transaction. But remember, controls are not there only in transactions. Controls are there in environment. Control environment. In risk assessment topic, internal control, we will be discussing. There are 5 components of internal control system. Like that, some concept is there. We'll discuss that in risk assessment, internal control. Getting it? It's already covered there. Clear? All of you? That's it. Confident. Next. Now, what is the sample size for test of details? What factors will affect? What factors will influence? Same. Higher the risk, auditor predicted. Higher the risk of MMS. This risk of MMS is decided after test of controls generally. Higher the risk of MMS. After you verify internal controls, you felt high risk. Then automatically higher the greater the reliance on other substantive procedures on same assertion. Greater the reliance on other substantive. For example, I want to perform analytical procedures and I felt analytical procedure is giving me already clarity. Then test of details I will perform low. If you remember in audit evidence topic, okay, audit procedures are broadly 2 types. Okay, risk assessment procedure, further audit procedure. Further audit procedures are again 2 types. Substantive procedure and substantive. Okay, I think further audit, compliance procedure, substantive procedure. Substantive procedures are again 2 types: test of details, substantive analytical procedure. So other substantive procedures means what? Analytical procedure. If at all I am getting qualitative evidence, if I am getting more assurance on the transactions through analytical procedure already, test of details I will perform low. Sometimes if controls are very effective, analytically also when I observe the transactions, everything seems logical, fair. Controls are working effective. Analytically also the transactions are very fair, reasonably appearing. I may ignore details testing directly. But the best way, what the standard recommends is always perform analytical plus details. But details, test of details, you can reduce it. If analytical procedure give you more satisfaction. Through analytical, best example. Suppose company paid rent. Okay. I saw rental agreement. I saw who approved this rental agreement. I also saw how the rent is being paid. Controls and all I saw. Like everything seems genuine. Okay. And monthly as per the rental agreement, the rent is 50,000. I just applied logically, analytical procedure, some unsophisticated, a basic calculation, basic 50,000 into 12, 6 lakhs only rent per annum. Okay, rental agreement is there, 6 lakhs is there. The company is paying rent through bank account, 2 or 3 rent receipts I saw also. Analytically, I felt everything is correct. When I opened the ledger account, rent 6 lakhs only there. So controls I saw, logically my expected calculation is 6 lakhs and actually also it is only. I may not verify actual rent amount paid. Test of details means what? Verifying actual bank statement, verifying rent receipts, all that. That is test of details. Analytical procedure means what? Based on input, some information, based on non-financial information or some financial information, I will calculate how much expenditure. That is analytical procedure. I calculated expected value, compared it with the actual value. Both are matching. So in that case, test of details I may not perform. Suppose I expected 6 lakhs. When I saw the rent ledger account, it is 9 lakhs. Then analytical procedure did not give me clarity because I expected 6 lakh, but actually it's 9 lakh. So it is more, it is so much of deviation is there between my expectation and the actual one. Yes or no? So I expect naturally misstatement. Then what I will do? Show me the rent account. So show me the ledger account, what are all debited. It should be 6 lakhs, why 9 lakhs is there? I want to know the reasons. Now when I verify that, I found out that repairs are debited to that. Repairs to building were debited in the rent account. I told accountant, dear accountant, it's actually 6 lakhs only. You accidentally debited repairs worth of 3 lakhs on the same building. That should be accounted in a separate ledger account, not in the rent account. I told. I discovered a misstatement in classification. Remember, misstatements can be multiple types. So here I discovered misstatement in classification of the expenditure. I discovered error right now. How did I discover? Through analytical procedure. Able to understand? So analytical procedure means logically evaluating whether the numbers are correct or not. We will be logically checking, is the number correct logically or not? That's analytical procedure or not. Actually, analytical procedure introduction is given by me here now. But anyhow, I'll give once again separate introduction. So greater reliance on other substantive procedures on the same assertion. Same assertion means what? You may be checking completeness, you may be checking occurrence, you may be checking valuation, whatever the assertion you are checking. Suppose for that assertion you can get assurance through some other substantive procedure, then test of details kind of substantive you can reduce. Smaller sample size in case of test of details, because test of details is one type of substantive procedure. Able to understand? See how much depth is there in this? Able to understand the wordings? So everybody will read this. Everybody will read this. But understanding that what is other substantive procedure, for that they must understand what substantive procedure means. Test of details is one substantive. That is what we are actually discussing. Other substantive means analytical procedure. Are you getting it? If greater reliance you are getting on other substantive, smaller the sample size. Next. Higher tolerable misstatement. Obviously, smaller sample size. If I can tolerate more mistakes. If I'm ready to tolerate more means my risk is high. My risk acceptance is high. I'm ready to take more risk means sample size will be smaller. Then higher expected misstatement. Obviously, larger the sample size. Now, for expected misstatement, there are some factors. What are the factors relevant for expected misstatement? If this question come, same way in the above also, what are the factors for expected rate of deviation? The expected rate of deviation, how do I know some deviation is possible? By understanding business. Yes or no? By understanding people and controls, results of audit procedures in prior period. In prior period, what I found in audit. Yes or no? Only this itself can be given as a 3 marks question. They may give you one case study question. You know, there are various factors that will influence sample size in case of test of control. One of the factor influencing is expected rate of deviation. What factors will influence expected rate of deviation? Imagine the depth. They can ask. You can't say like, you know, only plain. No, I've shown previous questions also. I've shown. Next. Now, what factors are relevant for expected misstatement? How do auditor feel expected mistake? You see, result of test of control. I told you. Only after you perform test of control, you will verify test of details. So test of control's result. Test of control result can be what? Either you will rely the control or you will not rely the control. Simple. Either we trust the control or we do not trust the control. Actually, in risk assessment internal control, I kept internal control topic pending. After understanding this, you should understand that internal control topic, because in internal control we have a question: rely on control, non-rely on control. Able to understand? Rely on control, not rely on control. Test of control result. So here, if you understand first impact of it, then you can understand meaning. So result of test of control. Once you test the control, you will get an assurance whether control is effective or not effective. Can we rely or not rely? If at all the answer is no, controls are not effective, then I expect more misstatements. If I expect more misstatements, sample size will be higher. Able to understand? So result of risk assessment. Another one is result of risk assessment. When I am evaluating risk, I found some process loopholes. Remember, I showed you risk control matrix. One purchase order risk control matrix, one company risk control matrix. I showed purchase order system. Yes or no? What can go wrong? What can go wrong? Some analysis is there. What can go wrong? Inherent risk analysis. So in company, suppose there is a company. I first observe how purchases is happening. First I figure out what process they are following. Then what should be the right process I will identify. So in purchase orders, how mistakes can happen. Vendor master, how mistakes and frauds can happen. Purchase transaction, how frauds can happen. I will list out this can happen, this can happen, this can happen. What can go wrong, what can go wrong. To prevent this, what control company implemented? If a control is implemented to prevent this fraud, then the control risk assessment is low. If a control is not implemented, then the control risk assessment is high. Result of risk assessment means that. Are you clear? Extent of subjectivity involved in values. What do you mean by extent of subjectivity involved? For example, I am verifying depreciation, I am verifying provision for bad and doubtful debts, I am verifying some provision for long term, some future losses, derivatives, all that. Subjectivity will be very high. Accounting estimates, there I will verify more in depth. Then result of prior period audit results and result of other substantive procedures. These will influence my expected misstatement in test of detail. So if at all analytical procedures when I perform, I found that something is unusual, something is unreasonable, automatically I want to verify actual detail. Are you getting it? So prior period I found so many mistakes. This year also I will expect many mistakes, a result of prior period audit procedures and other substantive procedures. Result of risk assessment, result of internal control evaluation, prior period audit procedures, and extent of subjectivity involved in determining the values. For example, I'm verifying provision for bad and doubtful debts where subjectivity is very high, because provision for bad and doubtful debt is not reflected any reality. There won't be any real evidence for that. It's all subjective, management subjective. So if the subjective level is very high, then I will in-depth verify. Environment liabilities. For example, in PPE standard accounting, you might have seen decommissioning liability. Yes or no? Site restoration, decommissioning liability. High subjectivity will be involved. I want to verify that entire computation. I don't want to go with sample there, because I am expecting more mistake in that. Are you getting it? That's it. Next, higher desired assurance that tolerable misstatement is not exceeded by actual. Actual does not cross tolerable. My toleration level is this. Actual also will be less than that. I want to know more. I want to get more assurance that actual is less than that only. Then my sample size will be high. Yes or no? Stratifying population with a wide range of values. If at all I'm stratifying properly, multiple parts, then I can select one item or two items from each part. If I'm unable to stratify, I may have to take a bigger sample. Population size. Larger population, generally no impact on sample size. For smaller population, directly verify 100% instead of sample. More efficient. Alternative methods are more efficient. Yes or no? Now, what is a tolerable misstatement? What is tolerable rate of deviation? Tolerable means what? Tolerable misstatement. Misstatement means the monetary amount up to this amount, which is set by the auditor, for assuring that the tolerable misstatement is not exceeded by actual misstatement in the population. The tolerable rate of deviation is the rate of deviation which is set by auditor for assuring that tolerable rate is not exceeded by actual. Toleration level is nothing but the real mistake is less than or equal to this only. I have to prove it. That's toleration level. So up to toleration level, if the actual mistake is less than or equal to, actual mistake means what? Mistake discovered by me in sample. That is called detected misstatement. And if it is not yet corrected by the company in the books, uncorrected misstatement. Projected misstatement will be the right. This is undetected misstatement. Projected misstatement is what? Undetected misstatement. If you remember disclaimer of opinion definition, if the auditor is unable to obtain sufficient appropriate evidence and the possible effect of undetected misstatement on the financial statement, if any, could be material and pervasive. Undetected misstatement means I have not detected any mistake, but I'm predicting some mistake is there. Are you getting it? PMS, projected misstatement, is generally undetected mistake. Actually, so much in-depth is there, it's not required right now. In reality also, we don't use this. That's the reason, because in reality, most of the mistakes that we find are anomaly. We don't use a projection concept. So that's the reason we don't have to touch all this again. Clear? The word misstatement is used at so many places. Risk of material misstatement, undetected misstatement, uncorrected misstatement, expected misstatement, tolerable misstatement, anomalous misstatement, non-anomalous misstatement, projected misstatement. There are two more, totally 10 places it will be. Total 10 words were there associated with the word misstatement. Fine, I think I'm not able to recollect the two more words. Okay, but no, not actual misstatement. This technical words are 10. Technical words are 10, which okay, fine. Misstatement, risk of material misstatement, okay, tolerable misstatement, expected misstatement, projected misstatement, undetected misstatement, uncorrected misstatement. So like this, so many words were there. Huh? Sorry? Anomalous and non-anomalous misstatements. 9 already came. 10th one, something is there. Fine, it's okay. Okay. In my previous video, somewhere I told, I don't know, I didn't remember, or maybe in the CA final in one of the discussion it is. No, look at every word, you must know the meaning. Performance materiality, triviality materiality, overall materiality, tolerable misstatement. So tolerable versus performance, that discussion and all is there, not required. Clear? So that's about the entire discussion. Clear, all of you? Understood, right? Yes. Now what we will do is, once we will do a chart revision. Just a minute, I think. Yeah, 1 minute. Extent of test checking, right? Okay. Yeah, actually I need to compare these two. Yeah, missed. There is another small topic, factors for extent of checking on a sampling plan. Factors for extent of checking on a sampling plan. This is, should I use sample or not? This question is, should I use sampling plan or not? Whereas we have seen another question, just now we completed another concept, factors for test of controls. Factors to determine sample size in case of test of controls, factors to determine sample size in test of details. There are also factors for deciding sample size. Here it is factors for going with sample or not. Should I go with sampling plan or not is the question. So when can I go? Depends upon the size of the organization, depends upon the state of internal control, depends upon reliability of books and records, depends upon toleration levels of the auditor, tolerable error range, depends upon the desired confidence the auditor want. If auditor want reasonable assurance, go with sampling. If auditor is okay with some toleration of error, go with sampling. If books and books of accounts are reliable, go with sampling techniques. If internal control is effective, go with sampling techniques. If the size of organization is huge, you can't verify 100%, go with sampling technique. Sir, I decided sampling only. Sampling only possible. Okay, sample you decided. How many you will verify? For that next, previously we discussed, sample size factors for test of control, sample size factors for test of detail. Able to understand? Easy or not? That's it. So what is tolerable error? It means the maximum error in the population that auditor is ready to accept in given sample size. Smaller the tolerable error, larger the sample size. This is what we also saw. Now you understood the difference between this and that. This was also asked for 4 marks many times. What are the factors that will influence the auditor in deciding extent of checking in a sampling, extent of test checking, or extent of checking on a sampling plan? Where and all auditor can implement sampling plan decided by nature of the business, size of the business, yes or no, and adequacy of records, internal controls, level of effectiveness, tolerable error range, degree of confidence the auditor is wanting. Clear? Once you decided, yes, I can only go with sampling, then come to, okay, which sample design, how much should be the sample size, how sample selection should be done. So that entirely is what this chapter is started. What is sampling? First we saw what is sampling. Then we understood what approaches we have, how sampling is different from traditional methods. Should I go with sampling or not? Right now we saw. If at all you decided to go with sampling, what are the requirements as to sample design, sample size, and sample selection? Sample design, what factors were there? Sample size, what factors? Test of control, some factors. Test of detail, some factors. Sample selection, it should be unbiased way, and there are various selection methods. Once you select the sample, remember that there is a risk involved in sampling risk. What is sampling risk? Risk of over reliance, risk of under reliance in case of test of control, risk of incorrect acceptance, risk of incorrect rejection in test of details. Having understand what is sampling risk, errors can also be possible in audit because of non-sampling risk also. Having understood sampling risk, now you need to first understand performing procedures on the sample, replacement item, alternative item, unable to perform. Once you perform the procedure, you will identify some deviation or misstatement, identify the nature and cause of the deviation, anomaly, non-anomaly, then go for projection, then evaluate the sampling result. This is how the chapter is connected. Are you clear now? That's it. Now we'll do a chart revision, 10 minutes, okay? Like here you will understand how charts, after you read from the code notes, then immediately you read the chart notes for a quicker overall recap. Okay, that's it. Now let's do a quick revision of audit sampling standard 530. This particular revision you need to watch only after you finish the actual lectures of the sampling, or at least revision marathon, if at all I uploaded on the YouTube. To best of my knowledge, on 530 I didn't upload any revision marathon, but my old previous marathons were on 530. Even if you watch that, you will be able to decode this. Okay, now so audit sampling, the structure of the entire standard from the GOAT notes is maintained here in the chart notes also. So introduction to the sampling, first one. Earlier, no, we used to check all the transaction which is economically wasteful. Now routine checking, that's called actually routine checking. Routine checking means what? Extensive vouching of all the entries without considering the concept of materiality. Whereas as the time passed by, there is a change from routine checking to checking of internal control, checking of principles, checking of processes. Effective internal controls have reduced frauds and errors. In many companies, controls are implemented so strongly where the frauds and errors have been reduced. Therefore, auditor has to now decide extent of checking determined by auditor's judgment. Yes or no? So remember, ultimately the auditor's objective is to give opinion on the financial statements. And remember, auditors, is it compulsory for us to use sampling? No. Is it compulsory for us to apply sampling technique? No. But practically we have a limitation. We don't have an option. Yes or no? So, and whenever you are applying sampling, you should rely upon recognized sampling techniques like stratified sampling, simple random sampling, all that. Statistical sampling is scientific, reliable, and allows a fair opinion without checking all the. This is introduction to. In exam, they might ask you, write about introduction to sampling. Then next, what is the objective of auditor? What is the objective of auditor? What is the objective of auditor? The objective of auditor is what? First of all, audit sampling means what? Meaning applying audit procedures to less than 100% of the items. 100% of the items is called as population. Less than that, if you are applying audit, then that is called audit sampling. What is the objective as per this standard? Ultimately, to obtain reasonable basis. See, you are verifying sample in order to draw reasonable conclusions on population. So SA 530 applies whenever audit sampling is used for audit procedures. So sampling approaches, we have two approaches. One is statistical and non-statistical. So what are the key elements in entire SA 530? What SA 530 is addressing? What SA 530 is covering? It talks about designing and selecting sample. It talks about performing test of controls and test of details using sampling techniques. It talks about evaluating sampling results. Yes or no? At the end of the last video in the sampling topic, we clearly discussed this entire chapter structure. Next. Now, what do you mean by population? And what are the characteristics of the population? Population meaning. Okay, fine. Population characteristics directly. Population means all items in the all items, all sampling units put together, we simply call it as population. Now you look at here. Meaning population must be relevant to specific objective. By the way, characteristics are three. Appropriate. Population must be appropriate. Population must be complete. Population must be reliable. Appropriate means what? It must be specific to the audit objective. Like appropriate population, relevant to population, nothing but. If I want to check existence, actual transactions recorded. If I want to check completeness, supporting records. Remember that example? Purpose, procedures applied on sample. Example, testing 1 minute, what is this? Yeah, testing accounts receivable. Actually, this is a shortcut of the example. Testing accounts receivable overstatement, or you can say testing sales overstatement. Here instead of AR, you can also use the word sales. If you want to check sales overstatement, use actual receivables testing, listing, actual sales recorded. Suppose you want to test understatement, you need to verify not recorded one, but you need to verify supporting items like payments, stock registers, like that. Yes or no? Completeness. You must include all items throughout the entire period, throughout the entire audit period, for which year, whatever the year we are performing the audit, all the transactions must be included. Only then you need to select sample from. Yes or no? Then reliability. Population must be sufficiently complete and accurate. Auditor has to perform certain procedures to ensure reliability. Whether the population is reliable or not, first I will have to perform controls, evaluation, all that. Then auditor must obtain evidence about accuracy and source. How do you know whether this is accurate? What is the source? Then if population is not reliable, sample will not be relevant for audit objective. Sampling unit. Individual items in population is called as sampling unit. Audit processes will be applied on selected sampling units with conclusions projected to entire population. Sample conclusions is equal to population conclusion. Whatever conclusion we get on sample, the same conclusion we take on the population. Suppose if sample conclusion, and if at all I check entire population separately once again and gets a different conclusion, then the sample is not representative. This is called sampling risk. Yes or no? Then for trade receivables, sampling units can be customer balances, sales invoices, all that. Next, approaches. Types of sampling. There are two approaches, statistical and non-statistical. Auditor decided which approach to follow. And remember, sample size is not a differentiating factor between these approaches. Statistical, random selection, probability theory, we measure sampling risk reliably, we employ mathematical or statistical methods. Non-statistical, which does not have the features of statistical sampling. Then ultimately, whether you follow statistical or non-statistical, all that is unnecessary. Your sample must be representing all the characteristics of the population where the sample risk will be low. Yes or no? So representative sample should be mirroring the population. Sample should closely mirror the population, represent the population. Sample size must be sufficient so that you will get a meaningful result. So sampling process, we perform on test of control, we verify test of details. Why are we verifying controls? To find deviations in control so that our risk assessment will change. Okay, why do we perform test of details? To find misstatements. Yes or no? Able to recollect? Next. Now, difference between statistical and non-statistical, it will be similar, which we already saw just now. So there won't be much difference even if you read also. Now, how sampling is different from traditional methods? From traditional methods, auditor will get a better satisfaction. Auditors can gain sufficient assurance with less checking using sampling, as even 100% checking cannot give you absolute satisfaction. Randomly chosen samples reflect all the population features. Sample reliability depends on effectiveness of control. Test of control, sampling assess control effectiveness. Strong controls permit smaller samples. Sampling is an estimation process with obviously some errors. Yes or no? Acceptable error tolerance is based on auditor's judgment. Tolerable error, nothing but. Factors for extent of checking on a sampling plan. What factors? Size of the organization, internal control state, books and records, tolerable error, desired confidence. Easy. Next, advantages of a statistical sampling. What are the advantages? Not proportion to the sample population size. Sample size need not increase in proportion to the increase in population. Sample size is objectively we select the sample. With a minimum sample size, we can calculate risk. We can calculate with precision. Estimates probable difference. Reduces clerical processing. No sampling, low non-sampling errors. Scientific and reliable. Any 3 or 4 points you can write in exam. Then when not to use sampling, 100% accuracy required for you because of legal requirement or regular requirement, whatever reason, then you can't use sampling. Technical knowledge gap, nothing but you don't know how to use a sampling. Insufficient sampling sampling skills. Better alternatives. There are more efficient ways to do. Suppose their small population size is very small, 100% verification gives you more clarity, then go with that method. Requirements as to sample design, sample size and sample selection. Sample design, consider the audit purpose, existence, completeness, valuation, what exactly you're checking, and population characteristic, heterogeneous or homogeneous. Sample size must be sufficient to reduce sampling risk to an acceptable level. Sample selection, ensure that every item in the population has a chance of selection. See, it may be equal chance, it may be unequal chance, doesn't matter, but everything should have a chance of selection. Then only that selection method is proper. Next, factors while choosing sample design. Purpose of audit. Yes or no? Purpose of audit. I think here just a minute. Yeah, I think both are right. Purpose of audit procedure, here you can simply strike off this, not required. Okay, you can strike off that, you can just keep this first point. Purpose of audit, nature of evidence you want, and what constitute misstatement you should first define, and test of controls and test of details. SS expected rate of deviation to determine sample size. Evaluate expected misstatement level, all that. Factors that we will use while using sample design. Here, no, better refer GOAT notes once, because this even if you read short notes material, you may not get sometimes the clarity. So better read GOAT notes material. Okay. Next, stratification, dividing the population into discrete. Discrete means nothing but different strata, different subgroups. Stratification improves audit efficiency. Objective, samples from all population segments. Monetary value, often uses monetary values for test of details. Stratum specific projection, obviously in a stratification, we project to stratum, then all the stratums we total, that is what combining all the stratums projection, correct? Next, value weighted selection. Monetary amounts, sample design prioritizes monetary amount, sample size, sample selection, everything is expressed in monetary terms. In case of test of details, individual monetary units will be there, right? They are nothing but monetary units, value weighted selection. In a value weighted selection, the focus is on larger values. Larger value items will have a greater chance of selection. Even if it is higher chance of selection, the sample size will be smaller. And it is best to use it with random selection. Most efficiency with random selection. You can also use with systematic sampling also. stratification, you can evaluated selection, you can apply even in interval sampling, block sampling also, but it is best with random sampling. That's why monetary unit stratified random sampling. Next, sample size and factors affecting them. Sample size. Auditor decided sample size to reduce sampling risk. Lower the risk, larger the size. So sample size is decided by formulas, scientific formulas and professional judgment. Factors for test of control: more assurance, higher expected rate of deviation, higher desired assurance the auditor want. These are various factors. Yes or no? Expected rate of deviation, auditor's understanding of the business, personal changes, prior audit results, all that remember. Next, factors that will decrease the sample size. Here no, factors that increase the sample size. What factors decrease? You have higher tolerable rate of deviation, you can decrease the sample size. Population size on sample size decision has a minimum impact. Yes or no? For smaller population, sampling is not efficient. Next, then we have factors. Yeah, factors for test of details. The test of details objective is to detect MMS. Factors increase sample size, higher risk of MMS, higher expected misstatement, higher desired assurance than that tolerable misstatement is not exceeded by actual misstatement. Not exceeded by actual misstatement. That's actual complete sentence. Clear? And what factors will decrease? Greater reliance on other substantive. Suppose if you're relying more on other substantive, automatically test of detail sample size will decrease. Higher tolerable misstatement, sample size will decrease. Stratifying population with wide range of, like if you're stratifying with wide characteristics the population, you can reduce the methods of sample. Simple random sampling, equal chance for every unit, uses random numbers to avoid bias, ideal for homogeneous population. Stratified, divides heterogeneous population into homogeneous strata, subpopulation, samples drawn from each stratum. Auditor determines the number of stratas. Example, different percentages for, varying balances range up to 5 lakhs, up to 10 lakhs, how much percentage you should select, yes or no? Yeah. Systematic, sampling interval based on population size. Starting point will be random. Must avoid patterns aligning with some set of transactions, remember. And caution, risk of unrepresentative sample. If interval is matching with some hidden pattern, that's a risk here. Next, monetary, evaluated selection, where evaluation is completely based on monetary amounts. Haphazard sample, no structured approach. And auditor will be avoiding bias, by the way, but this is not statistically superior. All units will have a chance of selection, whereas in simple random sampling, equal chance of selection will be there. Yes or no? Next, block sampling, selecting continuous items, adjacent blocks, limited coverage of diverse transactions, simple, economical, but prone to bias. Example, taking a block of invoices. Easy. Next, sampling risk, meaning when auditor's conclusion from a sample differs from what would be found if entire population were tested. If at all entire population is tested, what we will be finding, that may not be matching with the sample related conclusion. Then that risk is called as what? Sampling risk. In case of test of control, over reliance, under reliance. Yes or no? Over reliance means what? Controls are not effective, but you are treating it as effective. Audit risk increases. Under reliance means what? Controls are effective, but you are treating them as not effective. Because of it, audit efficiency affects. In case of test of details, incorrect acceptance. Incorrect acceptance means what? Concluding that there are no mistakes when they actually exist in the population. Incorrect rejection, concluding that there are a lot of mistakes and rejecting population that it is wrong, when in fact there are no material misstatements. Non-sampling risk, risk that auditor reach erroneous conclusions for any reason other than sampling risk. Non-sampling risk cannot be measured mathematically. Examples, use of inappropriate audit, misinterpretation of audit evidence. Causes of non-sampling risk, human mistakes, misinterpreting results, relying on erroneous information. Finally, you need to perform procedures on sample. Apply appropriate procedure to each item selected. If a procedure is not applicable, perform it on a replacement. If replacement is not feasible, apply an alternative procedure. If procedures cannot be applied, treat the item as deviation in case of test of control, treat the item as misstatement in case of test of details. Next, nature and cause of deviation. Generally misstatements and deviation reasons, they will be common across various deviations, various mistakes. Generally in various transactions, a deviation is common, misstatement is common. Individually, Most of the mistakes are related to each other. Evaluate nature and cause of the misstatement. If at all there is any anomaly, you need to have high degree of certainty that it is non-representative of population. So additional procedures are important. Anomaly is equal to misstatement or deviation demonstrably not representative of population. Next, in charts, no. Generally, personally, I don't recommend charts concept itself, but just for getting an overview. That's it. This is not at all. I personally tell everybody this is only for a overview, not for depending on the exam purpose. This is just for overview, so that okay, fine. Like instead of reading from goat notes, some 7-8 pages, here it in 3-4 pages you can revise it. You will get a bird's view. So just for a quick recap of headings, side headings, brief matter. But for descriptive purpose, you read only that. Good notes always. Projection. Auditor project misstatement to population for a broad view of the scale. Remember, projection may not determine exact amount for recording in books of accounts. Correct? Exclusion. Anomalies will be excluded from projection. Effect of uncorrected misstatement is considered along with non-anomalous misstatement. Non-anomalous means nothing but projected. Yes or no? Next. For test of control, uncorrected misstatements has to be projected. Yes or no? For test of test of details. For test of controls, no projection is needed because sample rate of deviation itself is population rate of deviation. Evaluation of sampling results. Auditor evaluates whether sample provided reasonable basis or not. High sample deviation increases material misstatements. High sample misstatement indicate material misstatement. Best evaluation is what? Projected plus anomalous. Both you need to consider and then evaluate. Correct? Anomalous misstatements are non-repetitive but included in aggregate calculation for total misstatement purpose. When projected misstatement plus anomalous is crossing tolerable, we assume that sample is inadequate. Remember, I told you this is written on a precautionary method. When projected misstatement is more than auditor expectation, then also unacceptable sampling risk is there. We assume that sampling is wrong. We increase the sample and we will once again do this. Conclusion. The closer the projected plus anomalous to the tolerate, the more likely actual misstatement is more than tolerable level. If auditor, if sampling has not provided adequate basis, this is what if management will argue, then I will ask management to investigate and I will do extra procedures. I will test alternative controls. I will modify my substantive. And there are certain precautions which I should take when I am performing test checking. What precautions I should check? Study accounting system, internal control system, identify areas which are not suitable for sampling, plan and explain methods to the staff. I determine adequate sample size, select them without any bias, analyze the errors correctly. Analyzing means what? Nothing but anomaly, non-anomaly, all that. Yes or no? Stratify the transactions and balances appropriately so that you will get the representative sample. Able to understand. But remember, you will understand, you will get maximum out of the chart book only when you understand the subject thoroughly. Otherwise, without understanding the words, without understanding it, there is no point of reading this. Are you clear? Now here, I think we found out one mistake in the chart notes where factors. Yes or no? Here, side headings were right. This matter was not given correctly. Correct? This I think was copy pasted. This one. Okay. These 2 points, please replace it. Even in the physical chart copy also, please ignore this. You can just use headings. That's enough. Clear? That's it. So refer goat notes. Confident. Actually, why these mistakes happens is, we do develop entire this in Canva. What happens is multiple team members will be working. Sometimes no. For example, when we are working, somebody else also would have opened the same topic. When we saved it here, they would also saved some settings there in different file. This got missed, that got saved. When they bring it for verification, getting it, or when I am verifying, I'll verify based on my system. When they verify, I will tell them okay, approve it. Then they will take that and they will give me entire PDF just for my review. Since I reviewed already, I approve it. Getting the point? I'll review. Of course, I'll review because I reviewed here. Once again, the same I'm reviewing with PDF. Getting it? I review it. So that is the reason. The sync mistake is actually a syncing mistake. But if a chat book has to come this beautifully, we don't have another option. Only Canva we need to use. Canva or some other software only we need to use. You understood why this is actually a synchronization mistake. Synchronization. We would have actually updated this. So at 4 or 5 places this mistake happened. This entire book. But next edition, what we will do, whatever we did proofreading on the screen, Off the screen we should take a print and then read once again. So proofreading will be done 4 or 5 times at least. In spite of it, see, you see, this very minor, no, we can't notice that in this much volume of syllabus. Okay, at 4 or 5 places only this mistake happened, but at least, and one more thing, you know, when we are reading normally proofreading, we will not get it, because the intensity of reading is different. But when I'm taking a class, that intensity level is different. I can easily figure out a mistake in a class. Rather, if I'm sitting this book, if you give me this book, see, is there any mistake, is there, I can't find out easily, because that intensity won't be there. Fine, clear all of you? But you see how cleverly this represented entire matter, no? Same wordings we try to maintain. At 2 or 3 places only the wordings might be little different in the chart notes, but 99% we try to maintain it. That's it. So with this, essay 530 is completely done. Clear, confident? Totally we hardly covered 4.5 hours including this chat discussion. So next we'll start 520 standard. 520 will be little easy only. Compared to 530, it's quite easy. Yeah. So let's begin the new standard, that is essay 520, analytical procedures. For the first time we have seen this word analytical procedure as a part of risk assessment procedures. First time. See, like broadly, you know, there are two words, I mean 2 times analytical procedure will come as a part of audit procedure. Like what are broad audit procedure? Risk assessment procedure, further audit procedure, correct? Risk assessment procedure includes inquiry, inspection, observation, analytical procedure. In risk assessment chapter also I told this point, I kept pending. Even in audit evidence topic also, what are audit procedures? Risk assessment, further audit procedure. Risk assessment, 4th point, analytical. There also I kept pending without explaining. Further audit procedures are again 2 types. What are they? Compliance procedure, substantive procedure. Substantive procedures are again 2 types. Test of details, substantive analytical procedure. So the word analytical procedure comes at 2 places. One as a part of risk assessment, 2 as a part of substantive procedure. Technically, every procedure in audit is used throughout the audit. Suppose we are doing audit for 100 days. Throughout the 100 days, we'll be using this procedure. Analytical means what? Logical. Logically thinking whether the financial statements are true and fair. Logically we are thinking. Generally, whether financials are true and fair, how do we verify? We verify with facts. We verify with bills, vouchers, documents, agreements, like that. In analytical, that is not the major thing. We verify logically. Logically, is it correct or not? Suppose a company sales have been increased. Compared to last year, this year sales, there is an increase. And in the entire industry, there is a decline. Market is declining, but for the company, there is an increase in sales. What factors made the company to increase the sales? Because I'm worried. This might be window dressing. The company might be doing window dressing. All the documents can be fabricated. What exactly made the company, increase of sales? I asked the management also, like what happened, why there's an increase in sales for the company specifically. We are not any special extraordinary company. We are just like any other company also. And remaining industry, there is a 50% decline, but for you 50% increase is there. You are just a small player also. Why this happened? Then the company director told me, sir, we have launched a new product. You can see the reviews, you can see YouTube reviews and all. There are so many reviewers who are reviewing about our product voluntarily. So many customers are using. See, Amazon, Open, Flipkart, see the reviews for our products. Everybody is satisfying. A killer product we have launched in the last year. And that is the reason why our sales have been increased. Like that is showing entire market data. Now I will convince. Because see, documents and all will be there. For sales, documents will be there, transit challan will be there, e-way bill, everything will be there. But my logic, my logically I'm not able to accept the number. Figures and all is showing, bank statement is showing number, everything is showing. Sometimes it can be fabricated. This is how happen, window dressing happen, in many companies. Frauds and all happens. In many corporate scandals, if you see, numbers and all will be there. Real numbers only. But the sales are from related parties. I will sell to my sister company. Next day I will again take it back. Suppose today I want to make a sale. I don't have any customer, but I want to get a bank loan. You know what can I do? I'll open another company. I will sell them goods on credit for profit. Okay, exactly in the February month, near the March. Okay, I will send huge amount, 100 crore worth of sale with 50% margin. I will sell to another company, my sister company, subsidiary company, or another company, my related party. And I will show in my books of accounts, I purchased for 50 crore, sold for 100 crore, 50 crore profit is there. Then I will go and apply for a bank loan, showing 50 crore profit is there. Getting it? Now, like where did you receive? Sir, it's a credit sale. We have 1 year, we have 6 months time period. That's a new company, they will give us. So banker, you see, I can easily get a loan like this. I'm just telling you a basic level of corporate fraud, how it can happen. Able to understand? So sale document is there, agreement is there, party is there, sale really happened, goods delivered, but actually this entire transaction is fake transaction. In reality, that's another dummy company. That is also mine only. Analytical procedure focus on substance of the transaction. In analytical procedure, we look at the logic, we look at the substance. Who is that party? Why you gave 6 months credit period? Normally in the industry, 60 days is a credit period. Why you gave? Who is the party? Who is the owner inside that? We try to evaluate fraud risk factor. That is what 550 standards. In 550, I told this. 550 related parties, the primary objective of the standard is to figure out fraud risk. Are there any fraud risk factors regarding the transactions between related parties? Is the transaction rational, necessity or not? Is it a genuine or not? Okay, that company we sold goods. What the company is doing with that goods? To whom they are selling it? Are they manufacturing it? I will see that. If they are not selling anything, they are just keeping the goods idle with them, then that gives suspiciousness that this entirely a fabricated transaction. That's why in income tax arm's length price transfer pricing provisions are there. So unusual, even in 550 we have this point, if at all any transaction happened between related parties is at unusual terms. What is the business rationale? We need to see that. What is the logic behind this? Why you sold at a huge margin? When industry normal, the same product they can buy at 60 crore. Why they paid you 100 crore? Why they agreed for you 100 crore? Unusually high amount. You see the rationale. If at all it indicates fraud risk, fraud. If at all it indicates fraud, we will ask the management to rectify. If they do not rectify, that's a limitation on audit and that's an unacceptable risk. I will withdraw from the engagement. Again 705. Are you getting it? That's it. You see, we don't have 240 standard, we have it in CA final. In 240, if auditor encounter any exceptional circumstance which brings into his continue, he's unable to continue, like he's thinking big frauds are going on, he felt that, like if at all he felt like that, he will request the management to rectify everything. If not, he can resign from the company, he can withdraw from the engagement. So that's the 240 standard says, which we have in CA final. 240 standard is there in CA final, almost 10 pages standard, very big standard. Able to understand? So analytical procedures, we look at the substance of the transaction, necessity behind the transaction, logicality of the transaction we see, rather than documents and documents. If at all controls are effective, analytically also everything seems logical, we can skip test of details also. We don't even have to perform test of details, only analytical we can. Now, when do we perform this analytical procedure? Beginning of the audit will perform, during the audit will perform, at the end of the audit will perform. Beginning of the audit, no, we generally take trial balance. Okay, opening trial balance, closing trial balance we will take. Why there is an increase, why there is a decrease, we try to evaluate like this, and we just walk through. There is something called walkthrough test. Okay, transaction level walkthrough test will be there, normal business understanding walkthrough test will be there. So first I will understand the business. I will talk to people, I'll talk to the CEO, I'll talk to the CFO, I'll talk to the accounts manager, what they're doing, who are the people, marketing, how it is happening, sales, how it is happening, what products company is dealing with. I will try to understand the company, I will try to understand the entity and its environment. That is also part of analytical. Understanding the entity and its environment is nothing but risk assessment. How do I understand? I will inquire them, I'll ask questions, I will inspect records, I will observe what is happening, I will analytically think how it is happening. Able to understand. Clear? So now what is this analytical procedure? What is substantive analytical procedure? What is normal analytical procedure? What is substantive? Normal analytical procedure means right now whatever I told. Substantive means when I'm verifying actual transactions, rent amount, I will verify how much is as per rental agreements, 12 months, how much it should be, how much actually recorded. That is substantive. Taking the real transaction and applying my analytical logic. That is substantive analytical procedure. Normal analytical procedure means I may not take the real transaction. I will logically see who are the I mean, for example, I went to a factory. There are multiple laborers were there with different uniforms. What is the uniform? Like which color signifies what? Getting it? So asking these questions and how much is wages for them? Logical questions, logically, where factual data I will ignore, I will see the reality. That is also analytical. If I take books of accounts and apply logics, then that is substantive analytical procedure. Simple. As simple as. Clear, all of you? So what is analytical procedure? What is analytical procedure? You see, definition of analytical procedure. Evaluations of financial information through analysis of relationships among financial and non-financial data. What is analytical procedure? Evaluation of financial information. You are evaluating financial data. Ultimately, financial statements is what you are evaluating. How are you evaluating? Through analyzing relationships among financial and non-financial data. During the current year, power bills have been exceeded so high. Last year, power consumption is 1 crore. This year, power consumption is 5 crore. Why there is a 5 times increase in power consumption? Production should also increase. Without production increase, why power consumption increased? Are you getting it? Like I opened and saw, for example, for power and fuel and power. Last year it was 1 crore, but current year it was 5 crore. But production, if you see, last year it was 2 ton, this year it was 3 ton only. Production. There is only 30% increase in production. Or I can say, compared to 50% increase, compared to last year 50% increase. If that is the case, power bill also should increase. Why 50% or worst case 100%? But why there is a 400% increase? Production increased by 50%, but power bill increased by 400%. How come? I'm expecting some fraud happened in this. Then the director came and told me, sir, we received a huge order in the last year for 50% increase, sale also 50% increase, you see. But what happened is we need to honor the order at any cost. But unfortunate thing, last full year power cuts were there because of floods and all. Because of power cuts, we have used fuel, diesel generators. And you know very well, diesel cost 10 times more than the electricity. And if you see, the head is power and fuel. Fuel cost is huge. And he showed entire workings, entire bills and all he showed. And I will see really in that locality, power correction, power is disconnected or not. What is the working times when the power was disconnected? How long it is disconnected? During that time, fuels, machineries were running or not, I will see. I will try to get evidence for that. If I got evidence for that, then I will convince. Suppose if the management could not show reason for me, why power bill increased? They showed fuel expenses increased. Why fuel bill increased? Power failure is not there as per the, I will contact the power company, that local distributor, and they give me external confirmation that, sir, there are no power cuts at all in this locality. Hardly normal. Saturdays or Fridays, one day we will do power cut as per industries. Standard only it followed. There is no power cut at all. What your company is telling you is something wrong. Then I will find that fuel fraud is there. In fuel, they did fraud. See, how can I discover easily analytically? Everyone like what you see, audit is not about bills ticking, date ticking, amount checking, not that. Logically you should check like this, able to understand. Sales were increased by 50%, but why power bill was increased by 400%? You need to analyze relationship. Analysis of relationships among financial data or non-financial data, or between the financial and non-financial data. Another example, last year 31st March, the closing total number of employees 500. This year the closing total number of employees 2000. Why there is an increase in employees? Show me increase in revenue. See whether production increased or not, revenue increased or not. Then why employees increased? Revenue is same, production is same, but why employees increased? Dummy employees, dummy payroll cost, fraud, payroll fraud, anything. They need to give solid reason, proofs. If they give me explanation why there is an increase, sir, yes, agreed. Last year 500 were there, this year 1500 were there, 2000 were there, or else 2000 employees were there. But you see, all the 1500 employees were recruited in March month only. They are all in training right now. Next year we are getting one very big government project. Okay, we already placed a tender, 90% chances are there. So now itself we recruited and started training, and they showed the training records, everything. They showed all the employees. Randomly I met employees and I also spoke. They're all fresh employees, like they were in training. 1500 employees were recruited in March. So since they were recruited in March, how do you think sales will increase? They were recruited on March mid, and moreover they're on training. So you can't compare training employees with sales. Yes or no? So the number of employees working are only 500 even today. 2000 were there, but working people are only 500. 1500 were in training. So that is the reason why sales are same. The company offered me all the explanations. Then fine, I will convince. Everywhere I should do this kind of analysis. Wherever some difference is there, I must do this kind of analysis. Are you clear? For example, another example I'll tell you. Repairs and maintenance. Repairs and suppose I'm just evaluating P&L. I'm evaluating operating expenses. other expenses. In that, so many subheads are there. Audit fees is there, okay, postage is there, printing and stationery is there, telephone expenses, internet expenses, okay, repairs is there. Last year repairs was 5 crore, this year repair was 25 crore. Repair expenditure suddenly increased. Why repair expenditure suddenly increased? I asked the accountant. Sir, I also don't know, sir. Yeah, what you are asking is absolutely right, but I also don't know why there's an increase. Fine, let me do one thing. Give me repairs and maintenance ledger account. He gave me April month, May month, June month, July up to March. Okay, give me the breakup. April month 20 lakhs, May month 45 lakhs, June month 34 lakhs. So like this, and in February month 19 crore is there. Tell me which month I need to focus on. Obviously, you know which is unusual here. February is unusual. Wow, what happened in February? What, 19 crore worth of transaction in 1 month? That to repairs. Which repair will cost 19 crore? Okay. Then I saw in February, on 12th February, there is a bill 18.9 lakh worth of repair is debited. 18.9 crore. 18.9 crore worth of amount is debited on 12th February. For what purpose they debited in repairs and maintenance? I asked him. It's a five items, spare parts they purchased for some heavy machineries. Okay, purchase, right? It's a purchase. Then I applied this PPE concept, purchase, asset recognition concept. It's actually to be recognized as fixed asset. It was to be added in fixed asset, but they accidentally added in repairs. Misinterpretation, accounting misinterpretation. But I will see here. Why accountant did like this? Sir, our CFO told me to debit here. Why CFO told here? I will try to evaluate his reason, logic, why he did this. Logic I will try to evaluate. So I'll inquire him. I'll talk to him. Why, sir? Like, you know, this is a capital expenditure. Then why did you tell to debit in repairs? Okay, if at all he give me a valid reason. Okay, misinterpretation. Sir, I also interpreted, sir, a PPE. This does not make recognition criteria. This has a similar life, all that. This doesn't improve any capacity to the asset, all that. Something he told. If at all it is logical, fine. Okay, he misinterpreted, fine. There is no fraud. Intentionally he didn't do, unintentionally he did. I will classify and then I will reclassify. I will tell them to rectify all that. But you see, only when I am logically looking at this number, I could figure out this fraud. Not fraud, this error. Material misstatement I figured out with analytical. In reality, most of the mistakes we can discover is through analytical procedures only. Most important audit procedure is analytical. Most important, risk assessment and analytical. If you are strong in this, you can be unmatchable in audit. You do audits fantastic. Vouching, verification and transactions, reconciliation, anybody can do that. Recalculations, anybody can do that. Analytical brain is where the entire audit lies in. That is when the companies and all will give you a massive respect if you're doing this kind of analytical procedure. Able to understand? All of you? Yeah, that's it. So analytical procedure means what? Evaluation of financial information through analysis of plausible. Plausible means acceptable relationship. You can't verify, like for example, no, tea expenses with sales you can't. Water consumption to sales you can't. Acceptable relation. There must be some relationship should exist. Number of employees to sales, yes, relationship is there. Capital employed to sales, relationship is there. Yes or no? That's it. Investigate. Now, so first you will evaluate. Okay, you will evaluate. Then what you will do? You will identify some fluctuation, right? You will identify some inconsistency, right? Yes or no? Like inconsistency, what? There is a difference between expected value and the actual value. What you expect? Are last year 5 crore repairs means this year also 5 crore or 6 crore or 7 crore. Not 25 crore. Inconsistency. Huge variation. What you need to do? Investigate. The objective of analytical procedure is identify differences, identify fluctuations, identify, expected unusual variation and investigate why that variation is there. That's it. That gives you evidence. So evaluation of financial data through analysis of financial and non-financial data, investigating fluctuations or investigating relationships which are different significantly from expected values, or relationships which are inconsistent with other relevant information. Number of employees not matching with sales, inconsistency. So investigate. Then you will understand whether there is any error or fraud or anything. See? Yes or no? So the objective of the standard is auditor has to obtain relevant and reliable audit evidence using substantive analytical procedure, perform analytical procedures near the end of the audit to confirm whether financial statements are consistent with auditor's understanding of the entity. Whatever I understood about the company, okay, the company is growing, not growing, company performing well, whatever I would have some understanding about the company. But when I see the sales number, it is so big. They are saying it's a very small company, but when I saw the sales, it's so big. So what I understood about the company, what is there in the financial statements are not matching. Able to understand. So at the beginning, during, at the end of the audit, I need to perform analytical procedure to understand whether my understanding of the company is correct or not. Able to all of you. Next. For example, CA Amar verifies XYZ Limited rent payments of 50,000 per month, consistent with rental agreement. Other companies in the industry pay 10,000 only for the similar location. Why here they are paying 50,000? You're getting it. So questioning everywhere, why? Rental agreement is there 50, amount paid 50, but in the industry it is 10K only. In analytical procedures, no, I will compare our company data with industry data. I will compare current year data with last year data. I will compare current year data with current year budgets. In so many comparisons. So that's why you see analytical procedures means comparison of entity financial information with what? Comparison with prior period, comparison with anticipated results, budgets, comparison with industry information. Analytical procedures includes comparison of entities financial information. Our entity financial data will compare with what? With the last year, with anticipated results, with industry. Analytical procedures also includes consideration of relationships. Analytical procedure not only comparisons, I also look at the relationships. Purchases increased, why sales not increased? Are you getting it? If purchases increase, if sales does not increase, closing stock should increase. Logically correct or not? Consideration of relationships, predictable pattern, relationship between financial and non-financial data. Number of employees increased, but why sales not increased? Number of employees increased, but payroll cost is same. Employee cost remains same. Employee there is no increase, but amount of salary cost is increased. Why? Consideration of relationships. So analytical procedures includes two types of studies: comparison of entity data with industry, prior period, budgets, considering relationships between the financial and non-financial data, identifying patterns, unpredictable patterns. Are you clear? Easy. Now look at, so comparing with okay, fine, again. So applying analytical here, no, you found right 50,000 rent they're paying. I mean the company is paying 50,000 rent, whereas in the industry 10,000. Now here I will apply analytical. What analytical? By comparing XYZ payment with other companies, Amar identifying inconsistency which might indicate a misstatement. Without such a comparison, these issues remain undetected. Suppose if I simply see 50,000 paid, rental agreement 50, you paid 50, bank statement showed 50, okay, what? It's a fraud. Yes or no? He paid 50. Actually the property was taken on rent from director's relative. Okay, so the company funds are paid to director's relative. Director is enjoying. Getting the point? 10,000 rupees property, monthly rent 50,000 we are paying, 40,000 we are paying, like this. If this fraud is detected, one fraud is in rent, immediately I will get doubt that what are all various transactions happened with these people, where and all how much of fraud is included. This is public company, listed company, public money is being used, misuse it like this. You getting? I told you in my previous sessions also, the private companies corporate corruption is high. Nothing, nowhere comparable. Government corruption is nothing. The private sector, listed companies corruption is so big, you can't even imagine. Nobody will detect also that, but nobody knows that. Next up, wages, another example. The statutory auditor verifies total wages paid during the year across multiple factories. Analyze the relationship, like total wages per worker, number of workers, how much, and total wage cost arrived, predict the actual wage how much. If there is a difference, why there is a difference, investigate. So analytical procedures includes comparison of entity. You know, they'll give you this question for 4 marks directly. They'll give you this definition, write about meaning of analytical procedure and objective along with examples. A 4 marks question might come. Analytical procedure includes comparison of entity financial information. Give few examples, they'll ask you. This answer you need to write. Comparison with prior period. Compare financial information with prior period. For example, the auditor verifies traveling expense of the company comparing to end of lakh in the current year with last year. He identified 25% increase. Auditor will compare this over several periods and see whether that increase is genuine or not. Then compare with anticipated. Compare actual result with budgets. And why there is a huge variation? Inquire. Compare with industry. Compare entity ratios with the industry averages. Our debt, our stock turnover ratio how much? Industry stock turnover ratio how much? Suppose if industry stock turnover ratio is 5, our stock turnover ratio is 8. Like how fast we are rotating the capital. Is it really? You need to check. Next. Predictable pattern. Okay, compare relationship with financial elements expected to follow predictable pattern. Generally, salaries every year 10% will increase. Generally, some 10 to 5% everywhere it increases. Salary will every year increases. No increments will be given. Yes or no? So, for example, last year's salary, this year's salary constant, exact same amount. How come? So I need to ask. Definitely, some increments would have been there, right? Why you have not given increments? So, or nobody recruited newly, or nobody left the organization. So I need to see. So every year some trend will be there. I need to predict the pattern. So the prediction of pattern. Next, compare relationship between financial data and non-financial data. How much cost, employee cost recorded, how many number of employees were there? Last year, how much cost is there, how many employees were there? In US, there is one reporting requirement. In reporting itself, in US, revenue per employee, revenue generated by the company per employee, total turnover 1 crore. For example, 1 crore. Number of employees in the company 100. Watchman, whatever, doesn't matter, 100. Average turnover per employee is 1 lakh per annum. Like that they measure revenue per employee. You also check last year revenue per employee how much, this year how much is revenue per employee. Check it. Clear. Next. So summary, simple analytical procedure methods. We can do a simple comparison to a complex analysis using statistical techniques. Analytical processes can be used on consolidated financials, or it can be used on standalone components, individual items. So typically what we do in analytical, we compare client data with industry data. We compare current year data, client data with prior period. We compare current year data with client expected results. We also compare current year data with auditor expected results. See, client will have expectation. Our expectation will be different. And comparing client data with expected results using non-financial data. Typically, analytical process includes these type of comparisons. This itself can be asked as a 4 marks question. Typically, what are all the comparisons that are involved in analytical procedure? 4 marks. Any 4 points you need to write. Confident? What is the purpose of analytical procedure? Tell me. Very simple. We want to compare. We want to see the relationship and want to see whether those amounts are reasonable or unusual. If they are unusual, investigate. That's the purpose of analytical. Simply the purpose of analytical procedure is to identify unusual amounts, identify fluctuations. Correct or not? So analytical procedures, they use comparisons. Analytical procedures, we use relationship study to assess whether an account balance or transactions or other data appearing reasonable or not. Am I right? These helps detect unusual transactions, manipulations, mistakes. Therefore, analytical procedure benefits the auditor in the following ways. How it will benefit? It will identify unusual items. It will identify unusual amount. It will identify unusual ratio. It will identify unusual trends that indicates audit risk, that indicates fraud risks. They help you in identifying risk of material misstatement, where and all material misstatements are possible. Exactly correct or not? In exam they'll give you purpose of analytical. They'll ask you write about meaning of the analytical and the purpose of the analytical. So first part meaning you should write. Second part 4 marks question they might ask. Clear? Easy? See now how easily you're able to understand the terminology. That examples are most important. Getting it? Next up. Now, what are the examples of analytical procedure? Sometimes they'll give you like this. Write about analytical, give examples of analytical procedure. You see, I gave so many examples. In this, any 4 examples. Any 4 examples. So, like we can do, we can compare relationship between balance sheet and P&L. How? For example, company sales increased a lot. Debtors also monetary amount might increase. If at all company is predominantly driven by credit sales. Yes or no? So in P&L, if there is an increase in sales, automatically in balance sheet also debtors value might increase because credit sales are major portion. Next, reconcile physical balances of assets with financial records. Obtain statements from bankers, accounts receivable, payable, nothing but third party confirmations, and reconciling with balance in books of accounts. This is also analytical only. external confirmation we do, right? That is one type of analytical technically. What are we doing? Are company books of accounts was 10 lakhs receivable. Third party, what is there in his books of accounts? Logical evaluation. Yes or no? That's it. Confirming outstanding income and expenditure, outstanding income, prepaid income, all that by reconciling with various statements. Comparing gross profit ratio with last year to identify whether there is any inventory pilferage, why there is an unusual profit increase, all that. Investigating excess inventory shortages in raw materials and stores to detect misappropriation. We do physical verification of inventory. 501. Existence and condition of inventory, physical. If there is a shortage, we find out why there is a shortage. Analytical. Wherever you question why, that's analytical. That's why I told analytical procedure exists throughout the audit. Getting it? In fact, you are doing analytical procedure right now. You're listening. You're trying to process. That's nothing but analytical. Next, reconciling actual collected amount, interest and dividend with income. I mean fixed deposit certificates, dividend shares, dividend declared documents, all that. That's it. Any 4 or 5? Any 4 or 5 examples sufficient? Okay, this is quite easy only, not an issue. Timing. When we should perform this? When analytical procedure should be performed? You can perform at the time of planning. You can perform at the time of testing. You can also perform at completion phase. Any phase you can perform, but predominantly when do we perform? During the planning phase. Analytical procedures are majorly performed at the planning. Of course, we also once again do at the end also. At the end, okay, I understood analytically everything. Just once, let me once again see, is there anything that I missed out? For that reason, we do at the conclusion. So, analytical procedures will be performed by the auditor during the planning phase especially. Why? It will help the auditor to understand client business. It will help the auditor identify areas where potential risk is there, where the auditor can highlight various developments which he previously not aware. Without performing analytical, I can't understand that company purchases some spares. Yes or no? Without performing analytical procedure, I can't understand that there is a power cut in the factory in the last 1 year. Without performing analytical, I cannot understand that there is a huge increase in employees and they are in training, which will help me for next year audit. Yes or no? So without performing analytical, my understanding about the company is different. Able to understand? Understanding of the entity means what? What is the company? Who are the director? Where the company? Which product? Not only that, understanding how the company works. Or how exactly? What are the strategies? Confident. So the information obtained in analytical procedure will help you determine nature, timing, extent of other audit procedure. Through analytical, based on analytical, you can plan your audit much more better. It will help you to decide nature, timing, extent of other procedures that you have to perform. Other procedures means other substantive procedures, nothing but other test of details or test of controls. What else you have to perform? Clear? Next up, analytical procedures in planning phase. They may use financial data or they may use even non-financial data. Any information they can use. So analytical, timing of analytical, this itself is asked many times, 4 marks question. Timing. So analytical procedure is performed in planning, testing and completion, all the phases. Analytical procedure, why auditor will do? This will help the auditor to understand the client business. This will help the auditor to identify potential risk, highlighting various developments previously which auditor is not aware of. Yes or no? And what is the benefit? It will help the auditor to better plan the audit, to better plan strategy and planning development. It will help a lot. And what data you will use in analytical, you will use financial data or non-financial data, whatever it is. Clear? An MCQ can come. Analytical procedures in planning phase uses only financial data. Wrong. Analytical procedure in the planning stage uses both financial and non-financial. Technically, analytical procedure use both. Always they use both. Able to understand. Next. So that's the actual main introduction. You know what? Half standard is over. Half standard is over. Still we are left with half only. Now what is substantive analytical? When do we perform substantive analytical? What are the techniques available? Can we do only analytical procedure as a sole substantive audit procedure? Can we do substantive procedures 2 types? Test of details, analytical. Can we do analytical itself as a sole procedure? That is the question. This first we will finish. Analytical procedures as a sole substantive audit, can we do that? When designing and performing substantive analytical, as per SA 330, SA 330 standard risk assessment topic I already told. The auditor shall determine suitability of specific substantive analytical for given assertions, considering assessed risk of MMS results of test of details performed. See, determine suitability of analytical procedure. You know what? For example, I can apply analytical procedure to calculate depreciation. I can apply analytical procedure to calculate provision for bad and doubtful debts. Can I use analytical procedure to check ownership of the asset? How do you analytically check ownership? Rights and obligation assertion, analytical procedure is not suitable. What is suitable? Inspection procedure is suitable. Test of details we need to perform. Analytical, where you can perform, where you can perform analytical, depreciation is calculated on building. There I can apply my brain. 40 years useful life you have taken. Who gave 40 years? Engineer certificate is there, building fitness certificate, 40 years. Who gave this 40 years? There I can apply my brain. I cannot apply my brain in ownership. Yes or no? So, which assertion you are testing? Existence, for example, is mission there or not? How can I logically think mission there or not? I have to physically go there and see. Inspection. For certain assertions, analytical procedures may not be suitable. Analytical procedures are useful for evaluating completeness, for evaluating valuation. Able to understand? Classification. Suppose a building is purchased as an investment property and they classified it under fixed asset. I will go and see for what purpose the building is used. If the building is used for company, factory purposes or office purposes, okay, fixed asset. Otherwise, it's an investment property. Classification. So for verifying classification, valuation, completeness, for all these assertions, I can use analytical procedure. But for existence, rights and obligation, I cannot use analytical procedure. Able to understand? So analytical procedure, suitability, the suitability of analytical procedure for given assertion. For a given assertion, check suitability, analytical suitable or not. For suppose if the given assertion is rights and obligation testing, analytical not suitable. Given assertion is existence testing, analytical may not be suitable. So considering risk of MMS, result of test of details if performed. If at all you already performed test of details already, check that result also. Accordingly decide whether to perform analytical or not. Are you clear? Next, another one, reliability of data. Reliability of data. Evaluate reliability of data used to develop expectations. You know, expectations means what? For example, number of employees 1000 were there. Into on an average last year wage cost is 50,000 rupees. So this year it is 5 crore is a labor cost. I expected, I developed this expectation. Reliability, how far this is reliable? This expected value is reliable if the input data is reliable. If the average wage rate calculated last year remains same in the current year and same number of employees remains in the current year, then expected value will also be reliable. So analytical procedures power, analytical procedures reliability depends upon the data used. Tell me, in analytical procedure we use financial data, non-financial data. The data is the fundamental. If the data is reliable, our analytical procedure result will be reliable, so that I can investigate further. Are you getting it? Next, so now evaluate the reliability of data. Data means what? Source. Where is the source? The data is from which source? Is the data useful for comparison? Is the data relevant? How the controls are there on that data? If the data is prepared in a controlled environment, then the data is reliable. Now for this we have a dedicated concept. Again, reliability of data. You know, again, see, actually, here analytical, can we use it as a sole substantive procedure? Suitability, where it is suitable. Reliability of data, development of expectation, acceptable difference. For all of this, J topic is there. Suitability, okay. Reliability, another topic is there. Expectations, another topic is there. Acceptable difference, subtopics were there. So M, L, K and then J, nothing but this first point is explained in J, second point is explained in K in detail, third point is explained in M, this is explained in N. Correct? Check out once. J, K, L, M, sorry, L, M I guess so. J, K, L, M, sorry, L, M. L, M. So these points were again in-depthly given there. In fact, in 330 standard they give you. In 330 standard they will explain. Whether can we use only analytical procedure? If test of controls, the result is effective, we can only go with analytical. We can ignore test of details. In 330 standard, it will be told. Already 330 standard is completed in risk assessment topic. Only internal control is pending in risk assessment topic. That internal control you need to watch after analytical. That's the reason I kept pending there. Clear? Next. Okay, fine. This again I'll come back. This is nothing but repetition of the below items. Okay, that's it. Confident until now? Okay, 5 minutes gap will take and then continue, because this is overloaded topic. Until now clear? Able to understand and comprehend everything? Then continuation. You know, analytical procedure, can we do it as a sole substantive audit procedure? This is the question. For this, the answer is given already in 330. If at all, in internal controls, if you got a satisfactory answer, and analytically, if everything seems logical, you don't have to perform test of details. Standard gave that flexibility. But the best option is, but the best alternative is always perform analytical and a slight of test of details. Sampling, test checking, slight of test of details. So that is what 330 standard answers. Now, so whether analytical procedures can be performed or not, first criteria, it depends upon suitability of the given assertion. Is analytical procedure suitable for the assertion? For example, if the assertion I want to test is existence, analytical may not be suitable. If the assertion I want to test is rights and obligation, analytical may not be suitable. But if I want to test completeness of data, analytical will be helpful. If I want to see valuation, analytical will be helpful. For example, completeness of data. Suppose during the year we placed purchase orders 1200 orders, but in the purchase register only 950 were recorded. Why 250 were not recorded? We ordered extra 250, 1200 we ordered, why 950? Completeness, whether all the transactions are completely recorded, I can apply analytical. Valuation, for example, depreciation, provision for bad debts calculation. Best example, provision for bad debts calculation, I'll tell you. Last year, our debtors turnover ratio or debtors holding period was 40 days. I applied sales multiplied by 40 by 300. I found out debtors value. Last year it was matching. This year also I asked company, they said 40 days only credit period, sir. 40 by 360, okay, 40 by 360. Total turnover of the company multiplied by 40 by 360, I told. Only credit sales related turnover. Total credit sales related turnover multiplied by 40 by 360, I put. Some value it came, debtors value. But when I see the real debtors, it is so high. The real debtors is so high. See, for example, the company turnover is 6 crore multiplied by credit sales turnover. 40 days divided by 360 days. How much it will be? 90. Correct? So 90 only, no? 9 only, no? Correct? 9 4s are, yeah. So 6 crore divided by 9 crore is equal to, let us assume some 1.5 crore, not 1.5, sorry, 75 lakh. 6 crore by 9, just check out, some approx 66 lakh something. Okay, okay, fine, whatever. 66 lakh something, yeah, okay, fine. So 67 lakh is coming approximately, analytically. But when I see the balance sheet, closing balance, no, 1.5 crore is there in debtors. Which means low collections would have been there. Low collections means actually 40 days worth of debtors only should be outstanding, which means 70 lakhs maximum worth of debtors should be outstanding. But why 1.5 crore is there? Which means so many credit sales were there, but collection is poor. This indicates bad and doubtful debts. That indicates provision has to be created more. Able to understand? This is also analytical. Now here you see valuation. I applied analytical procedure on valuation, debtors valuation I applied. Only by applying this analytical, I understood that provision valuation was not proper. Able to? So analytical procedure, whether it is effective or not, it depends upon suitability of the given assertion. Whether analytical procedure is suitable for the assertion that you are testing. Clear? Suppose no, I want to test understatement, analytical will help. I want to test overstatement, analytical may not help. Some depend upon the assertion you are testing, simple. So substantive analytical procedures are generally suitable when for large volume of transactions which are predictable over time, correct? If some so can I predict court cases? Last year 10 cases or this year 15 cases should be there on the company. Can I say that? Those transactions, those items which can be predictable, which can be predicted over time, only their analytical procedures can happen. Are you clear? Yes. Assumptions. The application of analytical procedure is always based on expectation that relationship among data exists. Correct? We apply analytical procedures confidently because relationship is there. Yes or no? In the absence of contrary situation, okay, under some contrary situation is there, generally relationships will establish or not. If number of employees increase, sales will increase. If number of employees increase, power consumption increase. If number of employees increase, overall company size increases. That's a predictable, acceptable relationship. Correct? Unless contrary, like employees were in training, sir. In the last month only they recruited. So increase is there, but they are all in training. That is a contrary situation, exceptional case. Are you clear? So analytical procedure is based on expectation that some relationship among data will exist. Now, the suitability of a specific analytical procedure depends upon its effectiveness in detecting misstatements. Ultimately, which analytical procedure is suitable? See, in analytical we have multiple methods. For example, what are the methods of analytical procedure? Trend analysis, ratio analysis, reasonableness test. For example, just now I told debtors example, trade receivables example, outstanding, ratio analysis applied. For debtors valuation, ratio analysis I will do. For provision and bad debts evaluation, ratio analysis I will do. Repairs and maintenance, reasonableness test I will do. Repairs and maintenance, reasonableness test I will do. Last year 5 crore, this year 25 crore repair. Why? It's not reasonable. It seems unreasonable. Trend analysis, from last 5 years, every year sales are increasing between 10 to 20%. This year 100% increase in sales. Why? Trend, unusual trend, unusual ratios, unreasonable amounts. Are you getting it? So these are various types of analysis in analytical procedure. Techniques, we call them as techniques of substantive analytical procedure. Techniques of substantive analytical procedure. Now, I'll come back to this later. Okay, that's an easy topic. This is only tougher. So, whether an analytical procedure is suitable, there are various methods, right? Various ways you can analyze, right? Which one is more suitable? That one which will identify mistakes. When a particular method is suitable, if it is identifying mistakes, that is suitable method. Suppose we are using a particular method, but that is not identifying mistakes. What is the point? Able to understand? Next. So, the suitability of a specific analytical procedure depends upon its effectiveness in identifying material misstatements. Correct? Sometimes, an unsophisticated predictive models may be effective. Sometimes a simple analytical, unsophisticated means simple. Sophisticated means complicated. So no, complex, statistical. Unsophisticated means simple. Sometimes a simple tool, simple analysis will give you. Like rent monthly 50,000, 12 months is 6 lakhs. That's a simple analysis. Yes or no? If number of employees and pay rates, monthly employee cost is fixed, then auditor can simply estimate total payroll cost by simply multiplying it. Trade ratios can support reasonableness of recorded amount. Debtors turnover ratio, inventory ratio, all that. Yes or no? So sometimes we can use a simple predictive models, and different analytical procedures will give different levels of assurance. Correct? Different analytical procedures provides the auditor varying levels of assurance. Sometimes trend analysis will give me a little assurance, little confidence only, but reasonableness test will give me more. Getting it? So for example, predicting total rental income using rent amount and number of apartments and vacancy rate. You just predict the total rent amount and see the actual rent amount recorded. If both are matching, you don't have to. You can eliminate other further verification like test of details if everything is logically matching. Then calculating and comparing gross margin percentage, okay, provides less persuasive evidence but may corroborate other procedures. Okay, fine, that's basic example, leave it. So different analytical procedures will give different levels of assurance. Ultimately, it is auditor's professional judgment to use which method is suitable, which analytical procedure is suitable in the given assertion. The auditor has to decide. So which fact, there are so many factors that influence suitability. It depends upon nature of the assertion, existence, completeness, what assertion you are testing. Auditor's assessment of risk of MMS, it depends upon risk appetite, risk assessment. If auditor is expecting more risk, analytical procedures alone may not be sufficient. He will also do test of details. Example, if controls over sales are weak, the auditor may prioritize test of details over analytical procedures. If controls are weak, we will go directly actual testing. Logical testing we won't do. If controls are strong, logical testing we do. If everything is appearing logical, we don't go further investigation. Understood? Now, the best method is what? Substantive analytical procedures are more suitable when test of details are also performed on the same assertion. Yes or no? Substantive analytical procedures are best when you are using along with test of details. So ultimately conclusion what they are saying, can I use substantive analytical procedure as a sole audit procedure? You can use when controls are strong, when it is more suitable, when the analytical procedure predicts misstatements effectively, but ultimately it is better to use along with test of details. So they concluded. Understood, all of you? So example, valuation of accounts receivable, the auditor may use aging analysis. They may do test of details on subsequent cash receipts. For example, you're doing valuation of accounts receivable, nothing but debtors, trade receivables balance. One you can do is analysis of customer accounts, like when the customer purchased, when they paid back, all that, sales, debtors, turnover ratio, all that. Another one, test of details, what you can use, when this customer paid the money to the company later on, subsequent receipts, to know whether it is collected or not. If at all subsequent sale is there, huge amount, credit period already over, we are not able to collect, is this a dummy sale? Question it. Is this a real sale or dummy sale? Get external confirmation. Investigate the substance. Okay, some slow collectability is there. Collectability is some issue is there. Provision for bad and doubtful debts you can create. Understood, all of you? So here the question started. Analytical procedure, can we use it as a sole substantive audit procedure? As a substantive procedure, can we use only analytical? It depends upon suitability. It depends upon, predictability of mistakes. Correct? Effectiveness in detecting mistakes. Yes or no? And we need to take an assumption that relationships exist among data generally, and they are generally suited for large volume of transactions. Sometimes a simple model may be effective in discovering mistakes. Levels, different analytical processes, they will give different levels of assurance. So whether analytically suitable or not depends upon nature of assertions and auditor's risk assessment. Ultimately, substantive analytical procedures are more suitable when test of details are also performed on the same assertion. Yeah. Now, there is one more factor. Whether analytical procedure is best or not, there is one more factor. Depends upon reliability of the data used, because analytical procedure is based upon the data. Ultimately, if suppose simple, if number of employees information is accurate, wage rate per employee, average wage rate, average salary per employee, that value is also accurate. If both are accurate, then analytical procedure is accurate. The result, the total employee cost will be accurate. Then that I can compare with the actually recorded amount to know whether there is a variation or not. Suppose if the computation which I did know, logical computation which I did, if that is not at all accurate, my interpretation of audit, my interpretation of results will be very, very poor. Correct? Yes or no? The reliability. So reliability of data is most important thing in analytical. Now the data reliability is affected by various things. Data reliability is depending upon source, nature, circumstances under which it is obtained, from where you got the data nature. Is it original data, original document, or duplicate document? Okay, like factors affecting reliability. This question was asked many times, 4 marks. This question was asked many times. I think even in the recent May also it was asked. The recent May also, not this, maybe something from 520 also came, I guess so. So source. Data is generally more reliable when obtained from independent sources outside the entity. Data, like just a minute, I'll show you once the question bank. Yeah. So in analytical procedure, at some places, no, these are all TVK questions where I mentioned refer, go notes, write concept, ignore. Simply, one line questions, if you find in any question bank, 1 line, 2 line, 3 line, ignore it. Don't even read them. In reality, questions will not be like that. Okay. So even in institute book also they didn't give answer. I'll see whether May 25 any question is there. Questions from MT. previous year paper. Jan 25 question. You see, this is previous year exam, Jan 25 question. No, that is actually not 520. There's some other stand. We generally divide them with standard wise. Yeah, 520. All MTP, RTP, previous year questions, everything will be at one place. 520. So many were there. You see, in every attempt it will be tested generally. Okay, in MTP it is there. Here, analytical related, okay, they are asking methods. Fine, we'll come back and then see later, okay? After we thought of chart revision and then we do question bank, no, that time we'll see. So, factors for determining reliability of data. Source. Generally, data is more reliable when it is obtained from independent sources outside the entity. Comparability. Analytical procedures, one of the most important technique is comparisons. One of the important procedures is comparisons. We should know whether the data is useful for comparison or not. Yes or no? For example, no, lame example, okay? For example, a different company, our competitor company is there. In that competitor company, recently the director got married. How can that information be useful for comparison? Yes or no? But if at all the company has purchased some new machines, we also purchase a new machine simultaneously. That can be a comparable data. And here they give one example. For example, we are manufacturing a specialized, for example, perfumes. Our company is a perfume manufacturer, specialized perfume, where customer decide the composition. And there is another company which is a well-established standard perfumes only they manufacture. Standard means like it's standard for everybody. Okay, for example, skin is there, right? And skin perfume is there. That's standard. Whoever buys the same formula they get. Can we compare our sales versus their sales? We can't. Able to understand? So comparability. Data must be comparable to the entity's context. For instance, broad industry data may need adjustments for entity producing specialized products. So if I'm comparing with industry, I need to customize to according to my requirement. The data's nature and relevance. For example, budgets are more reliable when established as expected results rather than just aspirational goal. Suppose if a company is just setting budgets casually, they are not taking seriously, then that data may not be useful. That data may not be relevant for us to do analytical. Controls. Control should be ensure the data is complete, accurate and valid. For example, no, I want to know whether purchases are completely recorded. Actual purchase transaction 950 were there, purchase orders 1200 were there. First of all, purchase orders related control. Who is maintaining these orders? Whether the orders are just casually placed or is there a system for the orders? Suppose if purchase order control system is robust, only when a company places the order copy will be coming out. The numbering will be given. 1250 numbers were there. These are all genuine purchase orders. There is a control behind it. Just like that purchase order cannot come out. There is a lot of authorization, everything is there, which means there is a control over purchase order, which means the number of purchase order is reliable. Then I can compare it for actual purchase register and see how many purchase transactions happened, how many orders were there, what is the difference that getting it. So controls over the data preparation, that is also important factor to ensure reliability of the data. Are there only 1200 purchase orders or is there any other else also? Sir, it is impossible, sir. We can generate purchase order only through computer. Only computer also will generate it only when these 5 people approve it. If without approval of these 4 or 5 people, order cannot come, which means control is strong, which means the number of purchase order is reliable. When that number is reliable, I can use it for analytical procedure. Controls over, data, source data. For example, controls on preparation, review, maintenance of budgets. Here, budget example they took. Clear? All of you? Now, you need to test these controls sometimes. Testing controls over preparation of information. What you need to test the operating effectiveness. The auditor may test the operating effectiveness of controls over preparation of information used in substantive analytical procedure. Effective controls provide greater confidence and reliability of data. So whether the controls are working effectively, I can test it. For example, sir, I will do one thing. How to place the order? Show me. I will place the order. Okay, it is not generating 1251 number. For me, it is not generating. Okay, I'll ask finance, you please approve it. Will it generate or not? I'll see. It didn't generate. I'll ask production, you also approve it. It's a dummy, just dummy purpose, approve it. Still it is not generating. Only when the CFO approves it, it is generating. Are you getting it? I'll test the control. Testing means what? I'll redo that. I'll just reperform it. Clear? Next. So you need to test operating effectiveness of various controls. You should also test non-financial information related controls. Controls over non-financial, they can also be tested along with other controls. Controls over recording of sales may be tested with controls over processing of sales invoice to ensure operating effectiveness. For example, they are typing quantity in purchase order. When they are typing quantity, here again quantity related restrictions are also there. Generally, we place purchase order, right? It depends upon the request received from stores. How many units they requested us, how much order we are placing. Generally, the software is designed in such a way where we cannot order more than the request we received from the stores. Suppose if stores department requested us 1500 units, in the order we can only maximum type 1500. We can type lesser number, no problem, but we can only type maximum 1500. So controls over non-financial data like number of units ordered, that also you need to check. If the controls of purchase order is correct, then take the data as a base and compare it with the number of transactions recorded and identify why there is a missing items. You can investigate further. So how to test? Testing controls over preparation of information. This itself can be asked as a 3 marks question. Testing controls over preparation of information. What do you mean by testing? You are testing to know operating effectiveness. Yes or no? And you are testing non-financial information controls. What's the benefit? If you test the control and if the control is effective, it will increase the confidence and reliability of data. So analytical procedures, are they suitable? It also depends upon reliability of data. Whether a data is reliable, it depends upon the source, it depends upon comparability, it depends upon controls over preparation, it also depends upon relevance of the data. For purchase transaction, relevant data is orders, purchase order data, and whether purchase order data controls are accurate or not, that is also important. Next, evaluation of whether expectation is sufficiently precise to identify MMS. See, in analytical, what we do? We take some financial and non-financial data. We try to develop some expected value. Correct? If this expected value, if at all we develop the expected value with high accuracy, then when we compare that value with the real actual recorded value, if there is a difference, we can find a mistake. Suppose we developed an expectation which is not accurate, and you compare that inaccurate expectation with the real data, management will immediately tell, sir, what you did is wrong. That's not the data. How did you compare like that? Management will immediately reply yes or no. So with what level of accuracy you are developing expectations, you are developing the patterns, you are predicting the values, with what level of accuracy you are predicting, that accuracy is also most important. See that one, predictability of expected result. The accuracy of expected result depends upon how predictable the results are. For example, gross profit margins are more consistent and predictable across periods compared to discretionary expenses like research and advertising. We can generally predict GB ratio, we can predict purchases, we can predict sales growth, but we can't predict advertisement expenditure, we can't predict R&D expenditure. So where analytical procedures can be used more, analytical procedures can be used at purchases, at sales, at employee cost, at power expenditure. There and all you can use, because these are something which can be predicted accurately over a time. But research and development expenditure, advertisement expenditure, and penalties and fines, we can't predict. Punishments which a company, so we can't predict. Degree of disaggregation. The next one is degree of disaggregation. Tell me, see, suppose repairs and maintenance example, if you remember, 5 crore is there last year, current year 25 crore is there. I found that it is unreasonable, but I cannot figure out why this happened. I have to disaggregate it. Disaggregate it means what? Month wise I will split. Then I will split day wise. Disaggregate means in-depth data, more detailed breakup. Are you getting it? Now, if I know data if I can disaggregate the information at a deeper level, I can easily find out frauds and analytical procedures can be more simple, very simple. Sales last year 10 crore, this year 15 crore. I can't interpret anything from this. I know something is unusual, but I can't interpret. I can't easily question anybody. Yes or no? I want more breakup. Which month sales are very high? Why in that month very high sales are there? I want disaggregated information so that I can develop my expected value more accurate. Next, analytical procedures are more effective when applied to disaggregated information such as data for individual sections and components rather than to the entire entity. Example, we can apply analytical procedure to specific operation or components of a diversified entity rather than entity as a whole. Suppose the entity is dealing with multiple products. Revenue from operation is total of all the sales is there. You can't compare total of all sales with total of purchases. You need to compare segment wise information. So you want segment wise data for a better understanding of company business. Clear? And of course, availability of reliable information. You are expected, see, analytical procedure is all about, by looking at various information, I will predict something. And that prediction I will match it with actual recorded value. If there is a difference, I will investigate. Now, the prediction must be accurate, right? Whether the prediction is accurate or not, it depends upon disaggregation level. Because my prediction, see, if I know breakup in the data, I can predict better. Okay, in this company, quarter 1 sales will be high, quarter 4 sales will be high. So last year also quarter 1 high, quarter 4 high. This year also quarter 1, quarter 4 high, which means season is quarter 1, quarter 4. So I can predict better. Total sales information I can't. Total sales alone I can't interpret. Next. So availability of reliable. The availability of financial, non-financial data impacts the design of substantive analytical. Okay. Consider availability and reliability of financial data like budgets, so non-financial data like units produced, whatever. So evaluation of whether expectation is sufficiently precise. Only then you can identify MMS. If your expectation is precisely calculated, then compare it with actual amount so that you will identify MMS. So evaluation of whether expectation is precise. How do you know whether the expected value developed by the auditor is precise? It depends upon accuracy of expected results, depends upon how predictable results are. I mean, the accuracy of expected results. The accuracy of expected. See, I developed an expectation. This is more useful only when the result is predictable. If the results are not at all predictable, for example, I want to verify research and development expenditure. We can't predict there. There I can't use analytical. Next. Degree of disaggregation of information available. How in-depth breakup is available for the data? Suppose, no, simple example I'll tell you. Best example I'll tell you too. Once again, little vague, I know. For example, administration expenses, like that one head is there in P&L. Okay, this year it was 2.5 crore last year, and current year it was some 5.5 crore. Administration and other expenses. Why there is an increase, I can't understand. Show me breakup. For 2.5 crore, auditor remuneration, printing and stationery, postage, telephone expenses, traveling expenses, like that various breakup is given. Entirely breakup is given. Now I can analyze better. Yes or no? If I analyze these two alone, aggregated information, if I analyze, where should I verify? How do I know? If disaggregated information is there, I know where exactly to go and verify. Able to understand? So degree of disaggregation available. So whether expectation is sufficiently precise or not, it depends upon whether the results are predictable or not. Whether the area where I want to apply analytical, can that area be predictable? That I need to check. Whether the information is available with breakup, disaggregation, and of course reliability of the information, financial or non-financial, the data reliability. All these three influence me with what precision I can develop expectation. The more the precision, the higher the chances that you can discover material misstatement. The lower the precision, lower the accuracy of your analytical procedure, lower the chance of detecting mistake. Next. Now once again I will cumulatively explain here. First, can analytical procedure be used as a sole substantive? It is answered in 330. And it also depends upon whether can we apply analytical procedure. It depends upon suitability. Whether analytical procedure is suitable for the given assertion. Suitability means what we understood. Second, analytical procedure, whether can we use or not, it depends upon reliability of data. It also depends upon development of reliable expectation with accuracy. Develop an expectation for the recorded amount. Actually already there is a recorded amount in the books of accounts. Develop expectation for the recorded amount and ensure it is precise to identify misstatement which could result a material misstatement in financial state. Now sometimes we develop an expectation and recorded amount, there will be difference. Every difference will be, do we investigate, or the difference is very huge, will investigate? Definitely between my expected value and the actual recorded value, pakka some difference will be there. Yes or no? But if the difference is unusual only, we will investigate. Suppose if the difference is within the acceptable range, within the tolerable range, we don't investigate further. Now between expected value and actual recorded value, difference up to certain level we can accept, right, without any further investigation. Correct? We can suppose I expected rental expenditure in this year 6.5 lakh, 6.8 lakh is there. Should I investigate why 30,000 difference? I don't have to. Suppose I expected 6.5 lakh, rental expenditure 15 lakh is there in books, I will investigate. Which means whether you will investigate further or not depends upon materiality of the difference. Now the difference up to a certain level of difference, you will accept it without any further investigation. You will accept the books of accounts as true and fair without any further investigation up to a certain difference. That certain difference is there, right? That is called acceptable difference. That is called as what? Acceptable difference. What is acceptable difference? See, simple. When you are doing analytical procedure, you should tell your team members, hey, first identify logically how much expenditure. Compare it with real expenditure. If the difference is up to this, you ignore. If the difference is beyond that, you please consider. Now up to which difference I can accept, that you should decide. So auditor has to determine what is acceptable difference. Acceptable difference means what? Between your prediction and the actual, some difference is there which is acceptable. No problem, it's okay, generate, it's common. Okay, so between recorded amount and expected values, acceptable means what? We will accept it without any further investigation. Suppose if the difference is unacceptable, then I will do test of details. Then I will do test of details. Then I will open ledger account. I will open why this amount is there. So I will do more investigation. I will try to dig. You clear? Now, what do you mean by acceptable difference? In depth is given below. Amount of difference that is acceptable. Amount of difference that is acceptable. 4 marks question straight away. Amount of difference that is acceptable. What is amount of difference that is acceptable? This is the amount of difference between recorded amount and expected value that can be accepted without any further investigation. How do I know? How do I decide acceptable difference? Depends upon materiality and level of assurance you want. I want high level of assurance, then the difference will be lesser amount. If so and so transaction is highly material, then the difference will be lesser. Also consider the risk that a misstatement could result in material. Like, of course, it also depends upon risk. So what factors influence the amount that is acceptable? What factors will influence the auditor's decision regarding acceptable difference? It is influenced by materiality, desired level of assurance, and risk of MMS in that matter. SA 330, it says it requires auditors to obtain more persuasive evidence as risk increases. If at all you have a higher risk, more evidence you need to obtain. Higher risk means lower acceptable. That's what I told just now. Yes or no? If at all there is a high risk, the difference I will accept is very less without investigation to achieve the desired level of assurance. Relation. An assessed risk increases the acceptable difference without further investigation. An assessed risk increases the acceptable difference without further investigation, decreases to ensure the an assessed risk increases. An increase in assessed risk Actually the wording is an increase in assessed risk. That should be correct word. Or an assessed risk increase. You can use like this. An assessed risk increase, comma, the acceptable difference without further information decreases. Actually correct. It's inverse relationship. If the risk is high, I cannot accept more difference. I will accept only less difference. That's the inverse relation. In analytical procedure, that is called as acceptable difference. Acceptable difference is very simple. I predicted some amount, I compared it with the actual amount, there is a difference. When can I accept this difference without further investigation or not? It depends upon risk. If at all there is a high risk, don't accept the difference, investigate first. So if the difference between the expected value and actual recorded value is more than acceptable difference, then what auditor has to do? Further investigation. Suppose if the difference between expected value and the actual recorded value is within acceptable difference, then what will I do? I will proceed further without any investigation. So finally investigate the results. When do you investigate? If analytical procedures performed, they identified what they identified: fluctuations or relationships which are inconsistent, or the relationships are different from expected value by significant amount. The difference is significant. Significant means what? More than acceptable difference. Correct? Then the auditor shall investigate the differences by, first I will ask management, dear management, please explain why there is a fluctuation, why there is an inconsistency, and they will give you some response, right? Evaluate it. So first ask management to explain why there is a fluctuation, then ask them to evaluate it. Evaluate whatever they told you, and you perform additional work. If at all management is failing to provide proper explanation, you also investigate further, you perform additional to identify MMS. This itself can be asked as a 4 marks. Investigating results of analytical procedure, this itself can be given as a 4 marks question. Now in analytical procedure, if the auditor has identified fluctuation or relationships which are inconsistent, or information which is different from expected value by significant amount, the auditor shall investigate them by first inquire management why. Look at their response. If at all you are not getting proper answer from the management, you will investigate further to identify whether a material misstatement is there. When do we investigate? Only when the difference between expected value and the recorded value is more than acceptable difference. What is acceptable difference? The difference between expected value and recorded value which can be accepted without any further investigation. Where acceptable difference is influenced by materiality, risk involved, yes or no, risk assessment, all that. That's it. Desired level of assurance. Clear what is acceptable difference? Now again go back. Now you see this once again. Can analytical procedures be performed as a sole substantive procedure? Okay. When designing and performing analytical procedures, either alone, you see here, now this wordings I'm touching, either alone or along with test of details. When you are designing and performing analytical procedures either alone or along with test of details, auditor has to first determine suitability of analytical procedure for given assertion. Look at the reliability of data used to develop expectation. See the accuracy with which the expectation can be developed, and determine the acceptable difference. After doing all this, then only you perform analytical procedure. Yeah. So now suitability depends upon, first of all, analytical procedures are suitable only when the data is large volume, and moreover there must be predictable data. Advertisement we can't apply, research and development we can't apply, yes or no? So analytical procedures, no, we apply based on assumption that some relationship exists between the financial data and non-financial data. And analytical procedure is suitable or not depends upon how effective it is in discovering mistakes. And sometimes a simple predictive model will be enough to discover a misstatement. And different analytical procedure will give different levels of assurance. Factors, nature of assertion, auditor's assessment of risk. Generally analytical procedure more suitable when test of details are also performed on the same assertion. Next, factors for determining reliability of data. What factors? Source, independent source is more reliable. Comparability, specialized entity data, we can't use it for comparison with normal industry data. Relevance of the data, controls over preparation. And remember, whenever controls over preparation of the data, you should check controls over the data, right? How do you check whether the controls are effective? Test them. Test the controls over the data. What do you test? Test their operating effectiveness. Test non-financial information controls. Then whether analytical procedure is usable, can we use it or not? It also depends upon the accuracy with which expected value can be developed. Expected value can be developed only when the data is predictable and disaggregated data is available, and of course information must be available and reliable. Then finally, you have to decide how much amount you can accept without further investigation, so that if the difference you identified later on after applying analytical procedure is within this acceptable, you go without any further investigation. Means you don't do test of details. If it is more than this, then you do test of details. First you will ask management why there is a fluctuation. Look at their response. If something is not correct, if you are not convincing with them, you perform additional work to detect material misstatement. Clear? Finally, at the end of the audit, you need to perform overall conclusions. At the end of the audit, the auditor has to perform overall conclusions. The conclusions from analytical procedures are intended to corroborate conclusions formed during the audit of individual components or financials. Like overall conclusions means what, at the end of the audit, balance sheet is ready. Before I send, what I will do, last year fixed asset, current year fixed asset. Why there is a variation? I must have an answer. Last year closing stock, this year closing stock, variation. Why there is a variation? I must have an answer already. So I will once again check whether for every variation, for every relationship inconsistency, did I have an answer for it or not? I will check. That is called overall conclusion. Clear? These procedures help the auditor to draw reasonable conclusion to support their opinion. Individually, whenever I'm verifying purchases, sales, everywhere I thought unqualified everywhere. Finally, now before signing, I will do overall conclusions, whether my overall conclusions are same with individual conclusions when I perform that work. Sometimes, when I'm doing purchases audit, I may not find any difference. But at the end of the audit, when I see purchases, I will get a new doubt. Getting it? So once again, you do analytical process at the end of the audit to form overall conclusions on which opinion to give. Next, analytical procedures may reveal. Why you need to perform analytical at the end also? Because it might reveal previously unrecognized risk. At the end of the audit, sometimes it will show you undiscovered. Some new analysis you might get. Previously, this risk, this kind of difference you didn't find. Now you found a new difference. So in such case, what auditor has to do once again? Revise the assessment of risk and modify again further audit procedures and do work accordingly. Are you clear? They may ask you straight away this as a 4 marks question. Overall conclude. Now you understand why I kept 530, 520 at last. This you cannot understand at the beginning, audit evidence level. Moreover, this is completely different. It's not tough, but the terminology is so different from other chapters, from other standards. At least you can easily remember, you can understand. But this is something very difficult because it will be confusing. Same matter will be repeated like that, you will find. Similar. You clear? So much of depth understanding is required to understand 530, 520 standard. Internal control topic also. In risk assessment, internal control, one section is their internal control. Actually, if you see introduction to risk assessment, I told this chapter is divided into multiple parts. Risk assessment, internal control, IFC, SA 330, automated environment, SA 320, materiality, 265, 450. 7 segments we divide. Risk assessment, internal control chapter is divided into 7 segments. I told at the beginning of the chapter itself. Only one segment, internal control, we didn't discuss, and that's a major segment in the chapter. That you need to understand after analytical procedure is over. That's it. So that is the reason I gave in a particular order the entire chapters. When I'm discussing in the class, that is the reason I went in that order. Clear all of you? In between, one small topic is there, which is an easiest topic. Easiest topic within analytical procedures. Now look at 2 minutes. Huh? Yeah, 2 minutes. So let's continue. Now let's look at what is substantive analytical procedure. You remember I already told at the introduction itself, analytical procedure word comes 2 places. One is part of risk assessment, another one substantive. So if analytical procedures are performed as a part of substantive procedures after testing internal controls, then that procedure is called as substantive analytical procedure. Substantive procedures, actually, yeah, okay, fine, we'll continue. Substantive procedures At assertion level includes what are all? Test of details and substantive analytical procedures. So for a given assertion, we have to perform substantive. We have two types of substantive procedures for particular assertion checking: test of details and analytical. Remember, test of details is suitable for every assertion, but substantive analytical procedure may be suitable only for few assertion like completeness, occurrence, valuation. For these kind of assertions only analytical is suitable. When to use substantive analytical? When to use substantive analytical is based on auditor's judgment to reduce audit risk to an acceptably low level. To perform substantive analytical, auditor will inquire about reliability of information, availability and reliability, because in order to perform analytical you need information, data. Inquire about results of analytical procedure. So auditor has to inquire what? First data you need to inquire, then perform analytical, then inquire the management about the result. Sometimes management also prepare analytical data. In reality, I will tell you, management will have so much of analytical data because for them it's their business. In order to survive, they need to do lot of data analytics. One point, analytical procedure is nothing but data analytics. To be precise, analytical procedure is nothing but data analytics. Data analytics means analytical procedure, analyzing different data. So in corporates, the assessment is very high. In Zomato recently, I saw one Instagram post where it was something in podcast, I guess so. Zomato, if you open the app, if a customer directly opened the app, directly went to so and so product, so and so particular dish, and then booked, for him delivery charge will be high. If a customer opened and scrolled sometimes 2 times and closed the app, again opened and scrolled sometimes, again closed and opened the app, for him delivery charge will be low. Yeah, delivery charge will be low. If a customer who sees delivery charge and close the app, he will add in the cart and he'll go to the payment. At the time delivery charge is visible, he'll again delete it and then come out of the app. Next time if you open, delivery charge will be very, very minimal. So customer psychology, accordingly the delivery charge is calculated by Zomato. That's what I heard from one of the podcasts I saw. I don't know whether it's really correct or not, but I know one which I have experienced it. Telegram premium membership from iPhone. If I take premium membership in Telegram, the cost is high. From Android phone, if I go for premium membership, the cost is low. Don't think iPhone means premium user, that's why they're charging it. No. In Apple, if at all you're subscribing to any product from Apple account, the Apple account retains 30% share. 70% will be transferred to the app owner. Whereas in Android, Google, they don't have that share. That's the reason in Android app, the charge is low, premium subscription charge. Whereas in iPhone, the premium subscription charge. That's why I have both the accounts. I always renew it from Google phone. I mean this Android. In Android, I renew it. Okay. So if I have to renew, premium, no, for example, I'll say, I think now it is neutralized. The price is new because even in Google also it is accepted. Just so for example, I'll take one person, take one of staff, see whether I can gift somebody gift premium will be there now. So I think the price is not visible here. But the price, because I already subscribed, no, it is not visible. For my other account, it is visible. Other account, it will be visible. Things, Telegram premium. It is showing 199 per month like that here monthly. In iPhone, it might show some other amount because of the policies. Because app store policies might be different. The Play Store policies might be different. It depends upon App Store will have some charge. In Play Store, there is no such charge. But now recently Play Store also introduced. So that's why the prices will be different. Even when you're booking Ola, all these rides from iPhone, they may have to pay extra. From Android, if you book, the price will be little lower. So like that, you see different levels of analytics. Even in YouTube also, we can see so many analytics. I think I once showed in my previous sessions, I guess, I don't know. YouTube, I showed. Data analytics, that topic only, risk assessment, internal control, data analytics topic, automated environment. There I showed YouTube analytics, how in YouTube different views, different analysis will come, all that. Fine, clear until now? So substantive analytical procedure. So the auditor may use analytical data prepared by management provided they are satisfied with the data reliability. Management used reliable data and they performed analytical, that data also we can. What are the factors for substantive analytical procedures? Whether should I use substantive analytical? First of all, can I use analytical procedure? What factors will influence? Actually in ICA book, no, substantive audit procedure word is used. It's actually analytical. Technically, the word is supposed to be in ICMET itself. It is mistake. Even they also have not released any corrigendum. But substantive analytical below factors they spoke. Immediately, it's about substantive analytical. It's not substantive audit. Substantive procedures means substantive audit procedure or substantive both are one and same. Substantive procedure we obviously have to use. There is no factors for that. Analytical procedure, it's an optional thing whether to use or not. For that, factors will be there. Yes or no? First one, availability of data. Reliable and relevant data facilitates effective analytical. So the answer shows the answer is for analytical procedures. So therefore, heading should also be analytical. That's why I mentioned this. And some students, they compare with ISA books, are heading your book wrong. That's why I mentioned here itself. ISM uses the word audit. Understood? Next, the degree of disaggregation affects its usefulness in detecting misstatements. Yes or no? Analytical procedure can be used on depends upon disaggregated data availability. How in-depth the data is available. Account type. Analytical procedures are more effective for income statement account than balance sheet account. Generally that data which is predictable over time, for them analytical is more useful. Yes or no? Balance sheet items are sometimes subject to management judgments, because in balance sheet items valuation will be there. Debtors value is there, but PBD will be there. Net debtors value will be different again. But sales, they can't change. Real transaction value, how much? That is only will be there in the P&L. Yes or no? But balance sheet, it may be influenced by management judgments. Yes or no? So P&L items are more useful. P&L items are more suitable for analytical procedure than balance sheet. Next, source of the data. Routine transactions are predictable and suitable for analytical. Significant class of transactions which are subject to management judgment are less predictable. Next, analytical procedures are effective for predictable relationships. Nature of assertion. Analytical procedures are suitable for completeness and valuation, but less effective for rights and obligation, less effective for existence. Correct? Inherent. When addressing inherent risk, the auditor consider nature of MMS, test of details for high risky areas. Significant risk require evidence beyond analytical. Wherever auditor feels significant risk is there, analytical alone is not sufficient. You must go with the test of details. You must gather evidence beyond analytical procedure. So whether analytical procedure will be used or not, it depends upon nature of risk. It depends upon high risk. For high risk, actually nature of risk, these are actually against the sub points. These you can call it as sub points technically. Nature of risk, for example, for high risk areas, test of details is must. For significant risk, analytical procedure may not be sufficient. That's it. Easy? All of you? So many times this was asked, 4 marks. What are the factors for substantive analytical procedure? Can I use substantive analytical? What factors will influence me? It is influenced by first availability of data, disaggregation of data, suitability of the account, source data, whether that is predictable, nature of assertion, inherent risk. In this any 4 you can write. Simply what are all you can write? 1, 2 and account type and nature of assertion easily. Yes or no? That's it. These 4, 1, 2, 3, 6, these 4 points are very easy to read and remember also. Easy to read and easy to understand and easy to remember. The factors for substantive analytical procedure, these 4 points you write. That's it. What are the techniques available for analytical trend analysis? What is trend analysis? It's a commonly used techniques where you compare current data with prior periods over multiple periods. Correct? Purpose. By comparing current data with last year data, we can evaluate whether current balance is moving in line with established trends or not. Correct? Last 5 years sales are increasing 10%. This year why 50% growth? I can question it. Compare salary expenses over several years. For example, if there is unusual increase, that indicates some fraudulent payment to dummy employee. Second technique of analytical procedure, ratio analysis. Ratio analysis means where we analyze relationship between assets and liability accounts as well as revenue and expense account. Ratio analysis means relationship. Turnover divided by debtors. Yes or no? Debtors divided by turnover. Fixed asset turnover ratio. Next. Ratios can be compared over time within a group or with other industry standards. And you see today even schedule 3 went way beyond. If at all there is any key ratios you need to present. Disclosure, And if there is a difference between more than, if there is a difference of more than 20% or 25%, some difference is there, some number is there, 20 or more than 25. Suppose last year data turnover ratio 3, this year 4, 3 to 4, 33% variation. Yes or no? You need to explain in the notes to accounts why there is a variation like that. Today company has to explain ratio analysis. Wherever there is a change in wherever there is a significant change in ratios, they need to explain. Next, for example, trade receivable ratio, freight expense as a percentage of sales, all that. Then there is another test called reasonableness test. In reasonableness test, no, we mainly focus on non-financial data. In reasonableness test, it mainly relies on non-financial data to check reasonableness of a particular account balance rather than using prior period events. In trend analysis, all that prior period data, industry data, all that we check. Whereas in reasonableness test, number of employees increased. Why there is no increase in turnover? Relationships between non-financial and financial. For example, interest expenditure, how much against interest bearing obligation. Raw material consumption, how much to quantity. Sales or discounts to sales volume, like that. Structural modeling, another technique. It is a statistical model like linear regression, like that, built from prior period financial and non-financial to predict current year data. We use prior period financial and non-financial data and then predict the current year data. So structural modeling, not that popular. We use reasonableness test, ratio analysis, trend analysis, which are popular. Straight question can come. What are techniques of substantive analytical procedure? Any two techniques they will ask you generally. Okay, 2 marks each you will get. 4 marks question you will. Confident? Huh? But whenever you get techniques, write all the 3 techniques mainly. Okay, all the 4 if possible you write. Whatever is right, whatever is relevant, examiner will pick that answer and put marks for. Clear? I spoke about valuation also in my previous sessions. If you write extra points, no problem. If you write so many points, but what is there in suggested answer is not there here. 0 only you will get. Recently in CA final audit, one of the student got 0 marks. In the not recent paper, that before attempt paper, 0 he got. 0 out of 70 descriptive paper. He wrote 28 pages answer. That's it. So only if relevant point is there, they will get the answer. They will get the marks. With this, 520 is completely done. Then immediately we'll do a chart revision also. Okay. Yes. Let's begin SA 520 analytical procedure chart revision. And as a prerequisite for every topic, I will give an intro like this. You have to first watch my previous marathons on 520, get some understanding on 520, or if at all you already watched my UO batch, then you can listen this particular chart revision, because in chart revision it's all about a quick revision. It quickly revise. So you don't expect too much of explanation from the chart revision. Okay? It is like brushing up of all the concepts briefly. Next, analytical procedure, meaning and objective. So what is the meaning of analytical procedure? You evaluate. Just a minute. So you evaluate financial information by analyzing relationships between financial and non-financial data. That's the meaning, correct? Then what is the objective? To obviously get the evidence and use substantive analytical to form overall conclusions at the end of the audit. Okay, whether financial statements are consistent with auditor's understanding of the entity, to know that analytical procedures are performed. Now, in analytical, we analyze the data between financial and non-financial, right? And what do we find? We find fluctuations or inconsistent. That what we need to do, investigate. When do we do investigation? When the difference is more than acceptable difference, correct? What is acceptable difference? We already discussed. Once again, we'll get it later. Next, examples, it's okay, not required. Then, analytical procedure will have 2 types of analysis. One, comparisons. Another type of analysis is consideration of relationships. Comparisons, 3 types. Comparison with prior period, comparison with anticipated results like budgets and forecast, comparison with industry information, and trying to find out inconsistencies, differences, fluctuations, variations. Next, relationships. Predictable pattern, like compare relationship within financial elements which are expected to follow predictable pattern. Sales we can predict, purchases we can predict. If both can be predicted, closing stock can be predicted. Yes or no? Some expenses, repairs and maintenance we can predict. Some expenses like advertisement research we can't predict. Okay, then financial and non-financial. In analytical, we use relationship between financial and non-financial. For example, there is an increase in number of employees, there must be increase in sales. If that is not happened, we will investigate the fluctuation. So analytical procedures use comparisons. Analytical procedures use relationships between financial and non-financial data. Next, purpose. We use comparisons. Ultimately, we compare or we study relationships, yes or no, to check whether account balance is looking reasonable or not. Yes or no? So, because of this comparisons and relationship study, we will identify unusual transaction, unusual mistakes, unusual manipulations, all that. Correct? Suppose no unusual transactions you found. What is unusual transaction? Events, amounts, ratios, trends, whatever that will signal some risk of MS. So analytical procedure benefits the auditor to identify unusual items. Analytical procedures will benefit the auditor to identify risky areas. So in this way, analytical procedure will be useful to the auditor. Next, various examples, any 4 or 5 examples you have to study. I already told in the GOAT notes that particular EVO session also. Next, timing. When should we perform? We can perform it in planning, testing, and completion. But most importantly, analytical is performed in planning stage. During the planning phase, it will help the auditor to identify potential mistakes. Benefits. This, it will help you to decide nature, timing, extent of further audit procedure. Means analytical procedure will help you to plan your audit. Yes or no? And analytical procedure at the time of planning uses both financial data and non-financial. Correct? Now, what is substantive analytical procedure? First of all, substantive procedures includes 2. Substantive analytical procedure, test of details. Both are part of substantive procedures. Substantive analytical is applied when the auditor judges it can reduce the risk to acceptable level. If auditor feels that analytical procedure will reduce the auditor, he will use it. Inquiries. So what auditor will do, before substantive analytical procedure is performed, first auditor will inquire about the data regarding its reliability and availability. Once data is given, auditor will perform analytical, then he will get some result. That result he will investigate, yes or no. And sometimes auditor will also use entities analytical procedure data also. And so that is used. Management data he will use when it is reliable, yes or no. Next. What are the factors for substantive analytical? Remember in ICA book this was used as audit, substantive audit, but actually it's wrong. It's actually substantive analytical. Can I use substantive analytical procedure or not? It is determined by various factors. First to know data availability. First, data should be available. 2, data must be disaggregated. 3, account type. Substantive analytical is useful for more of income statement items, not for balance sheet items. And not only that, source of the data. Yes or no? And a significant class of transactions where judgment is involved, it is less suitable. Those transactions which are routine, which are predictable, good for substantive analytical procedure. Correct? Predictability. Effective, analytical procedure is effective where relationships are predictable. Analytical procedures are best when for checking completion, valuation, less for rights and obligation, existence and all. And if risk is high, use test of details. SAP alone may not be. See how best it is, like the GOAT notes, whatever is there, we are able to figure out all the keywords, yes or no. But if you want to understand better the chart notes, you need to read from GOAT notes. Next, what are the techniques of substantive? Trend analysis, ratio analysis, reasonableness test, structural modeling. Trend analysis, we compare current balances with prior period to spot unusual changes, unusual trends. Check if figures align with known trends, whether figures are matching with known trend or not. Ratio analysis, we study relationship between various account balances, transactions. Correct? We detect mismatches by comparing ratios across time. Reasonableness test, no, predominantly use non-financial data to know whether an account balance is logical or not, reasonable or not. Helpful for accrual of income statement, whatever. Anywhere you can use this reasonableness test. Next, structural modeling, it's a statistical tool where they predict account balances. Easy or not? Any three you need to write in exam. Can we use analytical procedure as a sole substantive procedure? It depends upon suitability, it depends upon reliability of the data, it depends upon accuracy of the expectation, it also depends upon acceptable difference. Now, auditor must assess if analytical procedure is appropriate for a particular session based on risk of MS and test of details. Yes or no? Data must be evaluated for source, comparability, relevance, controls. Auditor then develop the expected value. See, for this, we have J, K, L, M. These are the points which are talking in depth about these 4. So this is typically a consolidation of all the 4 subsequent points. The subsequent points we'll see. Suitability of a particular analytical procedure for a given assertion. SAP works best for large volumes of data, correct? Which can be predicted over time. You know, yes, analytical procedure we can apply on an assumption that relationships will exist among various data, and depends on effectiveness of detecting whether a particular analytical procedure is suitable or not. It depends upon how effective it is in detecting material misstatement. SAP, substantive analytical procedure, is it suitable? It depends upon its ability to find mistakes. Predictive, even a simple model can be effective sometimes. And remember, analytical procedure offer different levels of assurance, and factors influencing suitability, nature of assertion, risk of MMS. Sometimes SAP analytical procedure is stronger when you are using with test of details for certain assertions, for same assertions. Test of details, SAP plus TOD for same assertion, that will give you a stronger result, that will give you more clarity. Able to recollect? Next, factors determining reliability of data. What are the factors? Source is more reliable when it is coming from independent source. Comparability, data must fit the entity's context. Like for example, broad data, industry data may not be suitable for entities specialized in specialized products. You know, reliability, more reliable if expected outcome, like for example, if budgets are for expected outcomes, budgets are really seriously taken, then only that is more relevant data. Controls over preparation of data, you need to test how well controls work, and you should also test controls over non-financial data. So if controls are effectively working, then the result of analytical procedure will be more effective. Then auditor has to evaluate whether expectation is sufficiently precise. Precision improves when expected results are predictable. Like expected results must be predictable, only then the accuracy will be there. SAP analytical is more effective when applied to disaggregated data rather than consolidated data. And design of SAP depends upon availability and reliability of financial data and non-financial data. Amount of difference that is acceptable. What do you mean by amount of difference that is acceptable? The difference between recorded amount and expected value. Expected value means what? Result of analytical procedure. What is the result of analytical procedure? Some expected value you develop. That value you compare with recorded amount. If there is a difference up to a certain level, we can accept it without any further investigation, and that level is called as acceptable difference. Yes or no? It is influenced, the acceptable difference is influenced by materiality, level of assurance, risk of MMS. Higher the risk, more evidence is required. Therefore, lower acceptable difference without investigation. If high risk is there, difference, acceptable difference size will decrease. As risk increases, acceptable difference decreases. That's what actually I told you to slightly rectify. That one letter, if you rectify, that will be enough. Goat notes I told you, yes or no? That's it. To ensure sufficient, appropriate audit evidence. Then, finally, if at all auditor identify fluctuation, relationships differ significantly from expected value, where the fluctuation is more than acceptable difference, what auditor first will investigate management. We will ask them why there is a fluctuation. We will see the response given by them. If response given by them is not adequate, auditor will perform additional procedure to detect any material misstatement. Finally, overall conclusion at the end of the audit. What? To corroborate conclusions from audit of financial components. See, I will do overall conclusions to support. Okay, whatever my understanding of the entity and its environment, analytical procedure will corroborate me, support me, helps in forming reasonable conclusions, may uncover. Because of this overall conclusion at the end of the audit, you may discover unrecognized risk earlier. Yes or no? If at all you identify any unusual items at the end of the audit, you have to revise the risk assessment, you have to modify further audit procedure, again you redo it. That's it. Analytical procedure is done. It took hardly 11 minutes. The original chapter we discussed 1 or 40 minutes close. Original, the standard. Understood? Able to recollect, no? But you read once again, go notes, thoroughly revise, then come back and see. It will be like a quick recap. This is only for mind mapping. Like in exam, if a particular question comes, at least if you get a diagram, that keywords, you can write at least something without missing any points. Just for retention purpose only, this one. That's it. Minimum retention purpose. Clear?